एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं। कमोडिटी मार्केट विल ओपन इन फ्यू मिनट्स। न्यूज़ की बात करें, कोई मेजर न्यूज़ फिलहाल के लिए अभी नहीं है। लेट्स सी, कोई न्यूज़ वगैरह आती है जिसका इम्पैक्ट पड़ेगा तो विल सी दैट। फिलहाल नेचुरल गैस को देखें तो एक हल्का सा फॉरेक्स में गैप अप लग रहा है। क्रूड ऑयल हल्का सा गैप डाउन है। गिफ्ट निफ्टी करंटली अपना इंडियन मार्केट एशियन मार्केट मॉर्निंग पे गिरे हुए थे। आज लास्ट फ्राइडे है, थोड़ा सा कॉशियस होकर चल रहे हैं लोग। गिफ्ट निफ्टी भी देखोगे, कल अपना इंडियन मार्केट क्लोज हुआ था उसी लेवल के आसपास, कहीं ओपन हो रहा है। थोड़ा सा लग रहा है गैप डाउन हो जाए, बट कुछ खास नहीं। अपने इंडियन मार्केट की क्लोजिंग कल की इधर पे है। दिस इज द क्लोजिंग कैंडल एंड करंटली ओवर हेयर, तो 9 पॉइंट फ्लैट ही ओपन दिख रहा है फिलहाल के लिए। लेट्स सी क्या प्लान कर सकते हैं, देखते हैं। ठीक है, 1 मिनट लेफ्ट। ओके, ठीक है, हल्का सा गैप अप नेचुरल गैस एंड क्रूड ऑयल हल्का सा गैप डाउन, कल के लेवल पर ही आ गया वापस। लगता है रेंज के बाहर निकलेगा नहीं इस वीक में। कल एक्सपायरी थी, चाहो तो अपना कॉन्ट्रैक्ट चेंज कर सकते हो। मैंने अभी करंट मंथ का फ्यूचर ही लगा रखा है एनएससी में। ठीक है, नेक्स्ट मंथ का कॉन्ट्रैक्ट अभी यूज़ नहीं कर रहे हैं, ऑटोमेटिकली चेंज हो जाएगा परसों, तो विल सी दैट। तो नेचुरल गैस में नीचे सपोर्ट वही है कल वाला, दैट इज स्टिल सपोर्ट। ओ या, दैट इज स्टिल अ सपोर्ट एरिया, अभी भी ब्रेक नहीं हुआ है कल का लो, तो दैट इज स्टिल होल्डिंग। ये हमारे पास कल का लो का जो एरिया है, इट इज स्टिल सपोर्ट एरिया। ठीक है, ये अभी भी सपोर्ट एरिया ही बना हुआ है कंटिन्यूसली। वाह। ते वापस अगर नीचे आएगा तो ये एक सपोर्ट एरिया रहेगा अभी भी। बाकी यहाँ से देखोगे मोमेंटम मार्केट कर चुका है, एक बार आया था लगभग 7-8 पॉइंट। पिछले 2-3 दिनों में कुछ खास मोमेंटम किया नहीं है वैसे देखा जाए तो। ठीक है, 14 को ब्रेकआउट हुआ था, लेवल बना था, 15 को एक बाइंग आई थी कल, तो खैर एग्जैक्टली हिट नहीं किया कह सकते हैं, बट स्टिल स्टिल देयर। लेट्स सी कौन से रेजिस्टेंस तक हिट करता है। कल यहाँ पर थोड़ा कंसोलिडेशन किया था, इन्वेंट्री बेरिस आई थी मार्केट में इन नेचुरल गैस, एंड विल देयर एनी रेजिस्टेंस। अगर ये ऊपर जाता है इससे नेचुरल गैस, तो पॉसिबिलिटी रहेगी वापस 255 to 260 के रेंज पे चला जाए वापस प्राइस। ठीक है, बाकी अगर ऊपर जाता है तो रेजिस्टेंस देखना पड़ेगा कितनी देर होल्ड करेगा, बिकॉज ऑलरेडी टेस्टेड है ऊपर का रेजिस्टेंस मार्केट के लिए। 3 बार तो टेस्ट कर ही चुका है। 1 2 3। अब अगर जाएगा वापस तो फोर्थ टाइम रहेगा ये रेजिस्टेंस जोन। स्ट्रांग ही है मुझे लग रहा है, जब तक कोई न्यूज़ नहीं आती। लोअर लो बना है, फर्स्ट टाइम एक लो बना था, दूसरे बार एक लोअर लो बना था, थर्ड टाइम ये थर्ड वाली सेल ऑफ का मोमेंटम है। स्टिल स्ट्रांग। नीचे सपोर्ट देखोगे, ये भी मुझे भी स्ट्रांग ही लग रहा है, एक ही बार आया है तो मुझे लग रहा है शायद एक बार डीप सपोर्ट फिर से ले सकता है वापस प्राइस। तो दिस इज अ सपोर्ट रेजिस्टेंस आई एम एक्सपेक्टिंग। आता है तो, कोई न्यूज़ नहीं आती तो मुझे लग रहा है मार्केट साइड में जा सकता है इस रेंज के अंदर। चाहो तो इसमें भी एक कॉल पुट शॉर्ट करके रख सकते हो वैसे इंट्राडे में। बाकी 15 मिनट में मुझे और कुछ खास नज़र नहीं आ रहा है इसमें यहाँ पर। लेट्स सी कोई सपोर्ट था उसका कोई ब्रेकडाउन अगर हुआ है तो। पर कोई खास सपोर्ट भी नहीं है, मुझे लग रहा है शायद यहाँ पर 5 मिनट टाइम फ्रेम पे कुछ हुआ है शायद प्राइस एक्शन 250 के आसपास, 248 के आसपास, दैट्स व्हाई प्राइस इज हिटिंग दिस लेवल। ठीक है, इंडियन मार्केट ओपन नाउ। ठीक है, यहाँ पर मुझे लग रहा है 5 मिनट टाइम फ्रेम पे कुछ प्राइस एक्शन बना होगा नेचुरल गैस में। 15 मिनट में कुछ खास नहीं है, 15 मिनट एंड अबव। तो स्मॉलर टाइम फ्रेम पे जा रहे हो तो ट्रेड कर सकते हो, मैं प्लान नहीं कर रहा हूँ। ओके, इंडियन मार्केट को भी देखोगे, वाओ, निफ्टी तो लग रहा है। ठीक है, 1 मिनट, थोड़ा सा सेल ऑफ कंटिन्यू होता हुआ। ठीक है, वैसे निफ्टी की मंथली टाइम फ्रेम की कैंडल देखोगे, इनसाइडर कैंडल बनी है लास्ट वीक, लास्ट मंथ सॉरी। अच्छा सेल ऑफ आया था, मार्केट ऑलमोस्ट 11-12% करेक्ट हो गया था। इस मंथ ऑलमोस्ट 8% तो अभी तक पॉजिटिव है। 13 डेज और हैं अभी बचे हुए। वीकली टाइम फ्रेम पे भी यूएस मार्केट कंप्लीटली एक्सेप्शनल। कल फिर से एक नया ऑल टाइम हाई बना दिया यूएस मार्केट। यूएस मार्केट पता नहीं क्या कर रहा है, लाइक ईरान वॉर चल रही है, there are lots of going on in the world, but still the US market is completely outperform every other country's market right now. मतलब अगर आप इमर्जिंग मार्केट या फिर मैं कहूँ डेवलप मार्केट और डेवलपिंग मार्केट सबको कंबाइन करके देखोगे, यूएस मार्केट इज अनस्टॉपेबल राइट नाउ। मतलब रुक ही नहीं रही है, लाइक इतना मोमेंटम। एंड दैट इज मेनली ड्रिवन बाय द एआई स्टॉक्स, बिकॉज बाकी तो सब जगह आप देखोगे इट इज somewhere you can see the sell off as well. नैस्डैक कल ऑलमोस्ट ऑल टाइम हाई गया था, अभी भी ऑल टाइम प्रीवियस ऑल टाइम हाई के ऊपर ही ट्रेड कर रहा है, थोड़ा साइडवेज गया था। कल एक नया ऑल टाइम हाई नैस्डैक ने बनाया था वापस 26,500। S&P 500 ऑल टाइम हाई था। एंड डाउ थोड़ा सा मुझे लग रहा है अभी भी शायद स्ट्रगल कर सकता है थोड़ा बहुत, बट टेक स्टॉक्स आर completely bullish. Magnificent 7, Max 7 are completely bullish. नीड टू सी डाउ वापस अपना ऑल टाइम हाई कब रिगेन करता है। डाउ जोन्स थोड़ा सा अभी भी दूर है ऑल टाइम हाई से, बट जितना भी सेल ऑफ आ रहा है कंप्लीटली। कल आई 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 लिसनिंग सम टॉक्स ऑफ सम CEOs and hedge funds managers. They mainly says that जितने लोगों ने भी वॉर की वजह से शॉर्ट पोजीशन बनाई थी, दे आर मेनली जो डेटा रिलीज हुआ है यूएस इकोनॉमी के रिगार्डिंग वो अच्छा हुआ था, तो दे आर आउट फ्रॉम देयर शॉर्ट पोजीशन। तो एक तरह से शॉर्ट स्क्वीज आप कह सकते हो, जो लोग नहीं निकले, जो लोग निकल गए, दैट ड्रिवन मार्केट अपसाइड एज वेल अगेन। तो कहीं ना कहीं सेंटिमेंट यूएस मार्केट का थोड़ा सा वापस बुलिश हो गया है। कोई बहुत बड़ा अगर कोई इवेंट नहीं होता है तो मुझे लग रहा है शायद यूएस मार्केट विल कंटिन्यू राइज। कोई बहुत बड़ा इवेंट हो गया लाइक यूएस और ईरान के बीच में होने वाली जो बातचीत है वो बंद हो जाती है, राइट। एंड यूएस ग्राउंड इन्वेजन कर देता है ईरान का, तब हो सकता है, मुझे लग रहा है शायद थोड़ा बहुत करेक्शन और आ जाए। बट लुक एट द इंडियन मार्केट एंड इफ यू कंपेयर विद द यूएस मार्केट, मुझे लग रहा है यूएस मार्केट ऊपर गया इस वीक, इस मंथ थोड़ा बहुत। इस वजह से अपना निफ्टी बैंक निफ्टी भी थोड़ा सा रिकवर किए, अदरवाइज तो लग रहा था एक बार के लिए पता नहीं कहाँ जाएगा। बैंक निफ्टी ऑलमोस्ट 17% करेक्ट हुआ था लास्ट वीक, 11% रिकवरी करी है। तो देखना पड़ेगा, विल दिस मूव कंटिन्यू। फिलहाल निफ्टी बैंक निफ्टी फ्यूचर हल्का सा गैप डाउन हुए थे, फ्लैट ही कहूंगा मैं तो, गैप डाउन नहीं। फर्स्ट 15 मिनट की कैंडल है, देखते हैं क्या होता है। गैप डाउन होने के बाद मार्केट डाउन जाके ऊपर आया है, इसका सिंपल सा मीनिंग है नीचे से मार्केट में इंटेंशनली बाइंग हो रही है। ठीक है, कल मैंने आप लोगों को बताया था एक रेजिस्टेंस था निफ्टी में एग्जैक्टली 30 मिनट के आसपास, वहां से एक सेलिंग आई थी, अच्छा ट्रेड मिला था। अभी देखते हैं, अभी इसमें कुछ खास कर नहीं सकते। दो चीज़ ध्यान रखना, कभी भी मार्केट प्रीवियस डे के हाई के ऊपर ओपनिंग दे और ओपनिंग होने के बाद ऊपर जाए और फिर एक कंप्लीट रिजेक्शन ले ले, इट मीन समझना कि ये कोई प्रॉफिट बुकिंग नहीं है, इट इज़ अ रिजेक्शन, कंप्लीट रिजेक्शन। उस केस में सेलिंग कंटिन्यू कर जाती है। सिमिलरली मार्केट कभी अगर प्रीवियस डे क्लोजिंग के नीचे कहीं ओपन हो और वो ओपन होने के बाद पहले डाउन जाए और फिर अपसाइड जाके एक बुलिश कैंडल बना दे किसी तरह का, इट मींस इट इज नॉट अ प्रॉफिट बुकिंग, it is intentionally buying over here. So market will go upward on upward direction, depend on the candle as well. ठीक है, अगर मार्केट में सिर्फ प्रॉफिट बुकिंग आनी होती तो मार्केट कभी भी गैप अप ओपन हो रहा है प्रीवियस डे के ऊपर, प्रीवियस डे की क्लोजिंग के ऊपर कहीं भी, तो ओपन होते ही सेलिंग आ जाती है। या फिर अगर मार्केट में प्रॉफिट बुकिंग गैप डाउन में आनी है, लास्ट डे क्लोज हुआ, गैप डाउन ओपन हुआ, तो सीधा चला जाएगा, नीचे और नहीं जाएगा या फिर ऊपर और नहीं जाएगा, ऊपर गया इसका मतलब और एग्जैक्ट डिस्काउंटेड लेवल पे जाने गया। तो वही सेम दिख रहा है निफ्टी फ्यूचर में, गैप डाउन हल्का सा हुआ था, डाउन साइड गया, लो लेवल से वापस लिक्विडिटी लेके ऊपर गया, तो इंटेंशनली बाइंग लग रही है, नॉट अ प्रॉफिट बुकिंग। तो मुझे लग रहा है शायद कल का थोड़ा सा यूएस मार्केट का इम्पैक्ट यहाँ भी देखने के लिए मिल रहा है। कर सकते हैं कुछ, 1 मिनट में जाएं क्या? ठीक है, आप पहली कैंडल भी देखोगे 1 मिनट की तो यू कैन सी द कंप्लीट रिजेक्शन फ्रॉम डाउन साइड, बिल्कुल एक हैमर कैंडल बनी है निफ्टी फ्यूचर में, 1 मिनट टाइम फ्रेम। न्यूट्रली चल रहा है मार्केट अभी, निफ्टी बैंक निफ्टी। क्रूड में देखते हैं क्या प्लान कर पाते हैं। ठीक है, फिर से रिपीट कर रहा हूँ, क्रूड कल ऑप्शन की एक्सपायरी हो गई है, चाहो तो कॉन्ट्रैक्ट चेंज कर सकते हो, मैंने नहीं किया है चेंज अभी भी। आई एम यूजिंग द सेम मंथ कॉन्ट्रैक्ट स्टिल, 2 days आर लेफ्ट इन फ्यूचर कॉन्ट्रैक्ट एक्सपायरी। ओके, इसको यहाँ से क्रूड में डाल दो। ठीक है, क्रूड भी देखोगे ओवरऑल कुछ खास कर नहीं रहा है, पता नहीं यहाँ पर काफी टाइम से अटक गया है। If you look at the 4 hour time frame, 1 hour time frame, in a even higher daily time frame, last 2 to 3 days it is just sideways. No such big move. By the way, अभी 12:30 लंदन सेशन ओपन होगा, इवनिंग न्यूयॉर्क सेशन की ओपनिंग है। 5:30 7 p.m. यूएस मार्केट ओपन। एंड और कोई मेजर डेटा नहीं है आज। लास्ट ट्रेडिंग सेशन फिर नेक्स्ट वीक ही ट्रेड होगा, कल और परसों ऐसी मार्केट क्लोज है, सैटरडे संडे। देखिए इवन 1 डे टाइम फ्रेम पे भी देखोगे ना क्रूड ऑयल को, तो इट इज ऑलमोस्ट साइडवेज ही हो गया है। ठीक है, कंप्लीट रिजेक्ट, हाँ सही है, निफ्टी सही चल रहा है। बिटकॉइन भी देखोगे, वो जो रेजिस्टेंस बताए थे 1 आवर टाइम फ्रेम पे अभी भी होल्ड करके बैठा हुआ है मार्केट, ना ऊपर निकल रहा है ना नीचे। स्टिल सेल ऑफ कंटिन्यू इन एट फ्रॉम रेजिस्टेंस इन बिटकॉइन। डेली में भी देखोगे ना, यहाँ पर पिछले 3 दिनों से कुछ खास प्राइस एक्शन बना नहीं है। 4 आवर टाइम फ्रेम बिल्कुल साइडवेज लग रहा है। कल थोड़ा बहुत मूव जरूर किया था बट स्टिल वापस नीचे आ गया, तो रेंज ही है। मुझे लग रहा है अगर एक बार भी अगर डेली टाइम फ्रेम की कैंडल 8550 के नीचे, डेली टाइम फ्रेम की 8550 के नीचे डेली टाइम फ्रेम की कैंडल अगर क्लोज होती है, तो थोड़ा सा ज़्यादा बेरिश हो सकता है प्राइस। होल्ड करके बैठे हुए हैं 8550 का लेवल, आई थिंक वेरी इंपॉर्टेंट राइट नाउ फॉर देम। कुछ खास सपोर्ट है नहीं अब यहाँ पर ट्रेड करने के लिए नेचुरल क्रूड ऑयल में भी। कोई नया रेजिस्टेंस बनाएगा तो देखेंगे, या सपोर्ट बना दे। अदरवाइज मुझे लग रहा है शायद जब तक लिक्विडिटी लेने जाएगा नहीं या फिर फ्रेश लिक्विडिटी क्रिएट नहीं करेगा, ट्रेड करना बेवकूफ़ी होगी। चीज़ें एक तो मोमेंटम ही बड़ा स्लो है और एक बहुत छोटी सी रेंज के अंदर है। बोथ आर नॉट गुड। यहाँ पर एक सपोर्ट है, वहाँ एग्जैक्टली आ नहीं रहा है प्राइस। मुझे ऐसा लग रहा है शायद ये, अगर इसने कहीं ऊपर रेजिस्टेंस बना दिया ना कोई, देयर चांसेस, अगर इसने कोई रेजिस्टेंस क्रिएट कर दिया इस लेवल के आसपास एंड देन इट इज फॉल, ये नीचे वाला सपोर्ट देन आई एम नॉट एक्सपेक्टिंग विल होल्ड एनी हाउ। निफ्टी भी साइड में चला गया लग रहा है, फर्स्ट 15 मिनट की कैंडल के अंदर ही है। एक मोमेंटम अच्छा आया है डाउन साइड से पॉजिटिव साइड पर। देखना पड़ेगा कंटिन्यू करता है या फिर आज साइडवेज ही रहता है प्राइस। कोई ट्रिगर नहीं है फिलहाल के लिए। डेलो इंपॉर्टेंट है, डेलो के नीचे गया तो थोड़ी प्रॉब्लम क्रिएट कर सकता है वापस। 1 मिनट टाइम फ्रेम पे भी देखोगे तो कुछ खास अब है नहीं, लोअर एंड पे पहली कैंडल के बाद थोड़ा बहुत मोमेंटम किया था। नेक्स्ट मंथ के फ्यूचर में देखोगे वहां पर प्राइस थोड़ा बहुत डाउन जा रहा है। क्रूड फ्यूचर में यहाँ तो बिल्कुल साइडवेज है अभी भी। नेक्स्ट मंथ का फ्यूचर थोड़ा सा बेरिस होता हुआ।
volatility ticking slightly lower to trade near levels that we saw prior to the start of the Middle East conflict. So still potentially investors could be getting ahead of themselves, but a lot of questions about what this actually means for equity markets more broadly. Let's get back to our top story, though, and that is, of course, the Middle East conflict. A 10-day ceasefire has come into effect in Lebanon following a diplomatic push by President Trump. While the truce aims to pause Israel's strikes on Lebanon, tensions remain high. Israeli troops continue to occupy a security zone in southern Lebanon, and Hezbollah has not committed to stopping its rocket attacks on Israeli towns. Let's bring in Bloomberg's Dan Williams, who is joining us now from Jerusalem with more. Dan, so we know that President Trump has pushed for a ceasefire as the fighting threatened to derail this 2-week ceasefire between the U.S. and Iran. But what more do we know about how we actually got to this point and whether or not this holds?
Good morning. Well, it appears that now the president has managed to remove one potential obstacle from the desk, the negotiations table between the U.S. and Iran. The Iranians had insisted that Lebanon be included in their ceasefire talks with the United States. Israel and the United States had previously refused that or resisted that. It would appear that Lebanon is now on that table, at least for the coming 10 days. So there's a signal there that there may actually be a 10-day window as far as the Americans are concerned and the Israelis, their partner in the war in Iran, for getting something done in Iran. And failing that, perhaps a resumption of the war in Iran. When it comes to the actual deal in Lebanon, for the president, this is something of a gain in small measure. He also likes to see himself as a peacemaking president. And what he's hoping is that this ceasefire, this 10-day ceasefire, will enable him to bring together the Israeli and Lebanese leaders in Washington for a photo op, presumably a photo op that would contribute to peace talks, to talks on some kind of permanent neighborly accommodation between the countries.
Well, and Dan, potentially what could be concerning to this whole entire situation is that Israel says troops remain in southern Lebanon. How does that complicate this ceasefire remaining intact?
A ceasefire is self-interested. It's by definition temporary. It is not a peace deal. In general, when you have a ceasefire and armistice, forces stop where they are. And in this case, they are in an expanded buffer zone, what Israel has referred to as a buffer zone in southern Lebanon, 10 kilometers deep, with a virtual Israeli Air Force control over a further strip inland leading up to the Litani River. The optics aren't great for Lebanon. On the other hand, this is a ceasefire. It's not a peace deal. What we will see is an offer eventually of full peace between the countries, a full Israeli withdrawal in exchange for full recognition of Israel by Lebanon. However, that would require that Lebanon, perhaps with Israel's help, rein in, disarm, defang, if you like, Hezbollah, Iran's ally in Lebanon, something the Lebanese authorities have pledged to do going back years, but have failed to do so far. So effectively, what we have now is an optical, a cosmetic, but nonetheless symbolic and important inching toward that hoped-for resolution. It's worth remembering that only a few years ago, it was a criminal offense in Lebanon to talk about normalizing ties with Israel. Only 4 years ago, when the Lebanese and Israelis had a maritime deal that was brokered by the US, they got together and they wouldn't even look the Israelis in the eyes, and now they're openly talking about peaceful engagement. So symbolic, nonetheless significant.
Yeah, that context, very important. Dan Williams in Jerusalem. Dan, thanks as always for your reporting, for joining us. Now, the war in Iran is reshaping the outlook for African economies, with rising oil prices creating a mix of winners and losers across the continent. While we see major exporters like Nigeria who may benefit, many countries, including South Africa, are facing higher energy costs, inflation pressures, and growing concerns over fuel and fertilizer supply. IMF Africa Director Abibi Selassie also warned that oil importers will continue to face rising costs and severe consequences.
Oil importers, particularly non-resource-rich and fragile states, face deteriorating trade balances, rising living costs, and limited buffers. The human consequences are almost certain to be severe. This latest shock comes on the heels of the dislocation caused by the sharp and unprecedented decline in official development assistance.
Now joining us to discuss this all is David Cowan, Citi's senior economist for Africa, here in studio with me. David, thank you so much for being with us. We've heard quite a bit from the IMF spring meetings this week. If we take a look at where sub-Saharan Africa's economic recovery, though, would you say at this point it has retreated or potentially stalling based on your own research?
I wouldn't say it's stalling. I think we're saying that whereas we'd had a projected pickup in growth from, say, 4.5% towards 5%, we're really stuck in this 4.5% level, which actually by global standards is quite good, right? But I wouldn't say at this point we're retreating. If you think about it on balance in Africa, what you're really asking is, am I, for example, downgrading South African and Egyptian growth a little bit as oil importers, but then would I offset that by upgrading Nigerian and Algerian growth, for example, right, as oil exporters? So I think by the time you put all that balance together, we end up pretty neutral in the scale of it. Although clearly, as you highlighted, there's winners and losers in this whole process.
And before we get to the winners and losers, I wonder if you think the pass-through to this potential stalling of growth is because of some of the fuel pressures? Is it fertilizer? Where have you
Okay,
seen?
so I think the two things you'd separate out. What's curious on Eastern and Southern Africa is that, yes, fertilizer is imported from the GCC, but in some ways Africa has got lucky in this crisis. The crops in Southern Africa are already in the ground. The fertilizer's been used. East African crops are already planted, right? So they will come up in the future. That means the pressure actually jumps back. There's a little bit of pressure, for example, in South Africa, Zambia, Zimbabwe on winter wheat crops, but really the worry is when we come back to planting in October. The other thing that's quite curious about it all is we've seen African governments respond in a huge number of ways in how they pass through the petrol price. And at the moment, I would say the majority are sort of hoping that they're not passing through the full impact of the global price. They're going to take a fiscal hit, and if the oil price comes down in the second half of the year, then they've got away with some of this, right? But at this point, that variety, somewhere like South Africa is passing it through, Zimbabwe passed it through quite aggressively, Nigeria, Kenya hasn't raised its petrol price. Cote d'Ivoire hasn't raised its petrol price yet, right? So this variety is one of the things that we have to work through in this situation.
Let's talk about Nigeria, because you call it an unambiguous winner.
Yes.
But potentially that comes at a cost. And we heard that this week with some of the leaders at the IMF. What does that mean in your view?
So essentially, again, sometimes I don't know whether we've hit a lucky crisis, given Africa's been through a lot of crises. But essentially, if you're going to open a huge new refinery, Mr. Dangote's refinery, which has a 650,000 barrel capacity, at a time when there's not only a global oil shortage, but merely more fundamentally this petroleum product shortage that people are waiting for, that really puts you in a strong position. Moreover, you know, Nigerian domestic demand maybe 300 to 400,000 barrels. So we're seeing that export. And in fact, if you put all the West African refinery together, the Cote d'Ivoire, the SAR in Cote d'Ivoire, or Ghana's Tema, actually Africa has some slight surplus in petroleum products. And we've already seen Dangote ship some of that to other African countries, right? Togo, Ghana, Benin, Ethiopia. So in a way, we are slightly protected from that. But Nigeria is particularly insulated. And they just opened a big new fertilizer factory too.
Right. But what is the cost that it comes at for Nigeria? Because we did hear Cardoso also speaking about it.
So the cost is a little bit that, yes, for the first time, Nigeria's changed its whole approach to life. Historically, Nigeria had a heavily subsidized petrol price and shortages. Now it's the only country not facing shortages, but the cost is a rise in the petrol price. And then that will impact on consumption. And remember, over the years, Nigeria's oil sector has become much smaller as a part of the economy. So although you see growth in the oil sector, it doesn't influence it as much as, say, the service sector, where incomes, consumption is impacted by higher petrol prices.
So what then would change your outlook? I mean, we're talking about potential talks to extend the ceasefire. There's still a lot of unknowns, right?
Yeah, I think what changes our outlook most is if the oil price is still at $90 plus in September, October. We're still based on the assumption that we have a $100 oil price in March, April, maybe May. Then we're assuming June, July, August, it starts to ease off. And if it eases off to levels of 70, 75, that's broadly acceptable for some African countries. I actually argue 60 is a fair price in Africa for oil importers and exporters, right? It sort of balances it off. So it would be slightly in favour of exporters.
So Key will be looking over the next few weeks at how this progresses. All right, we'll leave it there with you. David Cowan, Citi's senior economist for Africa, joining me here in studio. David, thank you so much for your insights. Now, coming up, firebrand South African politician Julius Malema sentenced to 5 years in jail. All the details on that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The International Energy Agency chief says it could take up to 2 years to restore oil and gas output disrupted by the Iran war. Fatih Birol told Bloomberg that a prolonged conflict will hit energy importing emerging economies hardest, particularly in Asia and Africa.
The situation will gradually improve, but according to our analysis, it can take up to 2 years to see the big chunk of the production coming back to the before war levels. It will improve gradually, but it will not be immediately coming back to the pre-war levels. And some of them may be even longer than 2 years, especially some of the LNG terminals. So why I'm saying this is that we should be prepared to rather volatile energy markets for some time to come. Hopefully, we see that the state is open as soon as possible, and this time frame is shorter.
We have begun with some optimistic assumptions. I think that's good. What if we were to take a more pessimistic perspective? If the war is prolonged, what will the impact be?
Then this will be rather serious implications for the global economy. I would be much more conservative and much less optimistic than the economic growth rates you have just presented. And here the biggest problem will be energy importing developing and emerging countries. They are at the forefront, especially those in Asia. This is, Bangladesh, Pakistan, Malaysia, Indonesia, and others, but also in the rest of the world, especially those in Africa. And let's do not forget that if it continues longer, not only the oil prices will go up, but as a result of the disruption, the fertilizer supply, we may well see the food prices also going up, and this could damage the economies of emerging and developing countries whose currencies are weaker than others, whose financial muscles are weaker than the others. So this will be a rather serious economic damage on these countries if it takes longer to open the Strait of Hormuz.
Particularly in Asia, in Africa, in emerging markets, in developing countries, are we already seeing a significant economic impact? Are we already seeing demand destruction?
Yes, we are seeing in many countries already some rationing, in fact, of some of the industries are rationed. Their capacity is much lower. We are already seeing the first signs of the upward pressure on the inflation, and this will pass through the rest of the economy soon. And it is the reason, I believe, we of course hear voices from the rather advanced economies in Asia Pacific, in Europe and elsewhere, but the countries that will suffer the most will be the ones who are importing energy, the oil and gas importing countries in emerging and developing world.
International Energy Agency Executive Director Fatih Birol there speaking with Bloomberg Television contributor Christia Freeland. All right, we have plenty more coming up here on Horizons Middle East and Africa. Stick with us.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South African opposition leader Julius Malema has been sentenced to 5 years in jail for violating gun laws. The firebrand politician was convicted over a 2018 incident in which he fired a weapon at a political rally, though he's now appealing the ruling and has been released on bail. For more, we're joined from Cape Town by Bloomberg's Michael Cohen. Mike, for people who maybe don't know Julius Malema, why is he so controversial and gone and gotten some. I actually think we're having a bit of trouble with Mike's audio right now, but we were just about to talk about opposition leader Julius Malema, who is one of the leaders of the Economic Freedom Fighters, yesterday being officially convicted over a 2018 incident in which he fired a weapon at a political rally. That is sparking quite a lot of debate about what that means for the EFF more broadly as the fourth biggest party in South Africa. But we will try to get back to Mike in just a bit. But for now, South Africa could forego as much as $730 million of revenue if it extends fuel tax relief to cushion consumers from higher oil prices. Citigroup, we were just speaking to them, says the government has enough fiscal space to prolong the measure by up to 2 months. The Iran war is driving up fuel costs, with inflation expected to rise in the coming months. Aliko Dangote plans to sell about 10% of his oil refinery in a pan-African IPO as he looks to fund expansion. The listing will span multiple African stock exchanges and is expected to offer dollar-denominated dividends to investors. The share sale is part of Dangote's plan to invest $40 billion over the next 5 years, which includes quadrupling fertilizer output and more than doubling oil refinery capacity. Nigerian airlines are warning they may ground flights next week unless jet fuel prices are reduced. Operators say fuel costs have surged by as much as 300%, far outpacing the rise in global oil prices, and are now threatening their viability. The Airline Operators of Nigeria says its members are facing existential threats and will be flying empty planes if fuel costs are passed to consumers. Now, the near closure of the Strait of Hormuz and Iran's attack on the world's largest liquefied natural gas plant in Qatar have disrupted gas supplies and sent prices higher. Bloomberg Originals has been looking at the impact of the Iran war on LNG. Here's a preview.
Natural gas is abundant. Reliable supply is not. Liquefied natural gas, commonly known as LNG, was meant to close that gap.
So I like to think about liquefied natural gas as oil's nerdier cousin.
It isn't as big as oil, but it's becoming bigger, and it's sort of becoming this backbone for a lot of energy systems.
It has so much of a broad reach in terms of where it goes, for power generation, for industry, for transportation. India, Japan, Asia, and also Europe all have long-term contracts.
If you were going to build your economy around liquefied natural gas imports, it had to be reliable. And this is what Qatar offered until now.
The energy war escalates.
Qatar's Ras Laffan industrial city, which houses the world's largest LNG export plant, has suffered extensive damage from an Iranian strike.
This plant, which had been running for 30 years, had never, ever missed a delivery.
Never in the industry's wildest dreams would this facility be damaged, and damaged to such an extent that it would take years for parts of it to restart.
So what happens when a war becomes a stress test for a global addiction?
How do you replace supply from a region that's now so fragile and vulnerable?
And subscribers can watch that full documentary now on the terminal or on our website at Bloomberg.com. You can also find more from the Bloomberg Originals team on their YouTube channel. Be sure to check that out. Let's take a look at where markets are positioned ahead of this last trading day of the week. We mentioned quite a bit of cautious optimism for investors as we await potential outcome of a continuation of a ceasefire, especially as we hear from President Trump suggesting that the war in Iran may be close to over as we approach the 50-day mark. S&P and NASDAQ futures trading a bit sideways right now, though we should mention Wall Street continuing to notch all-time highs on Thursday and looking like a stronger end to the week. Let's also take a look at oil because, of course, that is in focus as we wait to see what the outcome of negotiations mean for the Strait of Hormuz. Brent crude down just over 1.3%, trading at just about $98 a barrel there. All right, that is it for Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Tom McKenzie with your top stories. The record-breaking rally in global equities loses momentum as investors await progress on extending the US-Iran truce. Elsewhere in the region, Israel and Lebanon agree to a 10-day ceasefire. The UK and France prepared to host talks aimed at securing the Strait of Hormuz. Bloomberg understands some Gulf and European officials expect a US-Iran peace deal could take up to 6 months to finalise. Plus, a bad episode for Netflix. Shares tumble post-market as guidance misses estimates. Co-founder Reed Hastings says he's stepping down from the board, bringing his 29-year run to a close. Let's check in on the markets then after this incredible rally you've seen in global stocks. 10 straight days across global equities of upside, despite, of course, all the uncertainties emanating from the Middle East. The markets and equity traders in particular seeming to look through on expectations of a more sustained ceasefire. We'll watch for any developments on that front through this weekend. Today, though, maybe a bit of a pause, maybe a bit of that momentum cooling as investors await for more details then. US futures currently flat after the gains that have come through in the last few weeks. European stocks futures pointing to modest losses of 11 points, pointing lower by 0.2% on the European stocks 50 futures. Brent crude currently down 1.3%. That's supportive more broadly for risk sentiment, of course, at $98 a barrel. The last time I checked, WTI was below $95 a barrel. We continue to monitor, of course, oil and any developments around the Straits of Hormuz. Here's what else to think about in terms of the risk events this Friday. 10 a.m. UK time, we're going to get Euro area trade data. The IMF, International Monetary and Financial Committee, will be meeting in Washington, D.C., not just focused on geopolitics, but also concerns, of course, about the inflationary and growth impacts and AI as well. We've got some great reporting on how the regulators and how executives and how members of those central banks are thinking about Mythos and Anthropic and the disruption there potentially as well. The Fed's wallet will be speaking, as will Barkin, so we'll listen out for Fed speak as well as investors continue to weigh and monitor and think about the reaction function of central banks to the war in the Middle East. The show starts right now. It is, of course, earnings season as well. We talked about the Netflix results in the headlines. Let's bring you the latest lines from a major European corporate on the earnings front. This is Ericsson. First quarter adjusted earnings coming in weaker than the estimates, 5.6 billion Swedish krona. The estimates had been for 5.8 billion Swedish krona. Ericsson's CEO continuing to expect what he's described as a flattish Iran market. Ericsson, of course, the provider of telecoms equipment. That is the stock gain over 1 year. So it's rallied 40%, a little over 40% over 12 months, Ericsson. But it is a miss in the most recent earnings data coming through this morning then in terms of first quarter. That's the redhead across the terminal. First quarter adjusted EBITDA coming in below the estimates, 5.56 billion. The estimates have been for 5.8 billion. In terms of margins, you're looking in the first quarter of 11% margins. Net sales coming in at 49 billion Swedish krona. Again, that was also a miss. Estimates had been for 51 billion. Gross margins coming in at 48.1%. That's modestly above the estimates of 47.9%. But again, the redhead across the terminal, it's a miss for Ericsson in the first quarter. Ericsson saying it is facing higher input costs, especially semiconductors. And of course, we've seen that rapid run up in prices, particularly for DRAM, RAM and high bandwidth memory as well. So we know that in the chip space, memory and the cost there is pretty impactful, and Ericsson are pointing to that. Let's get back to geopolitics right now. Part of the geopolitics, of course, is playing out in terms of supply chains, and corporates seem starting to feel out, at least some corporates, in terms of the supply chain impact. President Trump saying the US and Iran could clinch a permanent ceasefire soon. Of course, he's oscillated in terms of how he's characterised this conflict. He also said that talks between Washington and Tehran could resume this weekend.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran, and it's going to be a good deal. It's going to be a deal with no nuclear weapons.
All right, the president not providing any evidence, of course, in that statement. We continue to monitor developments on the ground. Meanwhile, this is Israel and Lebanon agreeing to a 10-day ceasefire, with Trump calling on Hezbollah to, quote, act nicely during that period. For more, I'm joined by Patrick Sykes, Bloomberg's Middle East breaking news editor. Patrick, what do we know about this potential US-Iran deal, and whether or not we are seeing evidence from either side that we are actually closer to a more sustained ceasefire or longer-term deal between Washington and Tehran?
Yeah, according to Trump, the Iranians have given some kind of statement that they won't pursue nuclear weapons. It's worth mentioning that was, of course, their position even before this war. We also know that the negotiations have covered elements like a freeze on uranium enrichment in Iran, and it's still up for debate, and I think will be the point of debate in the next round of talks as to how long that freeze would be in place. Some say 5 years. We've heard 20 years as well. Trump also pointed to the opening of the Strait of Hormuz. It's worth saying as well, we haven't heard, of course, from Iran on any of this yet. But it is, I think, remarkable that the mood music from Trump is so positive, particularly when just a few days ago, over the weekend in Islamabad, Vice President Vance struck a much more pessimistic tone. He was saying we simply couldn't get the Iranians to agree to our terms. So we're wondering what exactly may have changed in the interim. We have, of course, had this diplomatic traffic in the past few days with the mediators, Pakistan, going between Tehran and Washington to try and sketch out the contours of a deal.
Yeah, and not that long ago that President Trump was talking about wiping out an entire civilization. There has been a significant development, Patrick, in terms of material on the ground, in terms of the ceasefire between Israel and Lebanon. Is that ceasefire being sustained? That seems to be an important piece of the puzzle, at least from Tehran's perspective.
Indeed, yeah. First and foremost, locally, it's obviously hugely important. Just in the past 6 weeks alone, over 2,000 people have been killed in Lebanon, and that front really ramped up after the Iran-US ceasefire came into effect, where Israel seemed to kind of turn its attention to the Lebanese front instead. But it's also really important more generally, more broadly, in the context of those US-Iran talks, because the presence of a ceasefire or the lack of a ceasefire, a patchy ceasefire in Lebanon, was a real sticking point. Iran only came to the table in Islamabad once it felt it was able to say that Israel had at least pulled back on some of those operations. Iran was claiming that it had limited them out of Beirut and into the south of Lebanon. So it should mean that if there is a new round of talks at the weekend, that can proceed from a more advanced starting point. They can get going straight away. And then longer term as well, I think obviously Hezbollah is the militia on the ground there in Lebanon, Iranian ally. And if Iran and the US are going to, in the medium or long term, resolve this broader question of Iran's support for those proxy groups, then a ceasefire on the ground could make that easier. Obviously, when we've still got a hot war going on the ground, I think that becomes all the more difficult. So I think positive for the talks short and long term.
OK, positive for the talks, and you're absolutely right, of course, to focus on the human toll in Lebanon as well as a result of those Israeli strikes. Bloomberg's Middle East breaking news editor Patrick Sykes. Patrick, thank you for that update. Bloomberg, meanwhile, understanding that some European and Gulf Arab leaders think a US-Iran peace deal will take 6 months to finalise, and they believe that the warring sides should extend their ceasefire to cover that time frame. Joining me now is Oliver Crook, Bloomberg's chief Europe correspondent. Ollie, this really kind of contrasts with the at least recent positive commentary from President Trump. It's hard to know how much weight to put on his words when it comes to the Middle East, because he has oscillated so significantly during the conflict in terms of his take on progress or lack of progress. But this is a clear line from our reporting around what European leaders and what Gulf leaders expect in terms of the time frame for actually securing a sustainable deal.
Absolutely, Tom. And I think it speaks to the differences in diplomatic approaches from the Europeans and the United States under President Donald Trump. We're so obsessed with these individual meetings. Witkoff is here. J.D. Vance is here. Do we have a deal? Don't we have a deal? You know, the Europeans remember being involved in the JCPOA, which took ages to negotiate under President Obama. This was a very, very long process. So in order to get to a sort of comprehensive deal, we're not talking about a permanent ceasefire, an actual deal with the Iranians. They think that obviously a 6-month time period is a very realistic thing. And this is not going to be resolved a couple of weeks here and there. And that is the timeline that the Europeans are beginning to think about. This is, of course, shared apparently by a number of Gulf nations. I think a couple of things to add to that is the Gulf nations are also very much prioritizing this idea that the Iranians have not yet given up their nuclear ambitions, and that any kind of deal, comprehensive deal, will have to include their their long-range ballistic program. But I think that the other side of this, and I think that's interesting, Tom, is for the Europeans, if your base case now is that this is going to be at least a 6-month negotiation and conversation, where is the European policy response on the energy shock? We have had energy prices here in Europe, gas up 30% from before the war, Brent up about 40%, and European gas storage is only at 29%, Tom. That is the lowest level it's been since 2022, before the war in Ukraine. Where is the policy response on this stuff? And that's a big question, I think, for European leaders going into next week and the summit that we're going to get in Cyprus.
Wow, gas storage just at 29% for Europe. European leaders are meeting, meanwhile, Ollie, as you know, UK, France trying to take the lead on this in terms of a summit looking to secure the opening of the Straits of Hormuz. What materially are they hoping to achieve? In what time frame? What actually can the UK, France and others do?
Yeah, Tom, you asked the right questions here. I think it's a sort of open question. I think this is partially, I mean, they're calling this, what is this, the Maritime Freedom of Navigation Initiative. Another term for it might be the Trump Appeasement Force. Another one might be a coalition of the begrudging, right? This is the Europeans and a number of other nations. We should say there are about a few dozen of them that will be convening via video call in Paris. I mean, Macron and Starmer will be there. We understand Meloni and Merz will be there in person. But this is the sort of comprehensive international framework to try to come up with a force that will be active in some way in the Straits of Hormuz the day after. We should say what this is not. This is not a military intervention. This is not joining U.S. forces. This is not joining the U.S. blockade. This is trying to create the conditions for shipping to have the confidence to navigate the Strait of Hormuz the day after. Now, the question is, will this be a force that could operate during a 6-month ceasefire, for example, or is this something that would only come into effect after the war was sort of fully concluded? These are going to be some of the discussions that they're going to flesh out. That'll be later this afternoon. And of course, the important thing here will be briefing the President of the United States to see if this is something that appeases him and makes him happy, so he can stop talking potentially about NATO and Greenland.
Bloomberg's chief Europe correspondent Oliver Crook, thank you with that update. Let's check in on how the Asian markets are faring. A little bit of profit taking, it seems, across the benchmark. MSCI Asia Pacific is currently down 0.9%. Let's bring in Winnie Su in Hong Kong with the details. Winnie, the sentiment has changed. What is your take in terms of what we're seeing across the major indexes over in Asia?
Yeah, good morning, Tom. As you mentioned, a bit of a caution into the weekend as we await for further progress on the ceasefire. Now, we're also seeing investors taking some profit off the table, some of the risk off the table as well, after 3 days of gains on the MSCI Asia already. Now, we're looking at the index here down less than 1%. But when it comes to the weekly performance, we're still looking at back-to-back weekly gains, and that's the first of such since the war began. So overall, still some optimism that we will be able to reach some sort of resolution in the near future. You also flip aboard and take a look sector-wise that the tech sector is still the key drag today in the region, and leading losses today, in fact, is still TSMC down more than 2%, and it's leading overall tech peers down further as well. Now, during the show yesterday, we did see those positive earnings from TSMC. However, it seems like the concerns now is still more on how its revenue sources seem to be more concentrated on a handful of hyperscalers, and a bit of profit taking after the stock reached fresh records into the earnings. Back to you, Tom.
Winnie, thank you very much indeed. Winnie Su in Hong Kong with a check on the Asian markets. Wall Street, meanwhile, is turning gloomy on the dollar, with the greenback's war-driven haven rally likely over as the fragile ceasefire between the US and Iran prompts investors to seek riskier assets. At least that is the view from the likes of Wells Fargo and Deutsche Bank. This comes as former Treasury Secretary Hank Paulson told us at Bloomberg that US authorities should prepare a backup plan in order to avert a potential collapse in demand for treasuries.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries and the Fed is the only buyer and the prices of the treasuries are going down and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break the glass plan.
An emergency break the glass plan. Let's bring in Bloomberg M-Line strategist Mark Cranfield. Mark, why is Paulson suddenly so worried about treasuries?
Yeah, this is one glass you really don't want to break. It's got a lot to do with the timing of the war with Iran. The US fiscal situation was already quite poor going into the war. We've heard a lot from the United States about they want to spend even more on defense and further deteriorate the fiscal deficit which they have. The debt to GDP ratio is going above 100 by the looks of it, and it's projected to go over the next few years even worse. All of that is known to investors, and they can see the danger there. At the same time, you've got the Federal Reserve, the main buyer in the secondary market of US Treasuries. We saw yields spike up quite a lot during March. They've come down, but not all the way. So clearly, people are not that happy about the whole setup between fiscal and monetary policy in the United States. Going forward, if the Treasury needs to spend even more money raising debt, and foreign buyers do not step up, because don't forget, foreigners own about $9 trillion worth of treasuries, which is a huge amount. They've been slowing their purchases anyway. China especially doesn't buy many treasuries these days. Japan is the biggest at the moment. But if foreigners decide that there's too much risk in the treasury market, they'd rather go somewhere else, that will spiral into the US dollar as well. So what Paulson is saying here is it's not just about the bonds, it's also about the currency as well. That's why he's suggesting they have some kind of emergency plan. Because if investors globally outside the United States start to lose faith in the quality of the US credit, which is a possibility, don't forget they haven't been downgraded for a long time, but they have been warned that if their deficit doesn't get reined in, the next step could be a downgrading of the sovereign rating. That could be the thing that triggers more selling of bonds, more selling of the US dollar. Put those two together, it's a very nasty situation for the biggest bond market in the world. That's why you really don't want this plan to need to be inactivated. But you can understand why Mr. Paulson thinks it's time that they do have a back plan in place right now.
Yeah, and he's a man who's been in the room, hasn't he, during crises, of course, famously 2008, 2009, the response to the global and great financial crisis, and his role in that. So he has some experience. Bloomberg M Live strategist Mark Cranfield. Mark, thank you. With maybe a credit downgrade, the moment to reassess for the US. Still ahead, we're going to get more on markets with Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. How to think about positioning after the record rally that we've had in global equities over the last 10 days. But first, Netflix missing its second quarter earnings expectations. Co-founder Reed Hastings stepping down from the board of directors. We'll bring you the details next. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Netflix shares sinking in after-hours trading, as you can see, after second quarter earnings results fell short of analyst expectations, particularly the guidance for the upcoming quarter. The streaming giant also announcing that co-founder and executive chair Reed Hastings, who is also on the board of Bloomberg Inc., would be stepping down from the company after 29 years. The earnings are the first since Netflix walked away from a bidding war, of course, for Warner Brothers.
Our teams were more than up to the task. We've learned so much about deal execution, about early integration. We're really proud of the teams that did all that work. We were proud to win the bid. We are confident in our ability to get to the finish line with regulators for the approvals that we needed. But mostly, we really built our M&A muscle. We met a bunch of great people in the WBD during this process. So if there's any emotion in all of this, it was the disappointment of not getting to work with those folks.
OK, I'm joined now by Bloomberg senior strategist Neil Campling. Neil, we heard there from Ted Sarandos. We saw the earnings and we saw the guidance for the upcoming quarter. Where does this position Netflix going forward? What for you stood out from these numbers?
The headline numbers were a beat on the bottom line, really just because they got that termination fee from the deal, which they walked away from. The guidance is somewhat disappointing. The reason being is they've literally just put through the second price hike for the streaming service, second time within a year. So effectively, investors were expecting an upgrade to guidance for the year. That didn't happen, so there's some disappointment there. The price reaction after hours, it's actually fallen. This will be the fourth quarter in a row it's fallen on numbers. The stock had actually given up half its market cap since the last summer into that worries around the deal, which they then walked away from. The stock has rebounded quite a bit since then. Taking a step back, There's 325 million subscribers. They've got pricing power. It's growing top line organically, double digit, and that's pretty impressive in terms of their positioning. The big question now may be, they've shown their hand that they're interested in M&A. What are they going to go and do next? I've got a feeling they're going to go after some other media assets. That may sort of be a concern, given that the architect, the founder is no longer at the company, stepping back from a company that's changed significantly since putting DVDs in the post.
And very briefly, Anthropic's Mythos continues to have an impact in terms of how banks are thinking about this, but also government agencies. And we've got some reporting that US government agencies may get access to this. How significant, what use could there be for this kind of model for them?
I mean, given the power of some of these, the tools that Mythos has, and we've already found that those security flaws that have been mentioned in your interview earlier this week, I think we had to think that cybersecurity, $450 billion is spent on cybersecurity every single year. Cybercrime costs the global economy over $10 trillion every single year. So if you have a powerful tool that can find flaws in something that's been tested 5 million times and not found, that this AI tool can find in minutes, it could be used for great reasons within the US government agencies, for sure.
Neil, thank you very much indeed. Those stats, really putting that into context in terms of maybe the additional spend that's needed to secure systems globally. Neil Campling with a view there and the details around Mythos, but also the Netflix earnings. Coming up, the CEO, talking of earnings, but switching focus to a different sector, the CEO of Gucci, owner Kering, tells us he wants to double the group's profitability. Our interview is next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now to some corporate news we are following this Friday morning. Kering CEO Luca De Meo will seek to double profitability at the French luxury group, in part by rejuvenating Gucci, its largest brand. De Meo spoke with Bloomberg's Caroline Conat about his strategy at the company's Capital Markets Day in Florence. She asked him about Gucci's new creative director, Demna.
We just have to all work together to make sure that Demna can express his full potential. He's one of the greatest of this generation, and he has now in his hands one of the most beautiful brands, in this sector. So I'm pretty optimistic that everything will work. And things well done require time, right? And we want to do good things with Gucci.
Meanwhile, Bloomberg has learned that SpaceX has moved up employee share vesting to as early as next week. Sources tell us the company informed staff that the vesting date would be in April rather than May, as previously expected. The accelerated timeline is aimed at easing concerns over how much equity staff can sell ahead of the highly anticipated IPO, which is targeting a valuation of over $2 trillion. And footwear maker Allbirds stock sank more than 30% a day after a near 600% surge as it announced a surprise pivot to AI infrastructure. Analysts have expressed scepticism about the company's move and the stock reaction. One calls it a Hail Mary, another saying it's about the meme stock driven by emotions rather than logic. There's a lot more coming up. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Tom McKenzie with your top stories. Happy Friday, everyone. The record-breaking rally in global equities losing momentum as investors await progress on extending the US-Iran truce. Elsewhere in the region, Israel and Lebanon agreeing to a 10-day ceasefire. The UK and France prepared to host talks aimed at securing the Strait of Hormuz. Bloomberg understands some Gulf and European officials expect a US-Iran peace deal could take up to 6 months to finalise. Plus, UK Prime Minister Keir Starmer faces calls to resign over Peter Mandelson's appointment as US ambassador after it emerged that Mandelson was granted security clearance despite objections from vetting officials. Let's get to the markets then after this incredible 10-day rally for global stocks. Despite all the uncertainty out of the Middle East, the focus has seemed to be on looking through that to a more permanent ceasefire, and we'll see if there's any developments on that front through this weekend, of course. Today, futures a little bit more uncertain. Maybe some of that momentum is pausing ahead of the weekend. We've seen this dynamic before in recent weeks during this time of conflict, of course. US futures currently flat. European futures pointing lower just by 11 points, down by 0.2%. The earnings story continues to be in focus. We saw a miss from Ericsson at the top of our hour. So earnings also something to be considered, of course, for investors. Brent crude, and this is essential, of course, to how you think about the risk appetite. Currently at $98 a barrel, down 1.3% so far in the session, even as we see very little momentum around reopening the Straits of Hormuz, even as President Trump talks positively about a potential extension of a ceasefire or a deal with Iran. Time now for some of your front page news stories and items that we've highlighted across newspapers this Friday morning. The Wall Street Journal leading on the push for Israel and Lebanon and the peace deal that they've, or at least a ceasefire deal, 10-day deal, risking a new confrontation, though, according to the Wall Street Journal, with Hezbollah, because, of course, The Lebanese government has very little, if any, control over that group. That group, of course, that is linked and funded and supported by Iran. Wall Street Journal leading on that then. The Guardian, meanwhile, splashing, and they were the ones who led with this reporting yesterday, splashing on the UK Prime Minister facing calls to quit over the revelation that Lord Mandelson failed his security vetting. The UK Foreign Office's top civil servant, Ollie Robbins, has been forced out. Likewise, the Financial Times leading on the Foreign Office, top official servant Ollie Robbins again leaving his post over the Mandelson vetting fiasco. We saw the gilt moves yesterday on the back of that Guardian reporting, so that continues to be a key UK story. Of course, we'll get to more details for you shortly from James Woolcock in terms of what the ramifications are politically, domestically, and arguably for the gilt markets as well. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Terminal subscribers can go to DAYB Go on the terminal. Now, President Trump is striking an optimistic tone as he says the US and Iran could reach a permanent ceasefire soon. But Bloomberg understands that some Gulf, Arab and European leaders believe that a US-Iran peace deal will take about 6 months to be agreed, and the ceasefire should be extended to that time frame. Meanwhile, Israel and Lebanon have agreed to that 10-day ceasefire, with Trump calling on Hezbollah to, quote, act nicely during that period. Meanwhile, across markets, it has been a record-breaking week for global equities. Let's get some analysis and bring in Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. Anika, it's been a remarkable 10 days or so for global equities. We've seen the rally across the Nasdaq 100. We've seen the gains coming through from the S&P 500, notching fresh records. There's a bit of a pause across markets today. How do you explain what we've seen in the equity markets, given all the uncertainty that continues out of the Middle East?
Yes, a very good morning, Tom. I think investors are trying to trade on the post-war impact. Equity markets tend to be a lot more forward-looking in nature. And I believe equity markets are trying to draw parallels from prior short, sharp corrections that we saw in equity markets, be it the COVID pandemic in 2020, or even the more recent Liberation Day, where we saw very sharp corrections in equity market, only to shortly see markets quickly recuperate. And I think what investors are trying to do is they're trying to separate the actuality of the conflict taking place on the ground versus the impact of what is likely to transpire if we actually obtain a more credible ceasefire from the existing conflict. And I think because of that, we're seeing equity markets be a lot more bullish in nature. But the reality is, given the number of perpetrators involved in this particular conflict, it's really difficult to pin down how soon we're likely to get that ceasefire in place.
Anika, is there a concern that equities are setting themselves up for a fall, given the disconnect between supply chain disruption that we continue to see, with no evidence that that's going to be resolved, at least in the short term, and the rally that we've seen over the last 10 days? There's a disconnect there between the physical movement of goods and what we're seeing in terms of the rally for stocks.
There is a disconnect, similar to the disconnects we saw during the COVID pandemic and similar to the disconnect we saw during Liberation Day. The announcements that were made on Liberation Day, be it the announcements on the tariffs, were very high, shortly only to be called back. In this case, what's really different is the ongoing conflict in the Middle East is taking away days of supply of very important goods to critical markets around the globe. And so the likely impact is going to be inflationary. Now, this is very much dependent on how quickly we can resolve this, because the sooner we get this resolved, the lesser that impact is likely to stay on in the markets. Equities, the disconnect that we see is equities are, pricing in a much more bullish outlook. And as every day passes, we see that we still haven't arrived at a credible conflict on the Iranian war. And I think that is where that disconnect takes place. And I think investors need to look for areas of certainty or areas where, we are seeing a pivot take place in equity markets, which should help provide a bit more insulation.
Anika, where are you finding that then, that certainty, that resilience?
Well, one of the areas of vulnerability is primarily in energy supply. And I think that is really reinforcing the case for countries globally to diversify their energy sources. There were two opportunities that have taken place since 2022, where Europe found itself extremely vulnerable to Russian energy supply. And fast forward to today, we have Asia and emerging markets extremely vulnerable to Middle Eastern energy supply. So clearly, the lessons haven't been learned from those two, critical opportunities that were provided. So what we see taking place across countries globally now is this surge and this rush to diversify your energy sources. So countries are doing this via renewable sources of energy. There's the case for energy addition as opposed to energy transition. And as this is taking place, countries are trying to diversify their sources. So we're seeing an expansion in the infrastructure required to support renewable sources of energy. We're seeing expansion of nuclear energy as an alternative source. And we're also seeing rare earth metals, which are very critical inputs in the energy addition, start to, the supply chains for critical minerals start to expand at a very fast pace, given the fact that China at present really dominates in the rare earths market.
Anika, I know you've been thinking about the defence space as well. Would you sell defence stocks if there is a deal between the US and Iran, or has that trade got further to go given the fiscal impulse coming through from Europe?
For us, we believe that the European defence rearmament cycle is very structural in nature. If you would have observed over the course of 2025, we started out with European defense bringing in tremendous amount of momentum. And some of that got stalled when there were talks of a ceasefire between Russia and Ukraine. That did not transpire. And if anything, we've seen, that momentum within the European defense sector continue to take place over the course of 2026. For us, there's been a very big break of trust between Europe, the NATO members, and the US, especially when the US did not rule out, the use of military force when it came to acquiring parts of Greenland. So it really has kick-started Europe's rearmament cycle. It's increased the pace and acceleration of Europe's rearmament cycle. Europe understands it needs to protect its own borders and reduce its reliance on a very important ally, which is the US. So we believe, there is further room to accelerate.
Anika, thank you very much indeed. Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. Have a great weekend. Meanwhile, we're going to be watching gilt moves, of course, when they start trading, 8 a.m. UK time. The political risk is back for the UK. This after a sell-off yesterday amid renewed calls for UK Prime Minister Keir Starmer to resign. More details have emerged about Peter Mandelson's appointment as ambassador to the US. Starmer has been forced to acknowledge that the Foreign Office granted Mandelson security clearance last year against the objections of vetting officials. Bloomberg's James Walcott, who follows UK politics very closely for us, is here with the details. How serious, James? You've been following the ups and downs for this Prime Minister since he took office. How serious a moment is this for him?
I can't think of one more serious than this moment. This scandal has dogged Starmer for months, and the reason because it calls into question his political antenna, his decision-making, his top team's competence. All of those things are still there, but now, throughout this process, Starmer has insisted due process was followed. We now know that Peter Mandelson, the former US ambassador, failed the security vetting process, and then civil servants overturned that decision. We don't know why. We don't know who said that, although the government insists Starmer did not know that. But he has many, many, many questions to answer. But unlike in January, when the scandal last came about, he now does those questions with no chief of staff that got him through, Morgan McSweeney, and with falling popularity, and at a point where the cost of living crisis caused by an oil supply shock is coming for him. And so there really are a number of issues looming for a Prime Minister who might be on the brink.
Very briefly, how much vulnerability is there in the gilt markets as a result of this?
I mean, yields did bump 5 basis points higher yesterday on this. But look, imagine two sort of scales here. There's the Starmer and Hot Water Index, and there is the any other politician ready to have a go index. And that index is almost receding as they look at the Iran war. Many are waiting for the May local elections. So if anything were coming right now, I would be very surprised to see it, but it does build even more storm clouds ahead of the May local elections.
James, excellent analysis in terms of what we're seeing around the political risk and the fortunes of the Prime Minister Keir Starmer. Bloomberg's James Woolcock. Thank you. Meanwhile, Bulgarians will vote in parliamentary elections on Sunday, some 4 months after the government collapsed following anti-corruption protests. It happened just as Bulgaria was about to join the euro area after almost 20 years of integration. 20 years. The country entered the EU back in 2007 at the same time as Romania, but it wasn't until January this year that it took up the single currency. The big moment, though, overshadowed by those protests and the collapse of the government. Let's get more from Georgia Mesbrovic, who joins us from our partner, Bloomberg TV Bulgaria. Thank you for taking the time. Who's in the running, then, in this election? Can they stamp out corruption?
Hello, yes, good morning. So, based on the sociological data, 5 political parties will be joining the next parliament. The interesting thing is that the leading coalition is the newly formed one. But we should explain a bit how did we got here at the first place. In December, there were massive protests in Sofia, along with other major cities, where protesters gathered against the proposed budget of 2026. But shortly after, the protest evolved and wanted the resignation of the cabinet. 2 main figures were the focus of the protesters, GERB's leader Boyko Borisov and DPS's leader Delan Peevski, who is sanctioned through Magnitsky Act. The protesters accused them of being the faces of corruption in Bulgaria. The demonstration led to resignation of the cabinet, and shortly after, the president, Rumen Radev, stepped down from the presidency and formed a political party to join the elections. Most of the parties right now are trying to enforce the Gen Z voters, who are amongst the most active generation on the protest. We see in the sociological data that the ex-president's Radev's party is leading with over 30% of the votes. The second place is for GERB CDS, after most agency is placing PPDB at the 3rd place, and the 4th place is expected to be for DPS. The 5th place is probably for Возрождение, or Revival in English. Based on the data we have right now, Bulgaria's Socialist Party is flirting with the 4% barrier, and it's not certain if they will be in the next parliament. But here's the interesting part, because Hungary held its election last Sunday, as you know, and there was a huge turnout, around 80%. In Bulgaria, this will be the 8th parliamentary election in 5 years. And in this time, we started around 50% turnout, and then we saw voter fatigue combined, of course, with the disappointment of the voters from the political parties. So the turnout started going down, and at some point, it reached around 34%. Now, our hope is for the people to go to the polls, because that's the most efficient way to counter vote buying and control the vote. There is a speculation that because we have presidential election later this year in the fall, there is a speculation some parties will try not to form next government and try to delay another elections who are aligning with the president's elections in the fall. But we should see that if that's true.
OK, an important moment for Bulgaria. Georgi, thank you very much indeed. Georgi Mesbrovic from our partner, Bloomberg TV Bulgaria. Let's get back to the earnings story right now. Ericsson falling close to 7% on Tradegate versus the Stockholm close. So we're going to be watching that stock, of course, at the open, 8 a.m. UK time. That's the pricing across 12 months, of course, for the stock, which is up 40%. But the earnings story for Ericsson is this. It missed earnings estimates, forecasts in terms of what we saw from the analysts. It was a miss for Ericsson, the Swedish company, struggling in a weak market for telecoms equipment, rising chip costs as well. So supply chain constraints, the increase in pricing coming through from chip costs, partly due, of course, to that AI boom, sucking in a lot of the semiconductors, meaning that prices are up and Ericsson is paying the price for that. So they missed in their first quarter earnings. We watched that stock called lower by close to 7% on Tradegate. Coming up, as the IMF downgrades its growth projection for the year, we're going to look at the economic outlook for Europe amid the Iran war. We'll bring you that context, that analysis. That's next. This is Bloomberg.
is maybe first country inspired to me to how can I use the different ingredients. First time we went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a noble style.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We have revised inflation to 2.6%, growth to 0.9%, and then the evolution is going to be a factor of how long, how deep, how propagated the crisis is.
Even if the war ends tomorrow, it would take quite some time for the recovery to kick in. We have to keep in mind that the impact is already baked in.
This situation is increasing, market volatility is also is increasing, the risks and expectation of higher inflation. But I have to say, and this is the message of the report, and also I think we are testing now, resilience is there. Structurally, I have to say, last year volatility was reduced. Now this period is higher, but always less on financial markets than on energy prices. Also, liquidity is there, and governments are on and tapping the market even in these weeks without particular problems.
So some key voices on the global economic outlook there. This week, of course, the IMF downgraded its growth projection for the year after the war in Iran triggered that major oil shock. The OECD, meanwhile, forecasts euro area growth slowing to 0.8%, while Bloomberg Economics has this figure at 0.7%. For more on this, I'm joined by Bloomberg Economics chief euro area economist Simona Della Cagliari. For some details and context, crunching the numbers for us, the implications of the conflict in the Middle East. Simona, how do you see, what is the impact then? What is the likely impact? What are your forecasts in terms of the energy price impact on the euro area and inflation?
Hi, good morning. The energy shock will have a significant impact on the euro area economy, but the magnitude of that clearly depends on the size of the shock, but also the duration of it. In our recent projection, where we see oil prices to stay at elevated levels in the second quarter and remain elevated in the course of the years, we see the economy decelerated to 0.7% and the inflation to increase from the current March level of 2.6% to above 3% in the course of the year before gradually decelerating. Our projection and also condition on the assumption of market interest rate assumption, they see already 2 hikes in the course of this year. So I expect the economy to have a significant impact, in particular those economies that are particularly exposed to energy and gas prices. If you consider countries like Italy or Germany, they have a very important share of gas in the energy mix. But as I said, I think the very important point is how long the shock will last on the economy. So whether we see a ceasefire soon or the shock will continue.
What does it mean for the ECB then? Markets are pricing in hikes from the European Central Bank.
Yeah, I think first of all, we need to consider that that this episode is very different from what we observed in 2022. In 2022, the economy was in very different conditions. So the labor market was particularly tight, exceptionally tight, and monetary and fiscal policy were clearly expansionary. Now they are more close to neutral. And now we observe actually a cooling labor market. So the possibility of second round effect appear more limited in our view at the moment. So this is very important for the reaction of monetary policy because the ECB seems to concern about the repeat of 2022. I would say that in the near term, all this argues for caution. So we don't expect in April a move, and this is because it would be too premature for policymakers to move rates. Another reason is because they will not have enough data, important data point like inflation for April, and GDP data will come in all in the same date of the meeting. So I think the ECB will not have enough information in order to move rate. I think the question is what will happen after in June when the ECB will have also new projection from staff. And there, I think Lagarde, based on the reaction function that she explained, if oil price remain elevated, there is a possibility that the ECB would like to go for an insurance hike. In my view, I think that given the possibility of limited second round effect, the ECB still have the possibility to look through this shock.
Okay. Simona, thank you very much indeed for that analysis. Bloomberg Economics Chief Euro Area Economist Simona Delle Chiaie with the details there, the potential impact on the Euro area. There's a lot more coming up. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back. All sorts of questions in terms of whether or not there will be a more sustained ceasefire. Maybe this weekend comes through with some additional details, as there are reports, of course, that Iran and the US continue to talk. President Trump is talking very positively. Here's the picture in terms of the oil price movements. And you have seen some of that volatility come out of the futures, at least the futures market. And the last time I checked, WTI was below $95 a barrel and Brent was below $98 a barrel. So this is the picture if you go back to October in terms of how things have recalibrated, and you zero in to the last few days, and some of that has started to ease. Of course, there's a big difference in terms of the futures pricing and the actual physical demand and picture when it comes to delivery of barrels. Let's check in on what's happening in terms of the rally. This eye-watering rally that we've seen, despite all this uncertainty, particularly with the NASDAQ 100, 12 straight days of gains. Historically, on the back of a run like this, over 6 months you see a pop of 5.9%. That was an example back in 1986. But you see gains over 12 months, normally after a run like this. So maybe this is setting us up for more gains 12 months out, 6 months out for the NASDAQ 100. The opening trade is coming up next. This is Bloomberg.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. It is Friday, April the 17th. Here's what's on the agenda. The record-breaking equities rally takes a pause as Trump claims an Iran deal is close. The Prince of Darkness lands Starmer on the ropes again. And a bad episode for Netflix as guidance knocks the stock.
Tom, let's have a look at where the futures picture then is on both sides of the Atlantic, because this is the pause that you're talking about there then. We have come so far so quickly in terms of confidence and optimism around a recovery for stocks. And so this is the picture we see today. S&P futures a little positive, Euro stocks 50 futures a little negative. So waiting for some further news. We've come a long way on optimism, on trust in what President Trump has been saying. I'm waiting for some confirmation of a path forward there. We're also watching, as Tom's headlines were suggesting, what's going on in UK politics as well. Yields on the 10-year gilt popped higher yesterday as gilt markets will start to ask questions about the future of Keir Starmer and his top team. The countdown to the opening trade starts right now.
The stock market is good. The oil prices are coming down, and it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
President Trump promising a lot, pointing to progress when it comes to the talks with Iran. But where are the talks? When are they going to take place? What date do we have set? It's Friday. We thought we'd be there by now. We thought we'd have talks this weekend. That has not happened. The military build-up continues. We do see progress in Lebanon. That's good news. But the military build-up does continue. How would the market react to the US trying to take the Strait by force? How would China react to that? I think other things need to come back onto the table. That said, take a step back. You don't see many weeks like this. Tom was just pointing, Anna was just pointing to the details of it all. It's been a massive week for markets. The risk reversal has been huge. You've gone from one side of the boat to the other side of the boat, and you do not see this kind of action very often.
You really don't. If we see anything smaller than a drop of 0.25% on the S&P, then we will have reached this rather strange benchmark. The S&P will have posted 3 straight weeks of gains of more than 3%. And that just doesn't really happen. And your graphic at the end of the last hour was pointing to what this tells us about where we go from here. If you look back at history, then we see this kind of rally. It leads to further positivity. I wonder how that sits with our understanding of exactly what is happening on the ground.
It's remarkable. You dial the clock back to the 30th of March, and you're down at the lows for the Nasdaq 100, and then you've seen the gains of 15 to 16% since the 30th of March for the Nasdaq 100. So So, and then historically, yes, 6 months later, 12 months later, you see upside on the back of a 12-day rally like that for an index like the Nasdaq 100.
Yep.
But is the president trying to jawbone in place a ceasefire? Is he overpromising? To the president's credit, we do have that ceasefire between Lebanon and Israel. That is consequential, and that is a key piece of the puzzle, clearly, certainly from Tehran's perspective.
Sure. Strait's still closed.
Strait is still closed.
Oil prices, physical, one thing, what's happening in the paper market, I don't know. Who's doing what within that paper market? What kind of a signal can you really take from it? Yeah. I hear what you're both saying about what the headline number says on further gains from here, but you look at the market internals, they are less good. You look at number of stocks making 52-week highs, you look at who's been buying. Is it just the CTAs? Is this just a positioning story? There's lots of different ways of reading the narrative that we're looking at here.
And are we seeing some dissonance between the different asset classes here as well? Because we see commodities, metals going higher, but not because everyone's optimistic about the global growth or the AI story. Aluminium, for example, and copper, well, aluminium in particular, is because of supply concerns. I mean, the LME, the industrial metals index on the LME, touching new highs. JP Morgan talking about a black hole in aluminium supplies, a serious and prolonged supply outage. And that is if the Strait reopens now, because there is damage to manufacturing facilities. So there are clearly some dots we need to join, and I don't know if we can join them.
Well, that's the point. There's a disconnect, isn't there, in terms of the rally that we've seen, that Guy's been highlighting for us, and the physical reality in terms of input prices, less access to commodities, and what that's going to do to margins. But so far, that isn't derailing this rally.
Shall we talk about something else that we're watching very closely this morning? In just less than an hour's time, we'll get the opening of the gilt markets. Now, this is a story that landed in session yesterday, so we have had some response to it, but it feels as if it's something that we need to keep under review. So gilt yields jumped yesterday. The rest of Europe, we saw yields dropping. The overnight news is Keir Starmer has fired his top Foreign Office official, and this comes after The Guardian has been reporting that the vetting process for Peter Mandelson was overruled. Starmer says that was by the Foreign Office. He says he didn't know until Tuesday. Whether that will matter in the end, we will see. But what matters for gilt markets, they are now starting to ask questions about his future, about that of his top team, and crucially asking questions about the timing of all of this, because we have local elections coming up in May. So if people want to make moves within the party, how do they think about the timing?
Do you wait until after May? Do you wait? Do you get the potential bad news of May out of the way?
And where will the global narrative be by then? And will that have the power to overthrow this? Who knows?
How much is already priced in terms of political risk to the gilt market? So, yes, we saw yields up about 5 basis points yesterday. Is this the first time, I think, when every single leader of opposition parties has called for the Prime Minister's resignation? James Walcock, who follows UK politics very closely for us, said this is the most dangerous moment for the UK Prime Minister that he's seen since he took office. How much is priced in? You do get the likes of PIMCO. They've been quite bullish on gilts, saying that a lot of that political risk is already priced in. Do we have to wait until after May? And how much of a shock could there be in terms of potential sell-off if you do get a more expansionary, heavy spending, higher tax leader of the Labour Party?
And that's what the gilt markets fear. I mean, Keir Starmer said the suggestion is he's going to speak on Monday. That feels a very long time away, doesn't it? But he's busy in Paris.
Reeve said yesterday she doesn't want to raise taxes again. Who would be her replacement? Who could be the next Chancellor of the Exchequer if Starmer were to fall? It's interesting because at the same time you've got the Bank of England backing away from rate hikes, or at least trying to talk the market down.
Yes, from having overdone it.
So you've got the sort of slightly counterbalancing factors in play here at the moment when it comes to the gilt markets. Best show on Netflix?
It's a political drama, isn't it? Netflix could do a whole series on this political drama. It's going to get written up at some point, isn't it? It's going to get scripted, Mandelson, Starmer, whatever the Prime Minister is. Netflix coming out with earnings. Actually, for the quarter that they reported on, it was a beat. It was the guidance for the current quarter, and again, it's a question of missed expectations. Expectations were pretty high for Netflix. They missed in terms of what they're guiding for the current quarter. Earnings per share forecast to come in at 78 cents versus the estimates of 84 cents. They talked about the missed merger. Didn't happen, of course, with Warner Brothers. The fact that they've learned from that. Is this now a Netflix that's potentially gearing up for some acquisitions? The quarterly results were also flattered by the payment they got from the breakdown of that deal. But this is, we're seeing the stock under pressure as a result of this. It's a company that's raised prices, and they didn't quite meet those estimates for the current quarter.
They feel that the fact they are able to raise prices, I think, is pretty interesting, despite the competition, and it's increasingly competitive streaming landscape, isn't it? But the thing that took my attention, of course, was Reed Hastings. He's been co-founder of this business, stepping down after 29 years. DVDs by post by mail is how this started. And I was just wondering how many around the desk might remember. I do remember. But yes, that's where the business started. But they didn't get Warner Brothers. But they're kind of saying that this change in management is not to do with the Warner Brothers.
Can I take signals away from Netflix? Are there macro signals I can take here? So, yes, they have raised prices, but the guidance now signals that actually they're going to be cautious going forward from here. Does that signal that they're worried that this is as good as it gets in terms of their ability to pass on price rises to consumers? Is there a macro signal that says basically the consumer is beginning to retrench a little bit, you're having to pay more at the petrol pump, and therefore maybe you won't actually pay more for your Netflix account? The two are probably two of the most kind of important things in people's shopping baskets, I suggest, probably these days. Does one offset the other? Is that what they're signalling in terms of the macro picture?
And if they can put prices up further than here, what does that mean in terms of the investment to get to that point, in terms of buying the rights of sporting products, for example, which is they're focused on? So where does the margin land in that story? They're going to have to ramp up investment if they want to keep the consumer, and if they want to push prices up higher from here. Could be one take that ties into that caution. We should mention, by the way, that Reed Hastings is on the board of Bloomberg Inc. So just disclaimer on that front as well.
OK, let's tell you what we've got coming up on the show. Kamal Sharma, Bank of America G10 FX strategy, is going to be joining us. Christian Muller-Glissman, Goldman Sachs Goldman Sachs Asset Allocation Research Head, got to get that right, is going to be joining us. And we've got a great tech conversation coming up as well. Simpro Group Chair and CEO joining us later. This is a conversation about lots of different things, isn't it, Tom? And it's about, but the kind of mythos story is sitting over all of what is happening in AI right
this
now.
is someone who sits in Miami in Florida, but has a business that has a lot of exposure to the UK, but has a background, more than 2 decades of background, working in cybersecurity. So that's the conversation we're going to be having in terms of what the risks are around Mythos, how it changes our view in terms of cybersecurity stocks as well, that have faced some pressure as a result of that partial release. Let's think about what else we are looking at throughout this Friday then. 10 a.m. UK time, we're going to get Euro area trade balance at 11 a.m. UK time. Keir Starmer, politically, of course, under pressure, will be meeting with his French counterpart Macron in Paris as they look to see what they can do around the Straits of Hormuz. IMF spring meetings continue, of course, in Washington, D.C. And later, the BOE's Breeden and Pill will be speaking. We're listening out to them. We've heard from Bailey this week suggesting that the market pricing around additional about potential hikes from the BOE may be a little overdone. And we're going to hear his Fed speak as well. Barkin and Waller will be speaking as markets essentially price in a Fed staying on hold this year.
Who knows? Yeah. You got two different options, basically. Kind of the Fed stays as it is until it's basically kind of dominates the agenda, or you get Waller coming in and you get a new Fed chair coming in. And as a result of things change quite dramatically. What else do you need to know this Friday morning? The US government is preparing to make a version of Anthropic's powerful AI model Mythos available to major federal agencies. Anthropic has, remember, limited the release of Mythos and has briefed senior government officials on the model's capabilities. US officials have previously urged private sector organizations to use Mythos to improve their cybersecurity. Hedge funds had a strong recovery in early April, recouping losses from the previous month as the temporary ceasefire between the United States and Iran has boosted sentiment. Sources say 0.72 asset management advanced 2.4 this month through April the 9th. Bloomberg understands the Millennium Management added 2.3 through April the 10th, while Bobby Jane's fund also had a strong start to the month, notching up a 2.4% return. The S&P is up nearly 8% month to date. I'm just going to point that out so you look at the signals on the screen in front of you with a little bit of context. And finally, Allbirds' surprising pivot from wool sneakers to artificial intelligence has hit something of a speed bump, with the stock closing down more than 30% yesterday. This day after it's had a near 600% surge. It is still up 350%. Over the last 2 days as well. For context, shares initially jumped after the company announced that its move to AI computing infrastructure would now take place. According to Vanda Research, retail daily net buying hit a record on Wednesday, surpassing even the company's IPO. I was
still confused by the time I read lots about this. Like, where is this AI infrastructure? Is it in shoes, or have we moved beyond shoes?
There are
no more shoes.
No more shoes. They're going to sell the shoes.
There are no more shoes. And I read some analysis saying this has the feel of a meme stock. And I thought, well, yes.
It's firmly in meme stock territory right now, isn't it? New Zealand wool, is that how they
Our New Zealand line producer is busy pushing this, but apparently we've moved beyond shoes. I don't think they make AI infrastructure out of New Zealand wool.
But this is what they want to do. So I'm quoting. So they want to pivot its business to AI compute infrastructure, with a long-term vision to become a fully integrated GPU as a service and AI-native cloud solutions provider.
I think the pictures on our screen are hugely misleading then.
Dated. So talking of history and kind of, we can take it back to the Netflix conversation. Do you remember the kind of run up to 2000? Just put .com after your name. Things are going to go well.
Yep. Yes.
Pet businesses, all kinds of other things.
Things get bought and people ask questions later.
Precisely. So does it have a feel of that?
Maybe a little.
Still up, despite the drop of, what, 30%? Was it 30% yesterday?
So it was up 600, and now it's still up 350. The last two sessions, it's up by circa 350%.
So do you think this won't be the last business to put AI in its name?
Well, there have been plenty already, but this is quite an extreme example.
But is it an example of irrational exuberance in the current market? Is the question?
Yes.
Right. Perhaps. We will follow with interest. Coming up on the programme, European leaders then are set to meet today to discuss setting up a naval force to ensure freedom of navigation in the Strait of Hormuz. Will it be enough to satisfy Donald Trump? Lots of conditions attached to that. We'll get the analysis. Plus, Barclays boss CS Venkatakrishnan says the lender is committed to expanding in the Middle East despite the ongoing war. We will bring you some of that interview later in the programme. Up next, we'll be joined by Tessa Mann, Multi-Asset Strategy Director at WTW. Is the market taking too much on trust right now? If you have questions, if you want to get involved with our conversations, IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have around 45 minutes to go on the opening trade until we get the start of European equity trading. And this is the futures picture right now. A little bit mixed, actually, fairly flat, waiting for a bit more news flow to back up what we've been hearing from the president. So let's get to that now. President Trump says the US and Iran could clinch a permanent ceasefire soon, and that talks between Washington and Tehran could resume this weekend. Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire starting at 10 p.m. UK time, a move aimed at easing regional tensions, of course. Let's get an update then. Patrick Sykes joins us, and he's been covering, of course, the latest in the Middle East. Patrick, very good to have you on the programme. So President Trump talking about not just the possibility of extending the ceasefire deal, but actually managing to get a full peace deal before the expiry of the current ceasefire. What do we know here?
Morning, yes. So the president's sounding extremely upbeat on the prospects there. He pointed to two things in particular. One, the opening of the Strait of Hormuz, obviously key for energy markets globally and beyond. And two, he referred to a statement that the US has received from Iran to the effect that it won't pursue nuclear weapons. I think it's worth mentioning that both of those things were, of course, the case before the war 6 weeks ago. So I think it remains to be seen, are we talking about a return to a status quo or a kind of substantively new arrangement between those two long-time enemies? There are some encouraging elements, though, on the ground. We saw the Pakistani mediators trafficking between Tehran earlier this week, and we expect Washington potentially today. That indicates there are still those messages moving in both directions. And the president also referred to the prospect of talks as early as this weekend, which I think will be key because that temporary ceasefire is set to expire on the 22nd earlier next week. So he sounds very optimistic that we could have some kind of deal, even perhaps, albeit vague, by then.
Yep. And we're kind of counting down to that moment now. Middle East breaking news editor Patrick Sykes, thank you very much indeed for the update. It was fascinating listening to the president kind of tying stock markets, oil prices, the deal that he thinks is coming out of the Middle East altogether. And certainly that has been a driving factor that we've seen this week. I keep using the word extraordinary because it is extraordinary. Massive gains this week in terms of what we've seen in stock markets. The Nasdaq in particular has absolutely surged. What do you make of this? How should we read this? Let's try and get some analysis now. Tessa Mann, Multi-Asset Strategy Director at Willis Towers Watson, joining us around the table. Good morning.
Morning.
What do you make of the price action this week? We've gone from kind of doom and gloom to euphoria in a kind of handful of sessions. What do I make of that?
Yeah, I mean, I think the market reaction clearly speaks to that more contained outcome that we may get from here in terms of the reopening of the Strait of Hormuz. If we look at the data at the start of the week, though, we saw PPI turning positive in China for the first time since 2022. Yep. We've seen inflation beginning to flow through in different markets, and I think that is quite key to consider in terms of the other scenario from here in terms of how markets may then react.
But it's felt like it's almost felt like it's the kind of the Pfizer moment in COVID. It's felt like it's the kind of the reversal when it came to the tariffs. The market has become preconditioned to these V-shaped recoveries. That if you blink, you miss it. Therefore, you have to chase it. Is that the kind of conditioning that we now see for markets, for equity markets in particular?
Quite possibly. I think that's a good question. I mean, I do think the markets at the moment are over-indexing to the latest headline to some extent, and that's possibly because it's quite hard to get, clarity on that fundamental on the Strait of Hormuz from looking at, say, the underlying data. So I think in this environment, it's really important that investors stick to their strategic asset allocation, add in inflation protection if that's appropriate for their portfolio, and remain indexed on the data where possible.
Just on the point and the analogies you gave around COVID and then around the tariffs, the consumer was arguably in better shape. There was more kind of fiscal response coming through. Even shortly back to the tariff moment, the consumer was looking more robust. The labour market was stronger. Is there a risk that we're setting ourselves up for a kind of value trap at this point in terms of how far things have run up and the mismatch between that performance and the reality on the ground in terms of supply chains?
Quite possibly. I mean, it's important to consider portfolios through a range of scenarios from here. If we look at the fundamentals at the start of the year, I mean, I would argue there were good fundamentals in the US. I mean, even PMIs coming out this week were still in growth territory in the US. So there is still, obviously, a very good chance of seeing a continued, expansion in, major global markets from here. But it is important to look at, potential deterioration if we did see a continuation of the
So what's your preference for inflation protection?
So I think, well, two things. First of all, it depends on the client type and the portfolios, of course. In terms of inflation protection, one thing that we're looking at is UK gilts and UK linkers in terms of how much has, hikes been priced in, particularly more recently. Outside of that, we haven't seen US CPI swaps rising as much in terms of what's priced in. So it kind of depends on the reaction function of the end investor to some extent.
Yeah, it's interesting, isn't it, Tessa? Because as we've been discussing, markets seem to want to put in these V-shaped recoveries, bounce off the bottom and go back to where they were, as if they want to recover very quickly. At the same time, we speak to lots of people, and you mentioned in your notes about how we're in some kind of new paradigm when it comes to geopolitics. Is that broader than just this war? Is that about higher inflation for other reasons as well?
Yeah, I mean, I think if we step back, to some extent, this situation is symptomatic of a broader new geopolitical paradigm. That is very difficult to price and to predict, and that's why, obviously, staying robust in your portfolio is kind of the most important thing to start with. But we do have major cross-currents as well. I mean, it's not too long ago that we were talking about artificial intelligence every day, and clearly that is still a very big and very material driver that investors need to consider.
Yeah, and how much is the conversation then when you're talking to investors and trying to steer them towards robust portfolios and sticking with plans rather than knee-jerk reaction to headlines, how much of the conversation focuses then on AI? Because that's what we were all about in January, February, before this started.
Yeah, I mean, it's still a very material, very meaningful conversation, and we are likely to see the economic gains of that broaden out over coming years. It's still something to very much focus on, and obviously we're coming into earnings season as well for some of the hyperscalers, so, another thing to keep an eye on.
And how's the earnings season been so far? Has it been living up to whatever expectations you had, Tessa?
Well, I think so far, yeah. I mean, it has roughly been in line, but I think really I'm taking a step back in this situation and trying to really look at the fundamentals, look at what's happening in the Strait of Hormuz, and look at what's going to happen kind of end of the year in terms of the oil prices.
You mentioned linkers, but also gilts in terms of inflation hedge. Do you buy gilts despite the political risk?
I mean, it's a big challenge, certainly. I think when I'm looking at what's priced in currently, markets are essentially looking at hikes for the Bank of England. At the start of the year, we had cuts priced in. Clearly, inflation's been coming down, and fundamentals are a bit softer. In terms of your question, I would question whether the Bank of England is going to hike into a slowing growth environment, even if we do get that
It's more
inflation.
Prime Minister resigns. How do gilts react?
I mean, that's always challenged, isn't it? I mean, we don't always see a clear comparison between, the sort of fundamentals on the ground economically and also the political situation. But I think it will come down to, do we expect there to be fiscal, fiscal restraint, I suppose. That's really still going to be what's pivotal, especially at the longer end of the gilt curve.
Tessa, thank you very much indeed. Tessa Mann, Senior Multi-Asset Strategy Director at Willis Towers Watson. There's a lot more coming up. We continue to monitor, of course, developments on the ground in the Middle East. But it's interesting as we think about the UK political situation and how gilts react to that. Gilts maybe as something of a hedge on the inflation scenario. And the markets are pricing in at least one hike from the BOE. But as you say, who knows?
What's going to drive gilts here? Is it going to be politics and what is happening around what Keir Starmer's future ultimately looks like? How do you trade it between now and the May elections? The 30-year was up hugely yesterday. You got 5.5 on a 30-year now, which is really challenging in terms of UK finance.
Yes, I think will gilt investors want to get a handle on, okay, who are the contenders? We know some names and get an up-to-date take from them on how they feel about debt and fiscal rules, and that might give a sense of where things
go
next.
Maybe that update, to your earlier point, doesn't come until May from those players and those individuals. Coming up, we're going to discuss what impact the Iran war will have on the era of dollar dominance. Kamal Sharma, Director for G10 FX Strategy at Bank of America, is here with a take. Stay with us. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome back. 30 minutes to go until the start of equity trading here in Europe this Friday morning. It's felt like a long week, hasn't it? There's been an awful lot of action. Right now, NASDAQ futures are a little soft. S&P absolutely flat. Picture here in Europe, certainly a little bit more negative, but not by much. After the rally that we've seen, it feels like we're maybe just pausing for breath this Friday, or maybe we're just gasping for breath. I don't know. It's either one of the two.
Yes, indeed, one of the two. Let's have a look at where we are on the bond market story then. We have European bond markets open, of course, without gilts, and gilts will be a focus for us in half an hour as we look for some reaction to the political story. We've already seen some reaction, but maybe we'll get some more as we watch that political story unfold in the UK. In the Eurozone, we saw a survey, a Bloomberg survey, Eurozone, the ECB set to hike rates in June as CPI forecast rises. That is the headline coming from the latest survey of Bloomberg clients, Bloomberg News survey. So that's interesting. We keep that in mind as we watch those yields go a little higher.
Yeah, also a factor, of course, in terms of how we think about currencies and the euro dollar. Deutsche Bank and Wells Fargo have joined a number of banks declaring that the dollar's war-driven haven rally is likely over. JP Morgan concluding recently that the greenback, quote, appears to be emerging worse off from the conflict. With us this morning for another perspective is Kamal Sharma, Bank of America's Director for G10 FX Strategy. Kamal, I want to start on the dollar then, and whether your view aligns with what we've been hearing from Wells Fargo and Deutsche, that now the worm has turned for the greenback, lower from here.
Look, I think, Tom, if you look at the price action as of today, what we have seen is a complete retracement of the dollar's rally post the start of the conflict. And that coincides with the SPX and VVIX all moving back to virtually pre-conflict levels. Now, the one thing that we've been keen to emphasize here is that April tends to be the worst dollar month of the year in terms of seasonals. And that may well be conspiring against the dollar at the moment. I mean, what we're looking at is a kind of a generic phase of a geopolitical crisis where we have the pressure on positioning right at the beginning. The market was long U.S. Treasuries, it was short dollars, it was long curve steepness. Those positions have been wiped out. The dollar short, according to some of the CFTC numbers, also has been wiped out. So therefore, within that context, it's very difficult now for the market to say, do we want to be long dollars against the backdrop of dollar debasement, of the larger fiscal issues that are likely to reappear and the challenge that poses to the central bank.
What do you think are the key drivers then, Kamal, for the dollar post-conflict?
So I think your previous conversation regarding some of the key themes at the beginning of the year were AI, it was Greenland, it was a number of other measures. I think looking beyond the conflict, it's dollar debasement. If you look at some of the market's favorite dollar debasement trades, gold and Swiss, they've both come under pressure. So it does seem that has very much been put in the background. Now, one of my favorite weekly indicators is Fed custodial holdings data that's published by the New York Fed. And what that's showing is that custodial holdings by foreign banks at the New York Fed continue to fall, and that's the lowest levels now since 2012. That may indicate two things. First of all, that dollar Asia is obviously Asian currencies against the dollar under pressure, and therefore Asian central banks are intervening. But also, I think it looks as if central banks are not necessarily rebalancing back into the dollar. You look at the COFA data, the IMF data, which showed another edging away of dollar reserve holdings. So those key medium-term structural drivers we still think are very much a reason to be bearish for the dollar over the medium term.
OK, so that's the dollar debasement story over the medium term. I wonder, stepping back, thinking about this structurally, Kamal, when we look at the role that the dollar plays in the global economy, it's possible to construct two different arguments, it seems, listening to people over the last few weeks from what's been going on in Iran. Some people say, look, dollar dominance is under threat from this war because those in the Gulf will be more inclined to listen to China when it says, you know, we want to build on the petro-yuan rather than petro-dollars. Others say, no, actually, the GCC countries are going to be more inclined to price in dollars because they need the US for security, and that has been proven. How does that argument stack up for you?
Well, I think ultimately, when you have a risk premium story, such as what we're seeing at the moment, which is a dollar risk premium story, everything is up in the air. You know, GCC area is still very much tied and pegged to the dollar. There's only one country in that region which wants to price outside of the dollar, and that's Iran. And therefore, at the moment, given the volatility in financial markets, I don't see any reason why we would expect a move away from the dollar from that particular region. I think what is more important for us is that we are in a more politically uncertain environment globally. And what that means is that investors are likely to be more cautious generically in terms of their attitudes towards holding dollar assets and their hedging decisions. Just, you know, we have a lot of conversations with our clients looking at their hedging decisions, and we've put out quite a lot of research that suggests that some countries that are more prepared to increase their dollar hedge ratios, notably in the Netherlands, that could well become a broader trend. And obviously, if the risk premium stays idiosyncratic to the US, I think the pressure on the dollar from the forwards market will continue.
OK, so it's all up in the air, and you don't sound as if you see a big shift coming. If we do see a declining role for the dollar, though, by some margin, which are the other currencies that you're watching to step in, Kamal? To what extent the yuan and the euro and others?
So, and I think one of the biggest focuses that we've had is what we call the bifurcation of reserves. That's not necessarily a dollar shift to the euro or to the yuan. If you look at the IMF data, what is actually happening at the moment is that you're seeing the edging away of dollar reserve holdings benefiting what we call other currencies. They are not broken out into separate currencies like Aussie, CAD, sterling, yen, and yuan. So these countries include the Scandinavian strong fiscal, some of the more liquid Asian currencies, Singapore, Korea, and some of the more liquid Latin American currencies like Brazil and Mex. So what central banks and global central banks are doing is rather having a broader portfolio of FX reserves rather than a straight portfolio allocation shift away from the dollar and into perhaps the euro or the renminbi.
Come on, good morning, it's Guy. Stephen Myron yesterday said he would favour 3 to 4 cuts at the Fed this year. If Walsh comes in and delivers anything close to that, how's the dollar going to react?
So we're really entering into policy credibility, policy mistake arenas here. And the key to this is going to be what happens to the labour market. And if the labour market shows enough signs that it is slowing, and certainly this week's ADP numbers did not hint at that, the challenge is that do the markets believe what the Fed is doing is credible enough? And the way that we will gauge that is the back end of the U.S. rate curves. Are inflation break-evens increasing? Is the curve steepening yet again? So I think really what we're focused on, and we don't share that view that 3 or 4 rate cuts are needed. We're still on the view that there'll probably be 2 rate cuts, is whether the data justifies it. We look at something called the Taylor rule, which is a policy framework. And actually, according to my numbers, what you see is that U.S. policy rates are actually about where they should be at the moment.
So, but you still see 2 cuts this year?
Yes.
And let's say the data, let's say the inflationary impulse continues to come through from what we're seeing in terms of higher gas prices, higher aluminium prices, whatever it is. Is the bias, do you think, to take one of those cuts away? Do you think the risk is that we get less rather than more? So I'm assuming that you think the risk is that we get less rather than more.
Well, I think the key here is the rates of change, right? The Fed is a dual.
Wow. Thank you, Lee. He's easy. Isn't he great? That's such a great opening. Well, we love you, too. We got a lot of people here. We got a lot of great people here. Thank you very much, and thank you for allowing me to win this state by so much. It was... I wouldn't say the competition was the toughest, but it was competition nevertheless. And we appreciate it very much. And we're going to be talking about no tax on tips. We're also talking about the fact that everybody is looking at their tax return. They're getting tremendous amounts of money back, much more than they thought. So, but it's great to be back in a place I love, Las Vegas. Did a lot of business here. We had great success here. Before politics, it was fantastic. And this is the birthplace of a little idea known as no tax on tips. This is the birthplace. A young waitress came up to me during dinner and she said, "Sir, we should have no tax on tips." I said, "What?" Say it again. "We should have no tax on tips." I said, "That's the greatest thing I've ever heard." I walked outside to the fake news media. I say, "Ladies and gentlemen, there will be no tax on tips." That was it. It was not an expensive consultant. Las Vegas is the home of the largest concentration of tipped workers anywhere in the country, anywhere in the world, actually. And thanks to our tax cuts this week, thousands of Nevada waiters, waitresses, casino dealers, bartenders, bellmen, barbers, caddies. So I love those caddies. They're very good if you have the right caddy. And valets receive the biggest tax refunds of their entire lives, and you see it. And I just want to say you're welcome. You're welcome. No, it's all over. There's so many, even in the fake news, where they have these different. You always want to watch the enemy a little bit. You don't want to watch too much. You want to find out where they're coming from, and they come from dark places. But even there, people are saying, wow, this is really amazing. It's a great, big, beautiful bill that came in. And, we should call it the great, big, beautiful tax cut bill, because that's really what it is. Other things also, but regulations. But it's really, the tax cuts are enormous. So it's just such an honor. I want to thank Secretary of Treasury Scott Bessent for joining us. Scott. He's become a big star. He walks down the street and the people are screaming, Scott, Scott, can we have your autograph? I mean, what I did, I created a monster. He's a monster now. That's terrible, but he's doing a great job. Along with Senator, look at Tommy. Where's Tommy Tuberville? Where's Tommy Tuberville? Tommy, the great Tommy Tuberville, Senator from Alabama. Thank you, Tommy. Nevada Lieutenant Governor Stavros Anthony. Thank you, Stavros. Clark County Commissioner April Becker. April. Thank you, April. Thank you very much. State Senator Carrie Buck. Thank you. Thank you, Carrie. Assemblywoman Lisa Cole. Lisa, thank you. We have a lot of power here today, huh? This is big stuff. And many others. We have a lot of people out there. I better not name them all because, we're in all these. Look at all the television back there. Isn't that terrible? So much. Last summer, thanks to our Republican majorities in the House and Senate, I signed the great, big, beautiful bill, the largest tax cuts and many other things for working families in the history of our country. It was actually, we added about 19 different bills. We were going to do one at a time or maybe two or three, but I said, let's just do them all at one time. And thank goodness we did, because the Republicans are out there fighting hard for a lot of good things, like no men and women's sports, like no open borders. We have the safest border we've ever had. We have the safest communities. We have the best records. One thing that's always tough to say because it sounds sort of weird, but we have the least number of murders that we've had in 125 years, all the way back to 1900. Doesn't sound nice. There's no nice way of saying that, but it's back to 1900. But every single American at every income level has more money in their pockets this week because of the Republican tax policies. And we got to win the midterms. If we don't, these policies are going to be taken away from you. The taxes are going to go through the roof. Look at these. Look at the states, these blue states, what is going on there with taxes. Look at what happened in Virginia. A person, we had a good governor there, and somebody got elected that she's gone crazy. She's gone totally crazy. Look at New York. I mean, he's a nice guy. Calls me all the time, says hi. But his policies are no good. He's chasing people out and causing a lot of harm to everybody. I mean, everybody's taxes are going through the roof. After 4 long years of brutal inflation under Biden and congressional Democrats, you deserve every single penny that you're getting now because you had to suffer. You suffered. We had the highest inflation in the history of our country under Biden. Sleepy Joe. He's the worst president we've ever had by far. Average refund. The average refunds this season's over $4,000. And here in Las Vegas, many workers have reported refunds of $5,000, $6,000, $7,000, $8,000 or more, and they've never had anything. It's all from no tax on tips alone. So, and then don't forget, you have no tax on Social Security for our seniors. A lot of seniors out there. And you have no tax on overtime. This state covers them all. You have the seniors, you have the overtime, but you have no tax on overtime. You have no tax on tips, and you have no tax, think of it, Social Security. So those three things. And, one other thing that we have that nobody talks about, but we've done a lot in the bill. If you have a small business or if you have a farm, you have no inheritance tax. You have no death tax. It's a big thing. People go out and they would borrow money, especially the farmers. I mean, they go out and they leave their farm, and the farm is valuable, but not a lot of cash. They live good. They wouldn't trade anytime. And they go out and they get a bill for taxes for the farm. The parents leave the farm to the children. The children go to the bank. They borrow a lot of money. They mortgage up the farm, and they end up losing the farm. They go bankrupt. They commit suicide in many. It's a horrible thing that went on. You have no death taxes now. You have no inheritance taxes. And seeing his take-home pay skyrocket, a bellman at the nearby Paris hotel reportedly said words that no one has ever uttered before. God bless the IRS. Can you believe it? I've never heard that before. We have to patent that. We have to do something. Earlier this week at the White House, I met a wonderful woman named Sharon Simmons, a grandmother driving DoorDash to help support her husband's cancer treatment. She's got serious cancer. He's going to be okay, I think. Sharon delivered McDonald's to the Oval Office. It was a little bit of a, to be honest, it was a little tacky. They come up with these crazy ideas like McDonald's, although that was the biggest ever on Google. They say #1 ever. And the garbage truck. I mean, we do these things in politics. They're a little embarrassing. They're a little tiny embarrassing, but we do them, and you win by landslides. It's one of the. So we got to keep doing them. No, we got to knock on the Oval Office door. This did not happen. That's the first maybe in the history of the Oval Office. And it was a very beautiful woman standing there with 2 big bags of McDonald's hamburgers. And I say, is this really believable? But the point of it was she made $11,000 that she had no idea was coming. And it was really great. It turned out to be really great. So as part of our tax cuts, we also included no tax on overtime. And, one of the things, though, that I think is so great, we have something that's never happened before. It was an idea that I thought up. I went to Scott. I went to some of our people. So when rich people do something, they always look for deductions, right? It's always deductions. They have deductions and everything. And middle class and middle income people, poorer people, they don't think in terms of deductions. So I said, you buy a car that's American made, give a deduction on the interest you pay on the loan that you used to buy the car. And everyone said, oh, that's good. It sounds simple, but it's never been done before. And you have that too. So when you go out and you take a loan on your car, you deduct the interest. It's a big deal for people. Never happened before. You would think it was sort of basic. I thought it was so brilliant when I thought it. But the truth is, it never happened before. And nobody mentions it, but it's a very big factor. And it's having a huge impact on our car companies, which are expanding like never before. We're selling more cars now. A lot of it has to do with tariffs. You pay no tariffs if you come here. If you don't come here, you pay a lot of tariffs. And we're raising those tariffs very soon. And not on you. It's on people from the outside that don't build their plants here. We have now hundreds of billions. We have actually $18 trillion being invested in the United States because of a lot of reasons, but because of tariffs. Because of tariffs. If they sell their product into our country, they have to pay tariffs. If they make that same product here, they don't. So they're coming in. I'll tell you, pharmaceutical companies are coming in at levels that nobody's ever seen. We're having our drugs made here, our prescription drugs are being made here, which is something that's very important. So our tax cut for overtime workers have already been claimed by more than 26 million Americans, and America's finally had the president, the kind of president who believes in them. I believe in rewarding you for the great work you've done, the great job you've done, and for having to suffer for 4 years of embarrassment. Our country was an embarrassment. Our country, a year ago, our country was an embarrassment. And all over the world, they laughed at us. And they don't laugh anymore. They are not laughing. They're not laughing anymore. I don't think anybody, just ask those. I don't want to be a wise guy. I don't want to speak too soon. But we do very well. You notice that we're doing very well. And I will say the war in Iran is going along swimmingly. We can do whatever we want. And it should be ending pretty soon. It was perfect. I mean, it's perfect. It was the power we have, our military. We have the most powerful military anywhere in the world. I built it 4 years, my first 4 years. And we're still building it. We're building it. We have the best military. We have the best equipment in the world, the best rockets and anti-rockets. You know, if you look at the way we shoot, you know, we had 111 rockets shot at one of our ships. I won't name the ship, but it was a beauty. And out of the 111 rockets shot, all 111 rockets, and these things move at about 3,000 miles an hour. You know, it's not like, oh, gee, we have plenty of time to think about it. Every single one of them, 111, were all shot down. Think of that. Shot down. They're laying at the bottom of the sea. So needless to say, it was a ship that they were shooting at. But we've had it. We had 101. We had 101, and then 2 days later, we had 111. Every one of them was hit. That's the equipment that we have is incredible. There's never been anything like it. So in addition to no tax on Social Security, over 51 million seniors now pay. Seniors are loving me, and I love them. Of course, I'm not a senior, so I cater to the seniors, but I don't happen to be a senior myself. Thank you very much. Over 51 million seniors now pay zero federal tax on Social Security income. 51 million. And they never saw that happening. And when I went to him and I said, how much would it cost for about 50 to 60 million seniors not to pay tax? He said, sir, are you kidding? This was Scott. I said, let's do it. Go ahead. And you know what's happened? The economy is doing so well. By the way, we had to do a little journey down to Iran. And I didn't want to do that, but we had to because we can't let them have a nuclear weapon. Can't let them have a nuclear weapon. And, you know, we just hit 50,000 on the Dow. I don't know if you people know what that means. 50,000 on the Dow is unthinkable. They said at the end of his fourth year, maybe, but more likely fifth or sixth year. My fifth or sixth year. That sounds good, too. But remember, you know, the hat says 4 more years? It drives the Democrats crazy. It drives them 4 more years. 4 more years. I have to laugh at that one. They go crazy. What a bunch of lunatics they are. You know, we want to get along and we want bipartisan, but after a while you say these people, they're just, you know, they don't want to pay our ICE agents. They don't want to pay our security people. This was Scott. I said, let's do it. Think of that. Shot down. They're laying at the bottom of the sea. So needless to say, it was a ship that they were shooting at. But we've had it. We had 101. We had 101, and then 2 days later, we had 111. Every one of them was hit. That's the equipment that we have is incredible. There's never been anything like it. So in addition to no tax on Social Security, over 51 million seniors now pay. Seniors are loving me, and I love them. Of course, I'm not a senior, so I cater to the seniors, but I don't happen to be a senior myself. Thank you very much. Over 51 million seniors now pay zero federal tax on Social Security income. 51 million. And they never saw that happening. And when I went to him and I said, how much would it cost for about 50 to 60 million seniors not to pay tax? He said, sir, are you kidding? This was Scott. I said, let's do it. Go ahead. And you know what's happened? The economy is doing so well. By the way, we had to do a little journey down to Iran. And I didn't want to do that, but we had to because we can't let them have a nuclear weapon. Can't let them have a nuclear weapon. And, you know, we just hit 50,000 on the Dow. I don't know if you people know what that means. 50,000 on the Dow is unthinkable. They said at the end of his fourth year, maybe, but more likely fifth or sixth year. My fifth or sixth year. That sounds good, too. But remember, you know, the hat says 4 more years? It drives the Democrats crazy. It drives them 4 more years. 4 more years. I have to laugh at that one. They go crazy. What a bunch of lunatics they are. You know, we want to get along and we want bipartisan, but after a while you say, these people, they're just, they don't want to pay our ICE agents. They don't want to pay our security people. They don't want to take care of our border. They want to have open borders for everybody. They want to have men playing in women's sports. Think of it, men playing in women's sports. It's got to be a 95-5. Maybe it's a 99-1 issue. And they still, I saw a guy today on television, a Democrat that I know. He's trying to justify men playing in women's sports. He's trying to justify open borders. No, we can't let them back in. They'll destroy the country. They'll destroy our country. But millions of retirees like those here in Nevada, and it's a very important word, Nevada. Don't ever say the other way. I'm not going to say it because they'll say it. I won't say it the other way because they'll put it, he said, you lose the whole state. Yeah, I don't know. It sounds pretty good the other way, to be honest with you. Some people, but Nevada is beautiful. And seeing an average deduction over $7,500 this year, which is incredible. The great big beautiful bill is filled with tax cuts Americans are only just beginning to discover. So the tax cuts turned out to be larger than anybody thought, even us. I mean, we didn't think it was going to be as much, but people are getting much more. It's come from that. And the Democrats don't know what to do because they used to ridicule it, the great big beautiful bill. And now they're saying, don't mention the words. Just don't talk about it because it's been great. But we got to keep it. We have to win the midterms. We virtually eliminated the so-called, so many taxes. We have like 19 different taxes in all different forms that we eliminated. And we dramatically expanded a thing called school choice, which is a big deal, We made homeschool expenditures, the homeschoolers. Do we have any homeschoolers here? Right? Very good. Congratulations. Homeschool expenditures tax deductible. We created the brand new Trump accounts with Michael and Susan Dell. The Dell family. They're great. What a great family. But he put up $6.25 billion. Namely, he did a good job in life. He's putting up more. He came to me with the idea with some of his friends. His wife is fantastic, by the way. And he said, these accounts where children will grow up, and by the time they're 18 or 20 or 21, they could have $100,000. I mean, they may be poor, and they'll have $100,000. What a big difference. So I just want to thank the Dell family. It's great. Buy their computer. I said, how did you get so rich by doing computers? He said, well, in college, I was good at computers. I'd just sit on my bed, I'd make computers, and people would buy them, and he never stopped. Sort of an amazing story if you want to know the truth. But we have a $1,000 contribution for every newborn child. Think of that. 5 million have already been opened. It's been incredible. People are going out there doing it. Some are buying it from many other children. Some are taking some richer people are taking lots of people under their wing. We have one man that took the state of Ohio, and he's obviously pretty rich, and he's made the contribution on behalf of so many children. It's really turned out to be amazing, actually. And we made interest on new car loans deductible, which I told you it's a big deal. I think it's really something, but only if it's made here, and that's only if it's made in America, and we're proud to see it being made in America. We used to have, when I was growing up, it would say everything made in America. It meant it was better. And then over the years, it disappeared. We brought it back, and we make great products now. Today, when you see made in America, it's, generally speaking, I think it's a better product. This tax season, over 1 million Americans already deducted their auto loans and their auto interest. Think of that. And they're saving a write-off. They're having a write-off of over $2,000, sometimes much more. And you get a full write-off. It's pretty amazing. Together, these brand new cuts and deductions in the Republican bill have been claimed by nearly half of all tax filers. So in one form or another, more than 50% have taken advantage of the things that we put into the bill. By the way, we have a lot of other things other than that. We have incentives. We have the expensing for businesses, and the expensing is such a big deal. You have a business, you're allowed to deduct it immediately as opposed to over 38 years and other things. And to me, that's one. We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now. And despite our little diversion, despite our little diversion to the lovely country of Iran, lovely place, but we had to do that because otherwise bad things could happen, really bad things. So we've sent out, and I think you're going to see some incredible results, you know, for those people that question it. You're going to see some, the job we've done has been amazing. The ships are out there today, and they're saying, don't come here, don't even think about it. And you have these massive tankers saying, let's get the hell out of here. It's amazing. It's amazing. But we've sent out $30 billion more in refunds than at the same time last year, and employers who adjust their withholding levels now will see an immediate surge in their take-home pay for the remainder of 2026. You're going to see a big surge. The numbers are really tremendous, and that's why I'm out here. If they were bad, I wouldn't be here today. I'd be sitting home watching television, I think. We can never forget that every single radical left Democrat in Congress voted to deny the American people these life-saving changes. They voted for tax increases. They wanted your taxes to go up. I've never seen it before. You know, all my life, I've been sort of always interested in politics. Never did it before. I decided to do it a little while ago, not too long. But I've never seen it before. It always was, I'd watch politicians for 30 years, 40 years. We will lower your taxes. We will lower your taxes. These are the only people, the Democrats now, the modern-day Democrats. We will raise your taxes. And I just don't think it's winnable. I don't know. Maybe I'm a little old-fashioned, I guess. But they voted for the largest tax hike in history. The Democrats just voted for the largest tax hike in history. Democrats in Congress caused this, you know, the inflation, the fake news gets on me. You know, I have to be very accurate when I speak because they'll say, he's exaggerated. So the real number is 48 years. That inflation's the highest in 48 years. I don't believe that. I think it's the highest in history. But they say, he said history, and they say, but I'm okay with 48 years. 48 years is long enough. What do you think? But the real number they say is 48 years. I believe it's the highest inflation, and they caused it. And they then wanted to raise your tax. So their tax raise that they wanted was more than $5 trillion, which to each person is probably about $4,000 or $5,000. And they wanted to raise your taxes. The great big beautiful bill also slashed taxes on millions of American small businesses, including restaurants, dry cleaners, corner stores. What is a corner store? I've never heard that term. I know what a corner store is, but I've never heard it described, a corner store. Who the hell wrote that, please? And more. As of today, over 12 million small business flyers have paid nearly $7,000 less in taxes. So on average, your small businesses have paid about $7,000 less. That's a lot for a small business. In large part, thanks to our cuts today, the economy is booming. Our economy is booming. You know, you don't read about it. You don't see it so much because of what's going on in Iran, which is really, you know, it's been 2 months. I mean, 2 months. You've been in other wars for 18 years, 4 years with me. I'm in there for a month. Well, he said he'd get out a month. Did you see where I did a list last week? 17 years in Vietnam and 5 years in Afghanistan and more, much more than that, and all these different places. And I said, we were in there for 2 months. And you know what? We're going to have victory very shortly. This is not... And against a very tough, smart country. These people were fighters. And, you know, I don't want to claim it before the fact, but they have no Navy left. 158 ships at the bottom of the sea. 158, think of it. 158. I got angry. I said, why didn't you save them? We could have used them, you know. They would rather shoot them than save them. I said, what the hell? It's only money. But some of them were good. They had one named the Soleimani. You know what the Soleimani? We took him out. He was the worst, one of the worst terrorists in the history of this country, this world. They killed many of our people. Many of our people have been killed. When you see a young soldier mostly going around without legs, without arms, with their faces so badly injured, it was Soleimani that did that. The roadside bombs, they were just terrible. He was the father of the roadside bomb. We killed him. And that had a big impact on Iran. That had a big impact on Iran. Because he was, I think it maybe would be a different story if he were around. I mean, he was a horrible person, a horrible human being. He was a mad genius, but it probably would have been more difficult. We still would have won by fast, but it would have been not probably as fast as it has gone. In the report released last week, core inflation was down to the lowest level in 5 years, and very shortly we're going to be probably 8 or 9 years. Don't forget, we're having some fake inflation because of the fuel, the energy prices, which everybody said was going to $250. We were talking about that, Scott. They said $250, $300. I mean, today, what was it? It finished at $89 or $90, right? And that's in the, we haven't settled yet. Maybe we won't, but I think you're going to be pleasantly surprised. But think of that, how well we're doing, and we have this. A lot of people thought that inflation would be through the roof and the stock market would crash. Well, we just hit an all-time new stock market. So it's amazing. I had people, we have consultants, great guys that we both know, we see, and they're very talented. Sir, if you do this, fuel is going to go to $300 a barrel, right? One guy in particular who we like a lot. But I said, I don't think so. I think we're going to be good. We always find a way. You got to find a way. But, sir, don't do it, sir. $300 a barrel. It's going to be a wild thing. It's going to be horrible. The depression is going to happen. Well, it's not going to happen because we just hit a brand new all-time high. Then fuel's at 89. It's actually a lot lower than that in a lot of areas. So, but let's not get away from, let's see what happens over the next week or so. I think you're going to be very impressed. And if you are, vote for the Republicans in the midterms, okay? But the king of Saudi Arabia, a very smart guy, invested $2 trillion. We have Qatar, we have UAE, Saudi Arabia. The king of Saudi Arabia, they invested trillions of dollars in our country. And he said to me a year and a half ago, I was with him, he said, 2 years ago, you were a dead country. Everyone thought America was finished. We were a laughingstock with a president that couldn't walk up a flight of stairs. He was so horrible. I mean, it's not even funny. It's like he was horrible. He allowed 25 million people into the country, totally unvetted and unchecked. And, that's a tough, we're still getting them out. And we had 11,888 murderers, 50% of whom murdered more than one people. Let into our country. They emptied their jails into America. But the king said, 2 years ago, you were a dead country, and now you're the hottest country anywhere in the world. Look at us. We're the hottest country in the world. So, pretty good, right? So, to talk more about these incredible things that are happening, I'm going to ask really a respected guy, a great guy, too. He's difficult, this guy. He's difficult, but he's great. And, when he speaks, the whole market gets soothed. When I speak, the market goes a little jittery. And they say, Scott, go out there, clean it up for me, Scott. But no, he's a fantastic guy. And, Scott, you're going to say a few words. And then we're going to hear from a few of the people, the Las Vegas Metropolitan Police Officer, Cruz Littlefield, the co-founder and CEO of a local nonprofit called Power to Parent, Erin Phillips, a bartender and makeup artist, Erica Cassell, and a longtime culinary worker, Nicole Williams. And then we're going to hear from a few others. We're going to go pretty quickly. But, Scott, you want to say a few words, please? Thank you.
Yes, sir, and thank you. And, Mr. President, it's an honor of a lifetime to be part of this administration. And I thought that your supporters here would like a little behind the scene of your incredible first year. This administration has gotten more done in the first year, and let me tell you how that happens. I remember going to see the president February 2024 at Mar-a-Lago, candidate Trump, and he was talking about no tax on tips. He said he'd been out here, and he had the idea, no tax on tips. Service workers should keep their tips. Fast forward, July 2025, the working family tax cuts, the one big beautiful bill, gets passed by Congress, and here we are, April 2026, within 24 months, President Trump's idea became the law of the land, and we are seeing record tax returns, and the people of Nevada, the people of Clark County, are way higher than the national average because of no tax on tips.
Thank you.
President Trump's policies are reviving the American dream. Yesterday was tax day, and under President Trump, we are celebrating how much more money hardworking Americans will keep, not how much the government will take. Thanks to President Trump and congressional Republicans, the working family tax cuts helps every American chart their own path. Throughout this tax season, I have heard from American workers, families, diner and restaurant owners, bartenders, waiters and waitresses, and communities across the country, and it is clear that workers and families are feeling the benefits. The administration is upholding the foundational principle that hardworking Americans should be rewarded with the fruits of their labor, not punished by tax hikes. And this tax season proves it. In households across America, 53 million filers had taken advantage of at least one of the president's signature tax cuts: no tax on tips, no tax on overtime, enhanced tax relief for our great seniors, and the ability to deduct interest on new car loans if it's an American car. And this is the refunds and the tax cuts have exceeded our expectations. Here in Las Vegas, millions of hardworking Americans have benefited, and I want you all to remember, every single Democrat voted against this program. So more than 6 million filers have taken the advantage of no tax on tips, 25 million filers, no tax on overtime. And this is what happens when policies are made for workers and not for DC. And also, as the head of the IRS, I want to also tell all of you two things. Go to trumpaccounts.gov if you have not registered your children for Trump accounts. It's very easy to remember, trumpaccounts.gov, and fill out form number 4547. For those of you who have children born during President Trump's term, Treasury will seed that account with $1,000. For those of you with children under 18, you can add to those accounts. Great philanthropists like Michael, Susan, Dell are adding to that. And the other thing, too, is I want to remind everyone, change your withholding. If you're getting a big tax return, a big tax refund this year, it's because you didn't change your withholding last year. If you change your withholding now, you'll get an automatic raise in your real income. Your weekly, monthly income will go up right here, right now. And I just want to thank President Trump for championing this program, because I can tell you, some of the more traditional Republicans on economics didn't want this to be part of the program. President Trump fought for this the whole way, and this is why we have a new, bigger Republican Party. It's because of policies like this. So thank you all.
Thank you. Thank you, Scott. Before I introduce, I just want to say two things to me very important. So right now in this country, we have more people working than at any time in the history of our country. Think of that. And also, that's pretty good. And, while in Europe and a lot of other places, they're looking for oil, they're looking for gas, they want gasoline, they're having a hard time. We have a lot. So at this moment, right now, we have more oil production than Russia and Saudi Arabia by far. Russia and Saudi Arabia put together, if you add them up together, and by next year, it will be double that amount. So it's pretty amazing. Those two facts. More people working than ever before. Las Vegas Metropolitan Police Officer Cruz Littlefield, please.
Mr. President, thank you so much and welcome to Las Vegas. My name is Cruz Littlefield. I'm a local police officer and a Las Vegas native. I have a deep appreciation for the city and have made it my calling to now protect and serve those who also call it home. With the passage of the great, big, beautiful bill, my wife and I have benefited from the elimination of taxes on overtime, allowing us to stretch every dollar in an increasingly expensive world. With less financial stress, I'm able to be a better and effective asset to my community and more present with my family. We also just welcomed our newborn baby girl a week ago, and have already contacted our CPA to make sure that the Trump account gets started and set up.
That's good. That's great.
Thanks to you, we're now securing her a better financial future than we were ever given as kids. Mr. President, thank you for your time. And thank you for your continued efforts to support the American people, especially here in Las Vegas. I have family and friends. This is my brother.
Oh, good.
But I have family and friends in Las Vegas who are barbers, small business owners, bartenders, and first responders. And every burden lifted for them is a step towards a stronger and safer community. So thank you.
That's great. Thank you, Cruz. Good job. Good job. The co-founder and CEO of a local nonprofit doing really well called Power to Parent, Erin Phillips.
I'm right here, actually. Hi. I'm Erin Phillips. It's an honor to be here as a mom and a founder of this nonprofit organization. We believe that empowered parents protect kids. And so everything we do flows out of that idea. And as a mom of 5, this is deeply personal to me. It's not just something that, I talk about regularly. We've seen so many families, especially in our community, that feel outmatched by systems. And so what we do is we try to empower them to advocate for themselves through policy and really just help with their children's education in general and any issue that is a parental rights issue. So that's what we do. And I just want to thank you for what you've done in regards to protecting women's sports. We know that, when we protect women's sports, we're really protecting the opportunities that our daughters have. And I have daughters myself, and so it's so important. And so many girls have already been hurt. So thank you for what you've done on that level. And then, it also helps them know that they're worth protecting and that they matter. And I think that's something that we haven't shown our girls prior to this. One more thing that I just really want to highlight is the federal tax credit scholarship. And I just need you to know that this is a game changer for families and who feel stuck. I think oftentimes we have these families that I already mentioned that they feel outmatched by systems and they are stuck in a system that is not working for their child. And so what this scholarship does is it expands education freedom and it gives parents the power to choose the right education for their children. And families that we serve in our community, it means hope, it means access, it means a future for their children that they otherwise wouldn't be able to afford. And we are already preparing to help families access this money here in Nevada. So thank you for that. And lastly, I just want to say that I'm grateful for your leadership because you recognize the critical role that families play. So thank you so much.
Thank you very much. Great job. Thank you. Thank you, Erin. Good job. Thank you very much. Bartender and makeup artist Erica Cassell.
Hi, President Trump. I'm a makeup artist and a bartender here in Las Vegas. I just wanted to say thank you for all you've done for us. I know as a bartender, the no tax on tips is amazing, especially, I'm going to start crying, guys, expecting mom. It's great for my daughter as well. The Trump account's also amazing, so thank you so much.
Thank you very much.
Get rid of all of the, why don't we get rid of everyone? It'll just be us, the producers, talking.
And that's going to get reflected in the cloud businesses.
Yeah.
I mean, we know the private companies on the application side, the model side like Anthropic are doing very well. But with the public companies, the AI infrastructure would be the thing to watch.
Is a beat and a raise enough? NVIDIA hasn't hit a new high since October. The numbers in that period have been very good. Is a beat and raise enough to get NVIDIA moving? Is a beat and a raise to get some of these other stocks moving? Microsoft's gone down quite a lot. Yes, it's had a little blip higher, but What do these companies need to do to get the market back on side?
So clearly, they are being held to a higher bar in terms of beat and raises. And you're right, NVIDIA hasn't moved. But that's partly because how well Anthropic has done. And Anthropic is tied to the Google GPU ecosystem. So the market is perceiving NVIDIA really has a big challenge on its hand when it comes to all the deals that Anthropic is doing and Google GPUs ramping up. And they are probably thinking in the out years, NVIDIA's growth may not be as strong as it's currently reflected in the consensus. But in terms of the overall AI market, it's still very strong despite all the macro headwinds that we have seen. And, you know, a company like Anthropic adding $9-10 billion of revenue in 1 month, that's huge. That's a nice, very nice tailwind.
And they're slowing themselves down, aren't they? With Mythos, they have released it only to a handful, really, of customers, and that is intentional, and that's because of its power. So help me understand something, Mandeep, because this has been bothering me. How do we ever get to a point where they can release this just widely into the market? Because they've released it to what they call defenders first, so that they can protect themselves from attackers. But what about all those small businesses that won't be able to protect themselves, won't get that early release?
Well, Anthropic was designated as a supply chain risk in the U.S., so they had to do something to really, I think, kind of get on the right side of the government when it comes to, you know, highlighting the security risk for a model like this. And I think that will certainly help them with that situation. And look, over time, given the supply constraints there are on the compute side, it's probably a better thing that they're not releasing the model, because what's the point if you release the model and you don't have the compute to serve the model? So this kind of allows them to get more compute, and when they're ready, they can roll it out to all of their customers.
Okay, so it will go out widely at some point.
I'm sure it does. I mean, they want to maintain that lead over the other frontier model players.
How constrained are the frontier labs right now by that lack of compute? And does that constrain the scaling laws that they've been relying on?
I mean, every company that you speak to right now wants to allocate more budget towards, you know, AI compute. And in some cases, I think Uber said that they burned through their entire year of budget in 3 months. And now they have to allocate more budget for these tokens. So from that perspective, you have seen a significant step up in how these frontier model companies are charging for their tokens and how much revenue they have added. Now, will that continue at the same pace? Yes, it may slow down a little bit, but there's no doubt that right now the demand is insatiable when it comes to using coding agents and some of these use cases that these models are exposing.
So we are confident that all the money that is being put into data centers at the moment is going to deliver the kind of rate of return that is currently priced in.
Well, I mean, look, these are long-term assets. So you are buying a chip, you want to monetize for the next 5-6 years, and we know NVIDIA will keep releasing their new architecture. So right now, the supply-demand mismatch is such that even their previous generation GPUs are seeing a step up in rental prices. Now, will that carry through? My guess is yes, at least for the next 12 to 18 months. And we'll see how much the supply catches up to demand in that time period, and that will determine what the rental prices are going to be down the line.
Mandeep Singh, thank you very much indeed. Global Head of Technology Research at Bloomberg Intelligence.
That build-out's going to need some energy, isn't it? Let's have a look at Alstom and the share price there. The good news for Alstom is it's paired its loss, but it's only paired it to 29%. This after the company, of course, the train manufacturer, withdrew its financial guidance for the fiscal year, citing slow progress on some of its key rolling stock.
So I'm another company. The world is in chaos at the moment. I'm thinking about withdrawing my guidance. I look at this. Do I want to withdraw my guidance right now and look at this kind of market reaction? I'm going to think maybe of a different plan. OK, coming up, the UK and France will host a summit to secure the Strait of Hormuz and attempt to silence US claims that they are not doing enough. We're going to talk about it next. This is Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Happy Friday. This is the opening trade. We're 30 minutes into the Friday session. You're seeing a market looking arguably for more information out of the Middle East. President Trump talking up the prospects of a deal. Currently across the benchmark, you are flat. Lift the hood, there's a little bit more interest when it comes to the individual indexes. Over in France, the CAC 40 is up 0.3%. The German DAX is up 37 points. Here in the UK, FTSE 100 currently down 0.1%, dropping 11, close to 12 points. Guy.
Much more balanced market this morning. 343 up, 234 down. Little bias to the upside. Volume continues to be something you want to pay attention to. The internals within these markets don't look quite so good as we see kind of just key parts of the market buying and rushing to kind of relever. The CTAs coming back in and back in hard. OK, let's talk about some of the single stocks that we're watching out for this morning. Leaders and laggards. Delivery Hero up. This is on the Uber story. Richemont, the luxury names are coming back. Deutsche Börse is also up quite strongly as well. A fairly eclectic mix in terms of the narrative, but luxury stocks certainly coming back. We saw that huge move in MS earlier this week, which has kind of changed the narrative within the space quite significantly. Let's talk a little bit about what else is happening. I think it's Bank of America that's moving on that. Alstom is, Ericsson is down, not as much as it was. ASML is down. You've seen a big move to the upside. So kind of working our way backwards. Ericsson, on the back of its numbers, a little softer relative to the move that we're seeing in Alstom. 28% to the downside. That is huge. The industrial sector is under real pressure as a result of this. And I keep coming back to it. If you are a company CEO, CFO, thinking about saying, we don't know what's happening right now, there's a lot of moving parts in the world right now, we're just not going to give you as much guidance as we once did. This is the reaction that you might expect in the market. And I think people will pay attention to that, Anna.
Yes, let's get an update on some of the other stories we're covering this morning then, Guy. A consortium including Bouygues Telecom, Iliad and Orange have entered exclusive negotiations to buy billionaire Patrick Drahi's telecom company, that's SFR, for 20.4 billion euros. The deal would mark a significant consolidation of the French telecom market, reducing the number of players from 4 to 3. The former Treasury Secretary Hank Paulson is suggesting that US authorities prepare a backup plan in order to avert a potential future collapse in demand for treasuries. He says the breakdown could come from long-running concerns over the federal debt load, an event that he warned would have, quote, vicious effects. And President Trump says the US and Iran could clinch a permanent ceasefire soon, and that talks between Washington and Tehran could resume this weekend. Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling on Hezbollah to, quote, act nicely during that period. Tom.
Meanwhile, the UK and France will host a summit to discuss setting up a naval force to ensure freedom of navigation in the Strait of Hormuz. It comes as Europe seeks to rebut US claims that it's not doing enough to secure the waterway. Oliver Crook, Bloomberg's chief Europe correspondent, joins us now. What more do we know about this initiative, Ollie? Is it concrete? What exactly can UK, France and others do to play their role in reopening the Straits of Hormuz?
Tom, it is not concrete, and that is the question we're hoping to be able to answer after this afternoon in this meeting that is chaired in Paris by Emmanuel Macron and Keir Starmer. We understand that the German Chancellor will be present in person, as well as Giorgia Meloni, the Prime Minister of Italy, but also dozens, apparently, of other nations that will join by video call in order to try to bring together this sort of coalition. I think we can call it the coalition of the begrudging, on the day after, trying to build this sort of alliance in order to get this architecture in place for the day after. We should say what this is not. This is not a military force. This is not supposed to help the U.S. blockade side of things. This is supposed to help ease the flow of ships through the Straits of Hormuz, potentially things like demining, but really for the day after. There's a question about that. Does the war need to be fully over? Could we have an extended sort of ceasefire? Would that be a sort of condition in which these nations would be participating in trying to ease the flow of traffic? These are a number of the different issues. The other issue is how exactly are they going to, they have not yet articulated how exactly they want to bring this into being. But again, I think the ambition here is to appease Donald Trump, to bring together a plan, to start to present to the President of the United States, so that maybe he'll stop talking about NATO and Greenland quite as much as he did last week.
Ollie, let's just talk about how the Europeans, and to a certain extent some of the Gulf states as well, see this story developing. The President of the United States seems to be hinting that we're going to have peace soon, like maybe after the weekend. But others take a less sanguine view and maybe expect actually it will take time. Give us a kind of idea of the time frame that people are talking about.
So we have some reporting out. We spoke to some of the people in European capitals as well as some of the Gulf nations, saying that basically, again, I think that the way that we are attuned to think about diplomacy in the Trump era is, you know, Steve Witkoff is here, J.D. Vance is here, deal, no deal, deal, no deal. But really, for the European perspective, this is a very long process. They'll remember being involved in the JCPOA. That took a very, very, very long time to negotiate. So from the people that we're speaking to, they're saying that a 6-month timeline is a much more realistic sort of period of time to consider for how much time it's going to take to get an actual deal. Now, if you get an extended ceasefire, does that count sort of as a deal? I mean, again, there's a lot that we don't know. I think what is most interesting about this guy is that if the sort of base case is that you're going to need at least 6 months to get this through, obviously that's relevant to the discussions in the Middle East. But then there's a big conversation to have here in Europe about energy policy for the next 6 months. Most people that we've spoken to and the leaders that we've been hearing from, they're talking about a sort of short-termism. They have sort of deployed little policies here and there to blunt the shock. But if we're in this for another 6 months, and that means that gas prices are going to remain elevated, oil prices are going to remain elevated, and to say nothing of the fact that European gas storage today is at 29%. That needs to fill back up before the winter, and that is the lowest level it's been since 2022, the beginning of the war in Ukraine. So I think there's going to be a very large conversation still needing to happen about what the policy response is on energy, and that is a conversation that's really going to kick off in earnest next week. We're going to get some proposals from the European Commission, but of course those European leaders are descending on the island of Cyprus there to have a high-level summit on Thursday and Friday, and they'll be discussing, obviously, energy and how to move forward.
Ollie, thank you very much. Bloomberg's Ollie Crook live in Brussels with the latest on those meetings taking place. And that is what is going to preoccupy the UK Prime Minister in the very short term, that meeting in Paris. But gilts are on the move this morning as calls increase for UK Prime Minister Keir Starmer to resign. It's been revealed the Foreign Office granted Peter Mandelson security clearance ahead of his appointment as US Ambassador last year against the objections of vetting officials. Now, this does have some kind of read across into markets, at least in part. Let's bring in Bloomberg Markets Today editor Kit Rees, who is with us. And Kit, I should just point out that we've actually seen some of the reaction in gilt markets pared back. So now we were seeing some selling, and now we don't seem to be seeing so much of that. The gilt market seems to have fallen into line, at least at the 10-year horizon, with what's happening across Europe. But yesterday we saw yields spiking a little, or nervousness around the Prime Minister's future. Talk us through how much pressure he's under then right now.
Yes, so we're definitely seeing a little bit of a re-emergence of political risk coming into the gilt market. So this follows the revelations that Peter Mandelson was appointed US ambassador despite failing the vetting process. So we're seeing calls, we saw calls on Keir Starmer to resign, and he'll be addressing Parliament as expected on Monday. So we'll see what happens there. But we saw a similar thing in February. We saw a bit of volatility over political risk in the pound and in the gilt market, and that simmered down. So it's hard to say how much of an impact it's going to have longer term, but for now it is a little bit of political risk creeping back into the market. But obviously there's lots of other concerns going on at the moment, the Iran war, inflation, those kind of things, but it's certainly unhelpful.
Yeah, it could be a poison chalice for whoever takes over if indeed there was that challenge and if indeed the Prime Minister stepped down. But we do have local elections coming up in May. How are the markets, Kit, pricing around that political event?
You know, I think it's really difficult to disentangle the political risk coming up with the local elections from all the other stuff that's going on. So for the past 6 weeks, we've really been thinking all about the Iran war, rising inflation worries, what central banks are going to do. Are they going to raise interest rates, which seems, a potential thing on the cards. And obviously the cost of living worries. We've got fuel prices rising, energy costs potentially going up, mortgages might be getting more expensive. So there's a lot of worry out there for people, for households. And this will put pressure on the government. So at the moment, there's just so much going on, and we've got a lot of uncertainty with Iran and the talks and, how that's all going to shape up. So it's really hard to say, but the UK 10-year gilt yield just have one of the highest gilt yields of the developed market. So there's a lot of risk priced into there, but we'll just have to see how it all shapes out. Lots of risk events on the horizon. We've got UK CPI data, Bank of England meeting. So yeah, it's a very difficult time at the moment.
Do you think, therefore, the market waits until May before we actually start to get some clarity on this picture, that we're going to see some oscillation? Why would you make a political move before May?
Yes, that wouldn't be the right. I mean, given the Iran war, it's a very difficult situation, so it would be difficult to make a political move.
Yeah.
And who would want to lead at that kind of time? It's a really difficult time. So we'll have to see. I think we need to see more clarity on the economic fallout, and also whether it depends on how long the Iran war lasts, how long energy prices stay elevated. And so if all kind of simmers down, things might go relatively back to normal, but there will still be an impact. So, yeah, it's kind of difficult to say, but, yeah, I think I would agree with you that markets are kind of waiting and seeing.
Yeah.
OK, Kit, thank you very much indeed. To the point made earlier, gilt yields on the 2-year right now down 2 basis points, so money moving into the front end. At the back end, the 30-year yields up just 1 basis point, 10-year are largely unchanged at 4.85. Kit Rees, thank you very much indeed on the political risk here in the UK and the fortunes of the Prime Minister. Coming up, AI in focus on the back of updates from Anthropic. Fred Fagola, CEO of Simpro Group, joins us to discuss the outlook with a view on cybersecurity, mythos, and how to integrate AI. That's coming up. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts April 30th at noon on Bloomberg. Context changes everything.
Welcome back. This is the opening trade. Friday, everybody. Friday the 17th of April, to be precise. And European equity markets, from a top-down perspective, are going absolutely nowhere. We do have some divergence, though, and some interesting stories underneath, Alstom being one of those. That is certainly weighing on the French market. Basic resources, though, is the worst-performing sector across Europe. Media stocks, best performing.
Let's get back to tech and what's happening in terms of AI, because Bloomberg understands the US government is preparing to make a version of Anthropic's AI model, Mythos, available to major federal agencies. For a conversation on how AI can impact physical trades and infrastructure, we're joined by Fred Vokola, the CEO of Simpro Group. Fred, fantastic to have you in the studio. We want to get into what Simpro is doing in terms of providing software and AI solutions to the trades, to plumbers, electricians, and how that can be leveraged. But we did want to given your experience, your more than 2 decades experience scaling software companies and within cybersecurity, to get your take on the question of Mythos, which is kind of dominating the conversation for so many right now. How concerned should we be about the risks involved and encased in this model? How are you thinking about the impacts of this?
Yeah, so cybersecurity is interesting, and AI makes cybersecurity even more interesting and more concerning. So cybersecurity, if you think about what AI can do, AI is a big disruptor. It's a force multiplier that we've never seen as a society before. And the force multiplier helps both the good guys and the bad guys. So when we think about things like Mythos and the supply chain risks that it represents, it's pretty substantial. So if there are fundamental flaws or disruptions that are caused there, the impact on the entire supply chain can be almost immeasurable. Now, there are lots of guards and guardrails and security things that are addressed to take care of it. The AI aspect of the threat actors is very real. So the criminals are always taking the tools to the most potential first. The white hats, or the good guys, are always playing defense, and they're a little slower.
Yeah.
So the advantage usually falls on the black hats. However, in the case of what we're looking at in defense supply chains and overall cybersecurity risk, there are so many firewalls that are in place. I think the risk is minimal. However, it's a disproportionate risk, because if something happens, it is a catastrophic risk.
The banks in the US have got hold of this, some of them.
Yep.
Anthropic told us this week UK financial institutions will start getting hold of it within the next week. Presumably your business isn't going to get hold of it for a while. So once it's released more broadly, what does it mean for a business like yours? How closely are you scrutinising your own internal cybersecurity in preparation for this?
Yeah, well, cybersecurity is all about layers. It's about layering defense, right? So there's multiple layers that you have. So the idea is not to have one single point of vulnerability that can be, exfiltrated or excluded that'll really hinder everything. So when we look at it, when it becomes available for someone like us, we'll look at it. We'll make a determination, a cost-benefit analysis for it. Of course, our cyber teams will look at it. It's going to be no different than other models and other types of technologies that do the same thing. It's just understanding how much focus it'll get from the bad actors. Because the bad actors are looking at where's the biggest bang for their buck. So the bad actors are very smart. These cyber gangs are incredibly resilient. They have huge amounts of financial opportunity to gain. So understanding what the risk is from a liability perspective of focus is as important as a layered defense model to protect your business.
Are the big AI companies now cybersecurity companies?
Yes. Yes, I think that in the beginning, it's only been several years, but in the beginning of the large language model era of AI, cybersecurity took a back seat. Now, as large enterprises are embracing it, it's not just how much faster we can develop with these tools and how much more productivity we can get. It's, is it safe? Is it enterprise ready? And are we hardened? And are we hardened enough so that we can release this into our supply chain?
So how do you think your company is going to change over the next year? As you start to integrate AI, as you use Mythos to kind of go to companies, go to your vendors and talk about, and your customers about how they can change what they're doing. I'm used to kind of an update every week. I get a patch. How quickly? What does the rate of change look like here?
Yeah, the rate of change is going to be faster, and it'll be a different format. So if you think about updates to your phone or updates to your application or patches, as you indicated, it's going to be a different context. AI allows things to happen 5 to 50 times faster, very often with humans out of the loop. So it continues to innovate. So you'll see the patches that are there to fix vulnerabilities that can be exploited by the black hats. That cycle will be much, much faster. And the same technology that's being used for the exploitation is being used for the defense.
Right.
So it's the same algo doing both, and we've never seen that before. So how that's going to pan out is going to be very interesting. I think that another type of layer, and companies like CrowdStrike and Kaseya and others are developing AI-specific technologies to defend AI-specific threats for AI-specific usage. And that is an entirely new threat vector, and there's a massive industry being built. And I think for the cybersecurity providers out there, it's a huge opportunity.
Your business, Simpro, good morning to you, Fred. Your business, it helps bring AI to a different set of businesses, to smaller businesses, to trades, to help them quote, to schedule, to manage their jobs, for example. Is there a huge amount of opportunity there, or are some of the things that they do too unstructured to benefit from AI?
So most trade businesses, and defining a trade business, like I said, a plumber, electrician, anyone who's doing a job at a remote location, it's one of the largest aspects of our economy. I always say the trades are the world's second responders. If an incident happens, police, fire, military, healthcare go in. After that, it's getting the lights back on, it's getting the water running. They keep our society going. Most trade businesses are small to mid-sized companies. And those small to mid-sized companies have less than 50 employees. And their profit margins average about 6%. So they're struggling. Even successful trade businesses don't have large profit margins. One of the reasons for that is it's very logistically challenging to run a trade business because it's made up of getting the right worker to the right job with the right materials, the right skills, the right time. AI allows that to happen.
Okay, so you think AI can bring them benefits. The market seems to be concerned about business. Well, maybe it's too early to tell which are the businesses that benefit from AI and which are the ones that kind of get eaten up by AI agents and by more generic AI providers. The determining factor perhaps is data. So do you see yourselves as a business that is built on data, and that means that you're a business that's going to be resilient to other bigger AI threats?
Yeah, so Simpro, as a company, we are the system of record. Our technology runs about 23,000 companies around the world, 23,000 trade companies. So we harness that data and apply AI models to it and our own AI technology to it, to be able to provide automation and capabilities and agents that these trade businesses otherwise would have no access to. And we give them the ability to do things that were literally impossible beforehand. And what that does for the business, it allows their margins to go from 6% to about 20%. So it fundamentally changes the industry. So when I think of the trades are an industry overall that is massively, positively impacted by AI.
Fred, what stops them vibe coding their own solutions using Lovable or Cursor?
Yeah, most trade businesses are companies, like I said, of under 50 people. So if you're a 50-person plumbing company here in London, you have 45 plumbers, an owner, and 2 or 3 people that are working in the office. There's no one to do the work. So one of the big things with this SaaS apocalypse that everyone talks about and what's happening with SaaS companies, the SaaS companies that face risks are whose companies are Fortune companies or larger businesses that will go and have development teams that will vibe code and build their own solutions to compete with and replace packaged software. Software companies like Simpro that are targeting small to mid-sized customers, our customers just don't have the capacity, resources, skill, quite frankly, or desire to build it. So those organizations are looking for people like Simpro to bring them AI, where Fortune companies are going to start to consume and deliver their own AI solutions for themselves.
Really interesting. Fred, thank you very much indeed for coming into the London studio to talk through the impacts of Mythos and what you and the team are doing at Simpro. CEO of Simpro Group, Fred Vocola. We're going to get more now in terms of the market view on another crazy week, Guy, in terms of the upside to come through equities. We're focused on gilts here in the UK as around political risk, and continue to hear from President Trump, who's talking quite positively about a potential deal.
So we've had a crazy week. Today feels like a less crazy day. It feels like markets maybe have calmed down a little bit. You're certainly seeing a calmer picture emerging. The Stock 600 just ticking a little bit higher. We're up kind of 1/10 of 1% right now. Media's leading. You're seeing the FTSE on 100 underperforming a touch. Basic resources are down. The utility sector in the UK is down. Apparently, the Chancellor wants to sort of separate out utilities and what the gas price is doing. Anyway, lots of things going on, but a more calm session. So let's get a sense of kind of where we go from here. Morwenna Conyngham is joining us to try and give us that sense. A calmer day?
I would say a calmer day. I think there's a lot of uncertainty, and that's actually been the reigning mood, I think, of the week. Compared to last week, where we actually had some sense of optimism. I think there is still some optimism, but there's very much a wait-and-see feeling, especially as we head into the weekend. President Trump has indicated that there is a sort of deal within reach, but that hasn't been confirmed elsewhere. No. I think we've seen this back and forth quite consistently over the last 10 days. So markets are, I'd say, tentative and cautious. It has been quite a sort of volatile week. Not seeing the extreme swings that we were seeing last month or even last week. It has overall actually been a sort of calmer, slightly nervous, jittery week.
Yes, and we've noticed, Morwenna, that if you disappoint markets with earnings, that they're not very tolerant of that in the current environment, given how we've rebuilt appetite for stocks since the start of the war. Markets are now quite jittery, and if you don't deliver on earnings, they're kind of punished quite severely. Is that what we've seen so far?
Yes, and we're seeing that this morning from Alstom in France about sort of delayed rolling stock, but also we're seeing some of the technology companies, which I think were always particularly sensitive. So Netflix in the US last night disappointed on forecasts. We've seen Ericsson disappointing in Europe today, and that does tend to get punished by the markets. I think we're really starting to get into the swing of earnings season, so we will start to also get a sense of how much companies are being impacted by the war in Iran, how much supply disruption is starting to impact things, higher energy prices, higher commodities prices. Those sorts of things are going to be starting to come through in forecasts and commentary, as well as the actual earnings themselves. And like I said, the market is quite febrile, I would say, so it's going to definitely be quite an exciting quarter.
Morwenna, with a lens on the UK, how are traders thinking about how the BOE, how are they looking to balance what we heard from Bailey, who was sounding a little bit more dovish this week, versus the political risk?
Well, I think that the political risk is something that we've sort of had to live with for quite a while in the UK. It does seem to be resurging today. It's not being reflected enormously in the bond market. We did see longer dated yields rise slightly at the open, but that's largely calmed down now. And to be honest, there is that slight risk priced in across Europe this morning as well. Not seeing huge moves, and certainly not compared to recent history. I think wait and see is again there, waiting for more data as to what the Bank of England will be able to do next.
Great to see you, Morwenna. Thank you very much indeed for stopping by to see us. Bloomberg Markets Today, editor Morwenna Conyngham. OK, that's it. Weekend. We can all pause now.
Yes, on a serious front, we're looking for any news out the Middle East. Yeah. But there's also this on the agenda.
There's lots of things going on. Man City Arsenal's going to be critical.
I'm quite stressed about that.
That's Sunday, isn't it?
It's a 6-point lead. Arsenal's got. Man City smells blood.
Yeah, Arsenal have to win this game, I'm told. Bath Quins is the one I'm looking forward to. That's tomorrow. Looking forward to that. Anyway, have a great weekend, folks. This is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom Mackenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
President Trump says it's looking very good for a permanent ceasefire with Iran, though officials in the Gulf and Europe say it could take 6 months. A bad episode for Netflix as second quarter guidance falls short. The co-founder Reed Hastings also announces he's stepping down after 29 years. And fresh crisis for Keir Starmer, the UK Prime Minister, facing calls to resign after it emerged that Peter Mandelson was appointed as ambassador despite failing security checks. So once again, there is quite a lot going on in the markets. There has been a pretty extraordinary rebound in global equities. That's pausing for the moment as investors hold back from further big bets ahead of the weekend while waiting to see whether Iran and the U.S. can actually extend their truce. Now, when you speak to market participants, whether in the U.S. or Europe, I do want to talk about gilts in the U.K. in a second as well. But market attention will probably once again focus back on fundamentals. If you look at the U.K. gilts, they seem to be having to confront some of the political risks, again, given all of the uncertainty of what Keir Starmer is going through. Let's also take a look at the European markets map. Now, at the moment, at least for the last 3 to 4 weeks, it's very clear that European markets were following up from what was happening in the U.S. and Asia. And you can see a little bit of a mixed picture with the CAC 40, but also the FTSE Mid getting between 0.3 and 0.5%. The UK down 0.2%. And finally, Netflix shares falling in pre-market trading after its second quarter forecast fell short of analyst estimates. The company also announced that the chairman and co-founder Reed Hastings is stepping down. We'll have more on Netflix a little bit later on in the show, and pre-market down almost 10%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says the U.S. and Iran could clinch a permanent ceasefire soon. But Bloomberg also understands that some Gulf Arab and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling Hezbollah to, quote, act nicely during that period. With us now is Bloomberg opinion columnist Mark Champion. Mark, first of all, thank you for everything you do. There's great analysis on also what President Trump has been saying recently, which is basically, look, Iran has made key concessions in negotiations, and that a deal could be announced fairly soon. Is that true?
Well, I think we have to discount very heavily what the president says, just based on past experience. We've been very close to a deal they've been conceding, giving up. He's won. We've heard all this, for weeks now. That said, it is very clear that both sides want out of the war. And that's why we have a ceasefire. He says that this will all get wrapped up at the weekend. If it does, that will be an extraordinary achievement. You have a big file here. The nuclear part is complicated itself. That has taken at times, months or years to negotiate. So, to get that done, in a couple of days would be enormous. There are many other moving parts. And just to, one of them is Lebanon. And you saw him push, the Israeli prime minister into accepting a ceasefire he didn't really want. And that clearly is, sort of part and parcel of the attempt to get the Iranians on board. And the Iranians are sort of, obviously, they claim that, this is all because, we won in Lebanon. But you have to discount those kinds of claims. You have to just focus on where they are.
And Mark, I mean, this is a real ceasefire, because we've had ceasefires before where actually there were still missiles being launched.
Yes, no, but there does seem to be a ceasefire. It is holding. And as I say, I think the key is that both sides do want out. That doesn't mean it's going to be easy to get a deal. And as I say, my guess is more likely that you're going to have rolling ceasefires. It's going to take a while to get a permanent settlement, which is a different thing.
So what happens to the Strait of Hormuz?
That's a really good question. And again, you can only sort of, conjecture as to how this will work. Both sides are kind of closing off the other's traffic, if you like. And they will both be sensitive, Trump to rising oil prices, the Iranians to the restrictions on imports and exports. And you can also imagine things slipping through as needed. If they can talk about this stuff if they're at the table, if they can have the Pakistanis mediate and talk about this stuff. There will be back channels, perhaps even military, and they can, there are fungible things here. So long as both sides want out and they see a way out, they will find ways to keep things from blowing up.
Mark, I mean, there was a deal. I don't know whether it's too soon to say, but there was a deal that was negotiated under Obama in 2015. I mean, whatever we get next, is it going to be worse than that deal or just different?
It will be different. The time is different. What Iran has is different. So it will be. Whether, obviously, President Trump will, if there is a deal, he will say, this was a deal that made the war worthwhile. It's completely different from JCPOA. The bottom line is, so long as the Iranians retain the right to enrich uranium, it will be some form of the JCPOA of 2015, whether it's, a better version or a lesser good version, it will be different.
Mark, as always, thank you so much. Bloomberg opinion columnist there, Mark Champion. Now let's also bring Paul Wallace, who leads Bloomberg's economic and politics coverage from the Middle East. Paul, so what do we know about this potential U.S.-Iran deal? And also, if you're a Gulf state right now, are you really pushing for the deal?
Hi, Francine. Well, on the first point, it seems as if we're waiting for the US and/or Iran to announce an extension to their ceasefire, the ceasefire that ends, broadly speaking, late Tuesday time, US time, or they might even, as Trump sort of signaled that there's a possibility that they actually announce sort of something something more significant than that, like an actual peace deal. So that's what we're waiting on now. There's no guarantee of this, and there is still a chance everything falls apart because the gaps between Iran and the US on a number of issues are still wide. I think the Lebanon ceasefire was a key piece of the puzzle for the US and Iran. The US almost didn't quite seem to get the significance of the war between Israel and Hezbollah in Lebanon when the ceasefire was initially agreed to just under 2 weeks ago, the Iran ceasefire, that is. But they certainly got that message in recent days. And I think that's why you saw Trump pushing hard to get the Israelis and the Lebanese state and, through them, Hezbollah into a ceasefire, which seems to be holding, although it's still very early days. We're only about 12 hours into it. For the Gulf states, I think this is a bit of relief. Of course, let's say the most immediate thing is the Strait of Hormuz, and that remains shut. So, that they will be looking at that very closely. If there's some kind of extension to the Iran-US ceasefire and or peace deal announced by Trump that reopens Hormuz, I think they will be very happy. What they'll be nervous about is Trump trying to sort of extricate himself from this war without ensuring the reopening of this key waterway. That is something that they will be wary about.
Paul, thank you so much. As ever, Paul Wallace there with the very latest, of course, on the Middle East, but also the view really from the Gulf. Now, Wall Street banks say the dollar's war-driven haven rally is likely over as investors seek riskier assets. Adding his voice to concerns about economic stability, former U.S. Treasury Secretary Hank Paulson called on U.S. authorities to prepare a backup plan to avert a potential collapse in demand for treasuries.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries, and the Fed is the only buyer, and the prices of the treasuries are going down, and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break-the-glass plan.
Well, with us now is Vasiliki Pachatouridi, EMEA head of iShares fixed income product strategy at BlackRock. Vasiliki, thank you so much for joining us. When you look at the war, I mean, again, so there's been quite a lot of volatility. You don't know what happens to oil or inflation. We spoke to a number of central banks in Washington. So, I mean, broad brush, what does it mean for your investments today?
Yeah, good morning, Francine. Indeed, I mean, there's been obviously a very volatile kind of period, but by and large, I would say markets, equity markets, but also fixed income markets have been very resilient over the past couple of weeks. I think a couple of things that I'm paying attention to, and certainly our clients and investors are doing as well, is the volatility that we're seeing, particularly on the front end of the rate curves. We're seeing that particularly in Europe and in the UK even more so. What does this do? It's weakening the hedging properties of short-term rates. And I think what that means for investors and portfolios, you have to pay attention to cash. There's a lot of cash in the system for different reasons. People have liabilities.
So is that your number one?
My number one would be just think about it. It's often forgotten, but it's a simple thing. There's a lot of cash in the system. Let's not look at cash only for capital preservation and liquidity. It can be a source of return, and it can also be a way to sidestep that duration risk that you have from front-end rate. That would be my number one. Second area would really be credit. We're seeing that in flows this month from bond ETF flows. I mean, just generally ETF flows are seeing re-risking into equities, but also fixed income. Credit in particular has performed really well. And then the last point, very simple, but inflation expectations, they haven't fed through yet into the market, particularly on a longer term horizon. So just think about some hedging.
I mean, like hedging also against inflation.
Exactly.
So is that gold, or do you have like inflation linkers? That means also more diversification.
Inflation link, we haven't seen demand for linkers since 2022 for obvious reasons. We're talking a lot about inflation, but it is really at the very short term that inflation expectations have gone up. We haven't seen that feeding through medium term, long term. So there is no premium priced in. So linkers, I think, potentially could be a good diversifier within a nominal fixed income portfolio.
Vasiliki, what do you do with European fixed income? I mean, if you look at, first of all, the different countries, the UK has different issues at the moment. I mean, is now a good time to get into gilts?
Gilts in particular, they're in a tough spot. Prior to the war, gilts were attractive, at least from a valuation standpoint, with BOE kind of expected to cut rates. I think they're in a more tough spot right now. 2-year gilts have had the most volatile period since 2022, since the gilt crisis. So more cautious on gilts. But again, it kind of paints to me that picture that front-end rates, both in the UK, less so in Europe, there are an area of tension. But overall, European fixed income, we like European fixed income. We like European investment-grade credit. I talk a lot about floating rate instruments, obviously because of ECB repricing expectations. And AAA CLOs is a good place to be because high-quality carry, floating rate bonds, and very good protections embedded into the asset class.
Vasiliki, when you look at Europe, I mean, a number of countries have issues that are domestic. We're looking at elections in France next year and things like that. Is it too soon to take a call on that because everything's driven by what the ECB does and energy crisis?
Right now for fixed, I mean, equity markets have really kind of shifted maybe attention to kind of more enduring market drivers like AI. I think in fixed income, we're still having a lot of the market being anchored to inflation expectations, growth, which is particularly more of a focus in Europe. So ECB being more inflation focused, the Fed being more growth focused. So I think for fixed income investors, understanding next steps for monetary policy will be very important in terms of how they take duration. And I think overall people do look for flexible ways to invest in this market. Correlations can be challenging, so you need some help.
Yeah, we had a good conversation with Christine Lagarde, but also Joachim Nagel of the Bundesbank in Washington earlier this week. And actually, I don't know what you're expecting the ECB to do in April. For me, they were more dovish than I thought. It was very much they wouldn't really guide the markets either way.
Yeah, I mean, we had at some point the market expecting like 3 hikes this year. I mean, that's obviously, I don't even think we're gonna see 2. I mean, for now, I think they're going to be staying put maybe for the next meeting. But certainly, relative to the Bank of England, the ECB has more room to potentially take action relative to the Bank of England. But again, we're not going back to a 2022 scenario, both on the monetary side, but also on the fiscal side. Again, fiscal can be a concern, particularly for bond investors. We heard that also from the US. I don't see we're going to see that level of a response that we've seen in previous periods.
I mean, is there a concern that actually central banks, think of 2022 and again want to act too quickly because they were late last time?
I think there were lessons learned. We are in a different period now, and everything that I hear from policymakers is that there is a more considerate approach to what's needed right now.
Any dislocations in the markets that you're seeing which investors should be wary of?
Yeah, as I've said, I mean, credit, which was all eyes was on credit, IG behaved really well, but high yield also. And last month we had outflows from high yield and emerging market debt in particular. That has all stabilized. I don't see any particular areas of pressure kind of from a rising default perspective. Obviously, rising rates, inflation, the secondary effects of that as they feed through the economy, they can cause some headaches for companies and how they're financing themselves.
Vasiliki, thank you so much. It was such a great insight. Thank you for joining us. Vasiliki Pachaduridi, their EMEA head of iShares fixed income product strategy at BlackRock. Now, coming up, the Chinese president seeks to position his nation as a bulwark for international stability. We'll discuss more with Alicia Garcia Herrero, the chief APAC economist at Natixis. This is Bloomberg.
up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Francie Lacqua here in London. Well, the Chinese president has hosted a number of world leaders this week as he seeks to position his country as a source of international stability. Earlier this week, Xi Jinping used some of his strongest language yet to describe the impact of war in the Middle East.
The world is beset by turmoil and the international order is in disarray. How a country treats the international law and order reflects its worldview, its values, its vision of order, and its sense of responsibility.
Well, joining us now is Alicia Garcia Herrero, Chief APAC Economist at Natixis. Alicia, thank you so much for joining us. When you look at China's position right now, first of all, how are they looking at the Middle East and this energy crisis?
Well, let's see the Middle East as an opportunity for two reasons. First, they know that the war is not going to continue much longer. I think everybody's counting on the end of the war, and that helps China because if it had been a much longer war, that could have been much more dangerous in terms of maybe a global recession and Chinese exports suffering. But that's not where we are. Where we are is that basically the US, the Trump administration, has made a big mistake. That's how China is taking this, and China is very much profiting from this. They have enough oil, they're not suffering from that. They have, most importantly, a lot of refinery capacity that they are bargaining with for the rest of Asia. So in that regard, I think China is a relative winner from this conflict.
Alicia, do they need a resolution now? And do you know if China, does China want to be seen also as a power broker? Or the fact that they've stayed away from this crisis, is it because they're looking for other trade routes or other partners?
I think they're very comfortable with the Pakistanis basically being the brokers because they're behind the Pakistanis. And that's a very comfortable position because if it doesn't work, China is not meddled with the negotiations. So China wants to show that it is magnanimous, that is there, is trying to help to end this war, but it's not at the forefront of that effort.
Alicia, what kind of economic stability could we see actually with China going forward? I know, for example, Pedro Sanchez has been also pushing for a better relationship with China, but that's only if China is also strong enough economically to be a counterweight to the U.S.
Well, I should say that we had China's GDP data yesterday is going well, but that doesn't mean it's going to go well for the rest of the world depending on China. So let me clarify. China is still growing out of exports. Retail sales grew barely 1.7%. And imports grew a little bit more simply because of the price effect of oil. But that's not Europe. That's not for Europe. So if Europe thinks that China is going to save them out of a very unstable, risky US, I don't think that's going to happen, because China is basically integrating, moving up the ladder, competing with Europe in the European market and elsewhere. So in that regard, for Europe, China is simply a humongous competition. That's what it is so far.
But Alicia, and I keep on hearing from European states that they don't have to choose between the U.S. and China, but do they?
I don't think we need to choose, but we need to be fully aware that the U.S. is a much bigger market for European exports than China will ever be. And this is simply because China competes with us in terms of industrial capacity, is actually a much bigger exporter than the whole of the European Union already. So it's not so much choosing, it's knowing who is who. China is certainly relevant if you want to move up the ladder yourself. You need technology. If you manage to get some technology out of China, good luck, but that would be great. For that, Europe is designing this new Industrial Accelerator Act, which basically means that if China wants to produce in Europe, it will need to pass on some of that technology. For the US, it's the market that we care about. So they are not substitutes. This is something that European leaders should understand sooner than later.
Alicia, I mean, the other thing that we're trying to figure out is petro-yuan, right? So because of the Strait of Hormuz and the energy crisis, there are a lot of questions on whether there will be a bold move that could take years, if not decades, away from the dollar into another currency. Can renminbi and China benefit?
Yeah. So if we watch the RMB international use for the last, say, 10 years, we can see that actually it's still very small. But the small hypes we've seen in SWIFT data is mostly about trade settlements, and it hypes simply when there is more sanctions. That was the invasion in Ukraine when we had the largest jump in RMB settlements. It's happening now with Iran, and the reason is very simple. China offers a cross-border payment system that is not in the loop of SWIFT, i.e. the US. Because they have their own messaging system within this CIPS, China International Payment System. That's it. But, if we look at the use of RMB for investment, for example, central bank forex reserves is actually coming down. And rightly so, because the yield on any sovereign bond, Chinese sovereign bond, is actually very low. So there is no investment story for the RMB, not even for the petro-yuan, because they created this market in Shanghai futures market, oil futures market in 2018, and it's barely 3% of total transactions. So it's not happening yet. I'm not saying it won't happen, but it needs a lot of, a lot of things that China still has to do in terms of having a much more liquid market, opening the capital account, everything we've heard so many times.
Alicia, thank you so much. Alicia Garcia Herrero, their chief APAC economist at Natixis. Now, of course, one of the other questions that we'll try and explore throughout the rest of the week, well, into next week, is what happens also with Taiwan. The picture for markets is one of perplexion, I guess. If you're an investor right now, you will have seen exactly what happened with this extraordinary rebound in global equities. That's slowing down a little bit this morning. Again, investors holding back from further big bets ahead of the weekend, whilst at the same time waiting to see whether Iran and the U.S. can actually extend their truce. I'm looking at oil, so we're looking at U.S. markets, but also oil, Brent dropping towards $98 a barrel. Again, after Donald Trump said Iran made key concessions. Coming up, well, he says it's a lasting ceasefire, President Trump, with Iran, and that's possible soon. So we look to discuss the outlook with Libby Cantrell from PIMCO next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. President Trump says it's looking very good for a permanent ceasefire with Iran, though officials in the Gulf and Europe say it could take 6 months. A bad episode for Netflix as second quarter guidance falls short. Co-founder Reed Hastings also announces he's stepping down after 29 years. And fresh crisis for Keir Starmer, the UK Prime Minister facing calls to resign after it emerged that Peter Mandelson was appointed as ambassador despite failing security checks. Now, President Trump is striking an optimistic tone as he says the U.S. and Iran could reach a permanent ceasefire soon. But Bloomberg also understands that some Gulf and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed on. Well, for more, we're joined by Libby Cantrell, Head of Public Policy at PIMCO. Libby, so good to speak to you, and there's so much to talk about in little time, unfortunately, as always. Thank you for joining us. When you look at, what does a peace deal look like?
Yeah, I think that is the open question. The question for markets is, does President Trump declare victory without actually really achieving any of the strategic objectives of the United States, which, of course, is to really try to neuter the ability for Iran to enrich uranium. Of course, President Trump is sort of the master marketer, so he may declare victory, again, without those sort of strategic objectives achieved. I think politically speaking, and to the point about does this take 6 months, and how long does it actually take for the oil market to normalize? This is something that for American voters, the cost of the price, the sort of gas and groceries, the cost of a gallon of gas, the cost of a gallon of milk, those are the things that are really important. And so if this does take a prolonged period of time, even if President Trump sort of characterizes it as a victory, if gas prices do not decrease going into the midterms, this could really spell trouble for Republicans.
It feels like it's about nuclear enrichment, but now it's also what happens to the Strait of Hormuz. So is Iran in a stronger position than it was 6 months ago?
Well, I think that is the fear, right? So foreign policy experts in the United States fear that we're actually in a worse position than we were in terms of the U.S.-Iran dynamic. And then if you go back to sort of the JCPOA, the joint nuclear deal that President Trump, of course, has been very critical of. He, of course, withdrew the United States from that. Does he get a deal that's actually worse than that? So in terms of the foreign policy objectives, I think it's a real open question of whether the United States has actually achieved those goals. And then politically speaking, again, I just can't emphasize this enough about what a headwind this is for President Trump, but also for Republicans.
Yeah, where's Congress in all of this?
Yeah, so Congress, so theoretically, should have or will vote on authorizing war. That is something that the Constitution sort of enables them or asks them to do. Of course, President Trump, as a commander-in-chief, does have quite a lot of latitude, but Congress will have to vote at some point in terms of sending more money to Iran and also sending more money to the troops, of course, and then also replenishing some of the munitions that we have depleted. So Congress will have to get involved. I think that vote probably is going to be over the next few weeks in terms of voting on some sort of supplemental package. And that is really where the rubber meets the road. You've seen Republicans be pretty accommodating of President Trump so far. That may actually end. And I will say this is something that privately folks are talking about on the Hill quite a bit among Republicans, is that there's impatience around the strategy here, around the goals, around the framework, in terms of the definition of success. And I think that patience is very much wearing thin. As the weeks go by without a resolution, I think you're going to start seeing maybe members of Congress start talking about that publicly, and potentially that will inform how they vote as well.
I mean, is the military action? I mean, do voters care, or are they just looking at the energy?
Well,
as you know,
I mean, the U.S. has sort of this luxury of being more isolated just geographically, and so foreign policy has never been an issue that has been sort of, at least in the modern history, has never been one of the top three issues for voters. Again, it is sort of this gas and groceries, and so as long as the price of gas is elevated because of this conflict, I think it will weigh on voters' minds. And then also, we just have to remember that, of course, President Trump's platform was really to kind of get out of these forever wars. Right. And he did that in his first administration, right? He sort of honored that campaign promise. This second administration with Venezuela, with Iran, potentially with Cuba, he's sort of really going against that. So that is also, I think, it could be a political headwind for him. As of now, his base is holding in terms of the vote, the polling. But again, I think there's some fragilities there that if this is prolonged and protracted, especially if it's 6 months, I think you're really going to see sort of a political fallout.
I mean, there's kind of like a half joke in saying, well, it's when gasoline prices, hit $5. That's when the U.S. will be out of the Middle East and Iran because they just can't afford it because of the midterms. Is there like an elusive? I mean, is there a price or something that the White House is just really worried because it will have a direct impact on what happens in November?
Well, gas or petrol, petrol prices have increased by about 40% already. They're in that kind of $4 sort of on average. Some states, of course, there's a lot of geographic variability. Some states are seeing $6, $6 gallons of gas already. It's interesting. If you look at president approval ratings and you graph that against the price of gas, it is inversely related. It's kind of amazing, honestly. And you saw with President Biden that in 2022, when gas hit $5, that was his lowest of his approval rating. One thing I will just say, though, is that, and we tell our clients this all the time, we should not extrapolate the political environment in April of an election year 7 months forward. So lots can change, as we know. As already in 2026, it's been a very busy year. And so it is just important to keep in mind that even though the political environment right now for Republicans does look pretty challenging, things can change. And Biden was that. It looked very challenging for him in April of 2022. And then after the Dobbs decision, the Supreme Court decision in June of that year, things changed quite a bit. So we can't necessarily sort of project too much. But as of right now, if the election were held today, Republicans would be in trouble, particularly in the House.
Libby, what are you expecting from Kevin Warsh at the Fed? Again, I was at a dinner in Washington. Scott Bessent was quite, he said this doesn't change, this war doesn't change, huge dynamics, but maybe it delays cuts.
Yeah, that's interesting that he said. I think that this is sort of a concession, right? Because, of course, Kevin Warsh, as a chair, will be an important voice, but he's only one of 12 votes on the FOMC. And, of course, you need 7 to change monetary policy. So there is sort of a limited impact. And I think it's interesting the administration is maybe conceding that there is some sort of limitation in terms of the power of the chair. Now, Kevin Warsh, I think there's a good chance that he may not be in maybe until the summer, maybe until the fall. This is all going to be predicated on this DOJ investigation into Chair Powell. If that is not withdrawn, Senator Tillis, the Republican from North Carolina, he is holding strong. He is not going to give that green light to the Warsh confirmation. So I think, there's an open question whether Warsh is even at the Fed. But even if he is, again, he's only going to be, one vote.
Yeah, and then President Trump, I think on Tuesday, again went really hard on Jay Powell, saying if he doesn't resign from the Fed, because he can stay on as basically governor. Yeah. He said he'll fire him. The market took no notice of this.
No, because honestly, I think it's partly because of the oral arguments around the Lisa Cook hearing that's been in front of the Lisa Cook case has been in front of the Supreme Court. Of course, he's tried to fire the sitting governor, Lisa Cook. The Supreme Court looks like they probably won't allow for that, and so I think the market's sort of ignoring, much of this. And again, I think they're also just focused on the fact that, all these people are just one vote.
Okay, so interesting. Libby, thank you so much.
Thanks so much.
Libby Cantrell, Head of Public Policy at PIMCO. Now, the Barclays chief executive says the bank is still committed to expanding in the Middle East despite the Iran war. Speaking to Bloomberg, Venkat also said markets are looking through the long-term issues facing the global economy.
There is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences, which is what will give central banks, pause as to how they deal with this situation.
Well, a sell-off in gilts that started yesterday seemed to be easing ever so slightly. It was sparked by renewed calls for the UK Prime Minister Keir Starmer to resign. It's been revealed that the Foreign Office granted Peter Mandelson security clearance last year against the objection of vetting officials. Well, Bloomberg's Markets Today editor Kit Reese is here. Kit, thank you for joining us. I mean, it just puts Keir Starmer in a really, really difficult position. So talk us through the latest allegations.
Yes, so the latest allegations revolve around the revelation that Peter Mandelson was appointed US ambassador having failed these security checks. So it raises questions over Keir Starmer's judgment. There have been calls for him to resign from the opposition leaders. So it does bring back memories of February. And, it was a similar situation there. And we saw both bonds, gilts and the pound coming under pressure. But the reaction has been a lot more calmer today. This is perhaps because there's just so much going on in the greater scheme of things. Iran, worries about inflation, all those kind of things, kind of raising these risks. But it does introduce this political risk. It cannot be ignored. And, raises questions kind of going forward, what's going to happen at the May elections. So, yeah.
I mean, these are a big deal, right? So you have local elections next month, and it looks like Labour may not do as well. So what are the markets pricing in?
It's very hard to disentangle the political risk from all these other things, but it has to be highlighted that the UK gilt does have one of the highest yields amongst developed bond markets. So, there is a sort of a heightened political risk being priced in there, so I wouldn't argue with that. And the whole thing comes at a very interesting point for Keir Starmer. We've got the Iran war, it's raised all these worries over inflation, what central banks are going to do, are interest rates going to go up, the cost of living crisis, all these pressures, got fuel going up, energy costs, mortgages might go up. So there's a lot on households' minds, and there's going to be a lot of pressure on the government. So it's not going to be very, very particularly helpful for Keir Starmer. And I mean, the big kind of worry is if there is a replacement for him, further down the line, perhaps, what will their approach be to spending? There's a worry that they won't be as fiscally prudent, so this could, put pressure on bond markets. So overall, there's a lot for markets to digest at the moment, especially heading into the weekend. We're going to be keeping an eye on what happens in Iran. But it is certainly unhelpful for the UK bond market and for Keir Starmer.
Okay, thank you so much. As always, Kit Reese, of course, our Bloomberg Markets Today editor. Now, coming up, investors look for a sign that Netflix can keep hold of subscribers. How will the departure of co-founder Reed Hastings affect the business? More on that next, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the French luxury group Kering is seeking to double future profitability, in part by rejuvenating Gucci, its largest brand. The chief executive, Luca De Meo, has unveiled his strategy 7 months after taking the top job. Now, the former Renault boss has been speaking with Bloomberg's Caroline Conan about the challenges ahead.
I think it's already many years where even the industry is impacted by a strong volatility, also geopolitically everywhere. So this volatility is factored into the plan because we're trying to build a company that is more agile, that is lighter, etc. Exactly to master this volatility. We believe in the region, in the long-term potential of Middle East. I think long-term it will continue to grow, so we have no hesitation to continue to invest as a very important customer, etc. So I think unfortunately I hope that this thing will come down very quickly, hopefully, and but we believe in the long term that the Middle East will be a key region for luxury.
Even if the aspirational consumer might not be here right now.
In the Middle East, I think you have a lot of people that are in the core category and in the BIC category. This is the heart of the business there.
Obviously, at Gucci, we also have Demna, who came as a creative director, did the first fashion show in Milan in February. Dior, Chanel also have new creative directors, which is making the market very competitive. How long are you giving Demna at Gucci?
I think, I think one of the issues why Gucci has been, more recently in troubles was the lack of stability, in the management team on the creative side with, many changes. And I think it's very important for me that I can assure stability for that team, both on the management side and on the creative side. So no, it's not about this, it's not about, giving time or etc. I think we just have to all work together to make sure that Demna can express his full potential. He's one of the greatest of this generation, and he has now in his hands one of the most beautiful brands, in this sector. So I'm pretty optimistic that everything will work. And things well done require time, right? And we want to do good things with Gucci.
Well, that was the chief executive of Kering, Luca De Meo, speaking with Bloomberg's Caroline Conan. Now, Netflix has disappointed investors with second quarter guidance that fell short of analyst expectations. Now, the streaming giant also announced that co-founder Reed Hastings, who's also on the board of Bloomberg, will be stepping down after 29 years. Now, we're joined by Mandeep Singh, Global Head of Technology Research at Bloomberg Intelligence. Also with us, Bloomberg opinion columnist Parmi Olsen. We'll talk about AI and the little thing called Mythos that seems to have had wide repercussions also for all of Wall Street. So, Mandeep, let's just start with Netflix first. If you look at Netflix, look, they're not doing great. It's just because there's so much content out there from platforms. I feel like we're in a real battle for eyeballs.
Yeah, and they're missing that AI story that when you look at Meta or Google, they have that AI tailwind, which will get reflected in their growth rates. I mean, Meta is expected to grow high 20%. So low teens growth is nothing, that investors want to pay for. And Netflix was trading at a higher multiple compared to, let's say, a Meta.
I mean, I guess the wider, and this is a corporate, Netflix problem. What's also really interesting, Parmi, is what's happening in the AI space. And I do feel like, what we've learned over Mythos in the last 2 weeks, I mean, there's so many questions that we're trying to get answered. What are your top 3 questions?
Well, I'd love to know when Anthropic is going to give greater access to this tool. We know it's only given exclusive access to this new powerful AI model, which had this emergent property of being able to launch its own cyber attacks. Now, we have to remember the newest AI models that are coming to the fore now have agentic properties. So if a hacker previously was using something like ChatGPT to check a site for vulnerabilities, and ChatGPT or Claude from Anthropic was giving them that information, now those tools can actually do things for the hacker. They can actually find the vulnerability and exploit the vulnerability. And that's what is worrying so many people about this tool. And I think it really is a wake-up call for not just the banks that were all assembled by the U.S. Treasury Secretary Bessent recently, but particularly small to medium-sized businesses. There was a report that came out from the UK's AI Security Institute, which found actually well-protected companies should be okay with these kinds of models. It's the weakly defended systems that could be vulnerable.
Yeah, and does it also depend on I guess, regions? Because you need to push for access, as Parmi said, to try and play around with it. But there could be other models from other companies.
I mean, it sounds like right now Anthropic is really leading the pack when it comes to that intelligence layer that can uncover some of these cybersecurity vulnerabilities. So to my mind, Microsoft always had, bugs in their operating system and software, and companies discover that. But obviously, this has become a much bigger deal, given it's coming from a foundational frontier model company. At the same time, I do think companies will adapt to the vulnerabilities. They will obviously figure out what is it that is most exposed and patch it. But this is no different than, what we have seen with software over the past 30 years in terms of fixing the bugs they have.
Parmi, how much of this is hype, either on the good or the bad side?
I think two things can be true at the same time.
True.
I think Anthropic, in teasing a model, it's so powerful we can't release it. OpenAI did that with GPT-2, and then they did release it, and it was fine. But it creates this idea of scarcity and excitement, and that plays in their favor ahead of their IPO. On the other hand, I think it is true. We've had independent verification that these models can be dangerous. And to Mandeep's point, patching systems used to be done every month, every few months if you're a bank or you're a software company. Now these zero-day flaws are being found and potentially exploited within hours. The time between a vulnerability being exposed through responsible disclosure and a possible attack has collapsed in the last 4 to 5 years from like a couple of years to now just 4 to 5 hours. So companies need to move much more quickly in how they fix these flaws because these AI tools are out there.
We talk about companies, but this could also be governments. Right?
Absolutely.
If they get operating systems on how planes fly, this is a disaster zone.
I think there was an attack on the Mexican government where some of their data was compromised. So from that perspective, these are very effective tools for hackers to leverage, and really things can happen in real time. So that's what's changed from prior sort of vulnerabilities, that attacks can happen at a much faster pace than they used to with these tools that being out there.
I mean, in terms of timeline, when are we expecting to have just a clearer picture? Because we know that also Europe is trying to understand these systems. If you're a European company, and I've heard this in the corridors of Washington this week, is that actually you have even less access to the models that the U.S. companies have. So if you're, for example, a European bank, you'll have less access than a big Wall Street bank.
Yeah.
So is this region more vulnerable?
Well, I think there was some consternation among European Union regulators that they did not get access to Mythos. However, as I mentioned, the UK's AI Security Institute, based right here in London, is kind of seen as this global neutral arbiter of what makes safe and secure AI. They're staffed with quite a lot of good AI researchers. That's based here in Europe, and that has been providing information immediately once they do their own due diligence. So I think that's something to look to as a good thing. But of course, generally speaking, we need much more transparency from the companies. They're not obliged to share their information with the UK's AI Security Institute. They're doing that voluntarily, and they are becoming more closed with each model. They're providing less and less information, and that needs to change.
And they're providing less information because this is a commercial war.
Absolutely.
I mean, at the end of the day, they just want to make money. Right? They're selling.
Absolutely. If we didn't have the race dynamics, if we didn't have geopolitical pressure and FOMO among governments and companies, I think they would absolutely be much more transparent. But this is a winner-take-all game. There wants to be geopolitical advantages, and so I think it plays in their favor as much as possible to not release too much information.
And Mandeep, what do we know about China? Again, one of the things that always strikes me as a non-AI expert trying to understand as much as I can is when they say, oh, China's, 6-9 months away from us. I mean, that feels like a very short amount of time.
Yeah, and look, these models are becoming more and more capable. So the Chinese models are also improving in capabilities. And, some of these attacks can come from any model. At the end of the day, I don't think Anthropic knows exactly how hackers are going to use their model, which is very capable. So from that perspective, if you are in the business of hacking, you've got a lot more ideas than, companies that are developing these models, very powerful models. But so from that perspective, the attacks could come from any model.
I mean, presumably, if I need to defend myself, do I use Mythos as well to tell me vulnerabilities and how I can fix it?
Yes.
And you would hope so. I think that's why they are going through this process where they are having these entities play around with that first. Yeah. And hopefully they're telling them where the vulnerabilities are. But that's where the risk lies.
There was a JP Morgan person who was saying recently, behind the scenes, that they're very excited about this because now they can use this tool to look for vulnerabilities in their own systems and potentially save costs on human cybersecurity experts. I think that's a little bit short-termist in thinking because cybersecurity is a cat-and-mouse game. You might have this tool, but the bad guys will have the tool too eventually. And so that doesn't mean you can just cut staff. You're probably going to need them down the line too.
I mean, to you both, how much, should we be paying attention to AI and how it's also changed the war in Ukraine, but especially in the Middle East?
Yeah, absolutely. I mean, the claim that Anthropic is making is this model has got a lot more intelligence than their prior versions. So from that perspective, it's all about imagining what you can do with a prompt or with an agentic functionality. And if it can really automate a lot of the patching, that can save a ton of time and probably potential cyber attacks. So from that perspective, the capabilities of these models need to be well understood. And I'm sure that will be the case in this trial period when, all these entities are looking closely at the model.
I mean, is it something that also, I don't know whether AI now chooses targets. I mean, there are a couple of things. But is this, we saw Anthropic, versus the DOJ in the U.S. Is this just going to take much more space?
I think AI is becoming integral to warfare. We saw with Project Maven was a part of the Pentagon. That's been around for quite a number of years already, so the U.S. has really been pushing that. And Anthropic's Claude, before Anthropic, what had that bust up with the DoD, was used to help with choosing targets, to help choose targets to strike in Iran. Not deciding them, but providing the intelligence to do so.
Okay, thank you both. We could talk for another 2 hours, so you'll have to both come back on. Bloomberg opinion columnist Parmi Olsen and Mandeep Singh from Bloomberg Intelligence. Up next, it's Bloomberg Brief, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
On
AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It is 5 a.m. in New York City and 10 a.m. in London. Good morning. I'm Scarlett Fu in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh all-time highs. Stock futures wavering after the S&P 500 and NASDAQ 100 post back-to-back record highs. More assurance that the end is near. Oil tumbling as President Trump again says a peace deal with Iran could come soon. And Netflix is set to decline after its earnings forecast misses estimates and says chairman and co-founder Reed Hastings is moving on from the streamer. Let's show you what's happening in futures right now. We've turned higher, modest gains here across the board for S&P, NASDAQ, and Russell 2000 futures. And this comes a day after the NASDAQ 100 and the S&P posted back-to-back record highs. On Wednesday, the S&P 500 closed above 7,000 for the first time. President Trump now saying the two sides, the U.S. and Iran, may meet this weekend for a second round of direct talks. He also says it may not be necessary to renew the two-week ceasefire that is set to expire on Tuesday. The S&P, if we continue to go along this path, will close higher for a third straight week with gains of at least 3%. And of course, optimism over AI and earnings is really underpinning this advance. You're looking at gains in Treasury prices, so that is pushing yields lower right now. 3.76% on the 2-year, 4.29% for the 10-year. Pretty much has been in a range the last couple of weeks. We should mention there is an 8:30 a.m. retail sales report, very influential for the Treasury market. Of course, after the jobs report and inflation, retail sales is really the temperature of the U.S. economy and consumer spending. And in terms of commodities, you could see declines in crude, both New York crude and Brent crude, of at least 2%. We feel like we're kind of settling down. The volatility is really tapered off, and now we're in the low to mid $90 range for oil. Gold prices moving up just marginally, up by 0.2%. It's found some support here right around the $4,800 level. All right, let's get back to equities, and for some stocks to watch, here's Chloe Melly. Hi, Chloe.
Good morning, Scarlett. As you just mentioned, we're seeing a lot of weakness in pre-market for Netflix after its second quarter forecast really disappointed investors, and it also announced the departure, the fact that the co-founder Reed Hastings would be stepping down. So this is the first set of results since Netflix walked away from this really contentious battle for Warner Brothers, and now the focus is back on how engaged Netflix can keep those subscribers, and so we're seeing a bit of weakness today. Moving on to Sweden, where Ericsson missed estimates and also warned of rising chip costs, and that is really compounding existing challenges for that telecom sector, including the slow progress on 5G network upgrades. And so we are seeing, well, we had actually a little bit of weakness, but now it seems that the shares are quite flat for Ericsson. And finally, Alstom over in France, the train manufacturer, is down massively this morning, almost 30%, after withdrawing its financial guidance. It said that there were some big delays in major rail projects, and so that was impacting cash and margins. And so we are seeing that reflected in that massive drop this morning.
All right, thank you so much, Chloe Melly in London for us. Now, coming up this hour, we're going to catch up with Citi's Veronica Clark on the Fed's rate path as the Iran war nears day 50, and of course get her take on what retail sales likely look like in March. But first, President Trump claims Iran has made some key concessions in negotiations with the U.S.
I think we have a very successful negotiation going on right now, and I think it'll be, if it happens, it'll be announced fairly soon, and that'll give us free oil, free Hormuz Strait, everything will be nice, and I think your oil price will go down to lower than what it was before, and I think a lot of good things will happen.
Joining us now for more is Bloomberg's Paul Wallace. Paul, so the president's sounding a very optimistic note. He's been fairly consistent in talking about progress between the two sides, U.S. and Iran. This is in contrast, though, with what leaders in Arab states and Europe are saying. They expect things will take a lot longer for there to be any kind of peace deal.
Yes, there definitely is a bit of a mismatch between what Trump is saying and what many other world leaders are saying, and in some senses what the Iranians themselves are saying. So, the next thing we have to watch for is the ceasefire, which ends on Tuesday, late US time. The expectation is now firmly that it will get extended. Our reporting a couple of days ago was that the two sides were looking at a 2-week extension, but it now seems that there's a possibility that Trump will try and go further and essentially announce what, at least in his view, will be a proper peace deal to formally end the war. Now, he might go ahead and do that, and he's got plenty of incentive to do that. He wants energy prices to go down further. Americans, broadly speaking, do not like this war. So, he's got a lot of incentive to effectively say it's over and done, and he will obviously claim victory, strategic victory. But there'll be a lot of skepticism because there are a lot of contentious issues between Iran and the US that are definitely going to take a long time to resolve. Things like the nuclear issue, Iran's enrichment of uranium, its stockpiles of highly enriched uranium, its missile program, its support for proxy militant groups. And then, we've also got the Strait of Hormuz. It is possible that whatever is announced in terms of extending the ceasefire or, a formal deal will entail the reopening of Hormuz. I think if Trump can get that and essentially get an immediate reopening of Hormuz, that will be a big win for him, even if there's still very serious issues of, Iran's nuclear program and its missile program and its proxies are still undecided and still unresolved.
Yeah, that's a pretty long laundry list that you just ticked off for us there that the two sides need to agree on for there to be any kind of more lasting ceasefire beyond the 14 days that was announced. Chief among them, of course, and most importantly for investors, is the Strait of Hormuz. You mentioned that that's the big point here. Who controls the Strait of Hormuz right now? Because the U.S. Navy has imposed a blockade on the strait. However, we have heard reports that a Pakistan-flagged tanker, the Shalimar, became the first carrier to exit the Strait of Hormuz since this U.S. blockade began. Why is that significant? What does that tell us, Paul?
It is significant. I'm not entirely sure if that particular ship had had been an Iranian porter was heading there. If it had, then yes, then it's effectively bypassed or got through the U.S. blockade, whether that's by luck or the U.S. Navy allowing it through. I don't know. But the point is that the strait is still effectively closed. And in terms of who controls it, I think the answer is both Iran and the U.S. right now. The U.S. blockade is pretty strong. From a tactical point of view, it's been effective. It has been successful in terms of stopping the number, or really lowering the number of ships going to and from Iranian ports, which is what it's there for. And then on Iran's side, ships, other non-Iran linked ships are pretty much staying away from the strait because the risks are still too high. So the waterway is still de facto shut. As you said, for global markets, I think for leaders in Gulf Arab states, and to be honest, in Europe and elsewhere, even Trump, reopening that strait is the most immediate concern. The closure is hammering the global economy, leading to real fears of stagflation. So that will be the most immediate term issue for the U.S. to solve.
All right, Paul Wallace, really appreciate your joining us this morning. Paul Wallace is our managing editor for the Middle East and Africa. Thank you so much. Meantime, over in China, President Xi Jinping wraps up his busy week meeting with world leaders while Washington is occupied with the conflict in the Middle East. Let's get more now with Bloomberg's Laura Davison in Hong Kong. Laura, good to speak with you. Usually we speak stateside, but you're in Asia right now. Tell us a little bit more about the diplomacy that Xi Jinping has been working on in Beijing this past week, because as far as I understand, there hasn't been any formal gathering in Beijing, has there?
Yeah, but despite a lack of a formal gathering, it was really a banner week for Xi and other Chinese officials in terms of meetings with foreign leaders. They had the Spanish Prime Minister, the Crown Prince of Abu Dhabi. They had other high officials from Italy, Sergei Lavrov from Russia. So just To Lam from Vietnam. So just sort of a cross section of the globe in Beijing, and meeting with President Xi and Chinese officials. Really incredible split screen, because at the same time, Trump is actively feuding with Giorgia Meloni, the Pope, Keir Starmer. You have Starmer and Macron leading this meeting Friday to talk about reopening the Strait of Hormuz that actively does not include the U.S. As part of that gathering, and Trump continuing to kind of deepen his isolation as he's kind of picking these fights on social media, as well as demanding that allies come to the U.S. military's aid here in this conflict, and everyone is essentially ignoring him.
Yeah, that's really interesting about this meeting that Europe is kind of leading on the Strait of Hormuz, in particular because they're still waiting for something to happen between the U.S. and Iran before they can really move forward with any kind of action. You had mentioned that China is doing a lot of outreach at the moment, and one of those countries it's reaching out to is Italy. And of course, this comes as President Trump has really widen this rift with the Italian leader, Meloni. Tell us a little bit more about what Beijing is trying to achieve here.
Yeah, Beijing is sort of sees an opening here of what was once Trump's closest ally in Europe, at least sort of culturally and from a sort of philosophical point of view. She has really distanced herself from Trump, as well as cut ties, some formal ties with Israel as well. So she has found an opening here, and we saw a meeting from a high level, for the foreign minister of China, as well as a top official in Italy, to talk about strengthening their geopolitical ties, their economic ties, and this is just kind of an example of having NATO allies who are going to China looking for business opportunities, looking for security opportunities, looking for sort of the kind of relationship that you would expect them to have with the United States in years past. And now China is playing this much expanded role on the world stage, and kind of being chief diplomat in charge.
All right, Laura, I really appreciate your setting up the context for us here. Laura Davison joining us from Hong Kong with what China's been doing here as playing its role in trying to come up with a diplomatic solution, or perhaps positioning here as the U.S. and Iran continue to try to schedule talks to discuss an accord. Now, the teams over at Deutsche Bank and Wells Fargo, among others, are saying that this haven rally we've seen in the U.S. dollar, driven by the war, is now likely over, with the banks boosting their dollar hedging ratios to a 2-year high. That's according to State Street. So let's get some more on this markets angle with Bloomberg's Ven Ram. Ven, good to speak with you. And I look at the Bloomberg Dollar Index. It has been down over the last 2 weeks. Yesterday, it broke that streak a little bit, but we have been on a downtrend here. And I guess a lot of that is just as investors rediscover their appetite for risk, they're moving away from the U.S. dollar, aren't they?
You're absolutely right, Scarlett. I think that, the appetite for further dollar longs is being tested in the market right now. And I think that, it's fair to say that what the markets were doing during the war was run to the safety of the dollar. But now that there are signs that the, ceasefire is going to hold and probably continue for a longer time, I think that, the incremental demand for the dollar hasn't quite come through. And if you look at the speculative positioning in the markets, I mean, it is somewhat bullish. It's mildly bullish on the dollar, but not overwhelmingly bullish as we have seen previously in the cycle, most notably in 2022. And if you look at real interest rates, which underpin where the US dollar really goes, the trajectory, and those real rates have been pretty steady despite the war. So I think that the additional incentive to buy and hold the dollar is kind of waning, especially if you consider the fact that the Federal Reserve is going to be inclined to cut rates in the near future, given the new Fed chair that we've got. So I think that, all in all, I think that, the additional positioning in favor of the dollar bullishness is kind of lacking.
Okay. In terms of catalysts for financial markets, clearly everyone's kind of just moving on whatever comes out of the White House, whatever comes out of the Middle East. But are there data points that traders are really keying off of? And I ask because we have this retail sales report coming out this morning at 8:30 a.m.
Well, I think that, for me, what is going to matter most, and I think that's true for a lot of traders as well, is what the inflation readout is going to look like. We know that the US economy has been pretty resilient, and I have no doubt that it'll continue to be resilient, even though, the jobs market is off the peak. But that's not to say that we are going anywhere near a recession. So what you get is a picture of a US economy that is pretty resilient. But what happens to inflation down the line is what is going to be crucial for the markets. Even though the US is a net energy exporter, I think that, the gallon prices, pump prices have shot up about 20 to 30% since the war started. So I think that is going to weigh on inflation, which is why I think that the White House is acutely mindful of that, and which is why they are in fact dialing back on the war noise. So I think that, inflation is going to be the big driver of rates and currencies in the coming months, and of rates and currencies in the coming months. And I think that it'll take a couple of months for those readings to come through.
Got it. Ven, really appreciate your joining us. Ven Ram is our cross-asset strategist joining us from Dubai. Now let's move on to some other top stories trending on the Bloomberg terminal this morning. Hedge funds posting a strong recovery in April, recouping losses driven by the Iran war from the previous month. Point 72 and Jane advanced 2.4%, while Millennium added 2.3%. UK Prime Minister Keir Starmer is again facing calls to resign over the appointment of Peter Mandelson as ambassador to the U.S. Starmer was forced to acknowledge on Thursday that the Foreign Office gave Mandelson security clearance despite objections from vetting officials. Starmer had previously assured the House of Commons that due process was followed in his decision to appoint Mandelson. Industrial metals climbing to a record high on the London Metal Exchange, driven by gains in aluminum. The LME index has rallied by almost 12% over the last 4 weeks and was at an all-time peak at yesterday's close. Coming up on the brief, Netflix unable to break its streak of post-earnings losses. We've got more on the streamer's results next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We ended last year with more than 325 million paid members, and as that number continues to grow, we are entertaining an audience that is approaching 1 billion people, which is an exciting milestone to strive for, and it'll be an exciting milestone to achieve. But even given that number, we still have plenty of room to grow into our addressable market.
Shares of Netflix falling in pre-market trading after its second quarter forecast fell short of the Wall Street estimates. The streaming giant also announced the resignation of chairman and co-founder Reed Hastings from its board. Bloomberg's Neil Campling joins us now for more. So, Neil, a disappointing look ahead here from Netflix. And I guess a big part of it is that it's going to be spending a lot more on programming. And this goes to the idea that, in the same way that hyperscalers have to spend a lot on their AI build out, Netflix is going to be spending a lot on live sports.
They do indeed. The fact is that twice in the last year, Netflix have raised pricing for US subscribers. You need to justify the price rises by investing in the content. I think part of the reason why the stock was trading lower in pre-market this morning is because analysts had expected an upgrade to the full year guidance to reflect those price increases, and that hasn't come through. The second element is the fact the stock has rallied 40% from recent lows when it walked away from that Warner bid. And that's also another sign of angst among traders, I think, in that will Netflix, having shown their hand once, be looking for more M&A transactions to build out that pipeline of content? I think that's what people are perhaps expecting them to happen next. In the meantime, obviously, as you mentioned, the founder has decided to retire, to step back from the company.
Yeah, he's going to move on to focus on philanthropy and kind of pursue his other interests after serving on the board. I want to follow up with another question here because the White House is working on a plan to give U.S. federal agencies Anthropic's Mythos AI. How much of a threat does this pose for the financial sector?
The threats being discussed, I think, are around the fact that that it's such a powerful tool. It actually detects where there are compromises in any system. We heard earlier this week that it managed to find flaws in every single operating system that existed. And some of these flaws have taken like 40 years and 5 million tests and not been detected before. So actually, if we're using this tool in the right ways, it could be actually very, very beneficial. Now, remember, we have some stats that show that cybersecurity spending is over $450 billion every year. And there's an economic impact of over $10 trillion to cyber crime every year. So if these tools are being used in an effective way, they could actually be very, very beneficial to the economy.
All right, Neil, really appreciate your joining us. Neil Campling of Bloomberg in London. Thank you so much. From New York, this is Bloomberg Brief.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Scarlett Fu in New York. It's time now for your front page news. First up, on the New York Times, the White House shrugging off the shaky economy due to the war in Iran. The Times highlights the exuberance on Wall Street, posing a sharp contrast with the hardship facing many Americans. Next up on the Washington Post, the resignation of acting ICE Director Todd Lyons. He presided over the rapid expansion of ICE to implement President Trump's mass deportation campaign. Lyons, who is a career ICE official, says he wants to spend more time with family. And finally, the Financial Times reporting that J.P. Morgan, Barclays, and other Wall Street banks have started trading derivatives that would benefit if private credit funds run into trouble. According to FT sources, those banks have begun trading credit default swaps against flagship private credit funds run by the likes of Blackstone, Apollo, and Ares Management. Now, coming up on the Bloomberg Brief, Citi's Veronica Clark, its chief U.S. economist, joins us for more on economic data and the Federal Reserve and what the central bank does next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning. I'm Scarlett Fu in for Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh all-time highs. Stock futures moving north after the S&P 500 and NASDAQ 100 post back-to-back record highs. More assurance that the end is near. Oil tumbling as President Trump again says a peace deal with Iran could come soon. And Netflix is set to decline at the open after its earnings forecast misses estimates and says chairman and co-founder Reed Hastings is moving on from the streamer. Here's where things stand with futures. We're looking at modest gains with the Russell leading the way here after the S&P and NASDAQ yesterday closed at record highs for a second straight day on hopes that the U.S. and Iran are looking to de-escalate and could perhaps meet for a second round of direct talks this weekend. You look at treasuries, we're looking at higher prices and therefore lower yields, but pretty modest declines right now, especially as we await the 8:30 a.m. retail sales report for the month of March. And oil prices, that is the big focal point the last couple of weeks. They are moving down. You can see NYMEX crude now just above $91, Brent at $96. Volatility has really tapered off in this part of the commodity space. Gold has also found some support right around the $4,800 level. For some stocks to watch, let's go over now to London and check in with Chloe Melly.
Good morning, Scarlett. Netflix is down 10% in pre-market trading this morning after issuing quite disappointing second quarter guidance and also announcing that co-founder and chairman Reed Hastings would be stepping down. So this is the first set of results since Netflix walked away from this contentious and really long takeover battle for Warner Brothers. And so now the emphasis is put back on whether Netflix can really keep those subscribers engaged. And so we're seeing a lot of weakness there. Moving on to Onto Innovation, which is up this morning in pre-market, up about 3% after being upgraded to a buy rating by Stifel. The analysts have said that the preliminary revenue from this semiconductor manufacturer was solid, and therefore we are seeing this vote of confidence reflected in those shares. And finally, Alstom, the French train manufacturer, is seeing a lot of weakness this morning. We're down almost 30% after it withdrew its financial guidance, saying that it was facing big delays for some major rail projects. And so analysts are now saying there's a lack of discipline and of cash discipline specifically, and inconsistent execution. And so Alstom is going to have to work hard to regain that investor confidence.
All right, Chloe, thank you so much. Chloe Melly with our equity movers to watch for. Now, Citi's Veronica Clark, its U.S. economist, is weighing in on the war's impact on the Federal Reserve's rate path, writing, quote, if oil prices remain stable and core inflation cools, as we have seen in last week's data, we continue to think rate markets can rapidly return to pricing cuts and the Fed can deliver before the end of the year. I'm pleased to say Veronica is joining us now. She is, once again, U.S. economist at Citi. Not only are you calling for the Fed to cut, you're calling for the Fed to cut 3 times.
Yes.
And you've pushed back that date to later on in the year. What's the thrust for rate cuts this year?
Yeah, I mean, the next couple months, the focus is absolutely on the inflation data, and we'll probably have some uncomfortable and some weird inflation data the next few months still. Nothing really in that core inflation number that we saw in March, but it's probably just too soon to see it. But as we get to the summer, yeah, if oil prices have come down, I do expect softer demand is going to limit the pass-through of higher oil prices to core inflation. And once we get to the summer, the pattern the last few years has been that we start to get weaker labor market data over the summer. It's really by late summer that the unemployment rate has risen from the start of the year. We expect that pattern to repeat again this year. In the last couple of years, that's meant a Fed cut starting in September, and that's what we have in our forecast.
Yeah, we got jobless claims, and it reinforces that we have this low fire environment, and again, backs up the idea that the labor market is fairly resilient. How accurate a picture of the labor market is this data point painting?
Yeah, claims are very important, of course, and especially if we were ever to see these big layoffs start to pick up, but we haven't seen that. This has been a very low hire, low fire environment for a while, and unfortunately, claims are going to become a worse indicator the longer that the weakening is just driven by low hiring, right? People will enter unemployment, but layoffs are still low. They'll expire those benefits after something like 26 weeks, but they could still be unemployed, just not receiving benefits. But even those jobless claims data, they're helpful because we get them every week. They have had the same seasonal pattern as other labor market data, where really it's in May they start to rise.
Okay, so you're saying that in summer months we tend to see rising claims, and that would be enough to start pushing the unemployment rate higher?
It could be, right? That's been the pattern the last couple of years. This low fire environment has meant that the unemployment rate is rising something like 3 to 4 tenths every year. Now there are a lot of immigration, population changes to deal with this year. We experienced that last year too, though, and it's been pretty consistent that demand is just running below whatever that break-even employment rate is. That's been the trend for the last few years, and yeah, I expect that to repeat this year.
Do you think this is something that's well understood and priced in by the market?
I don't necessarily think so. I think maybe these big, population changes, and we'll see how that plays out in the summer. Maybe it is enough to keep the unemployment rate from rising more. But it does seem like even market pricing, there's this seasonal pattern where it's really in Q1 we're expecting fewer rate cuts for the Fed the last few years, and then it's really around June we start to reprice how much the Fed could be cutting.
Okay, and of course, when it comes to the Fed, we have a meeting coming up at the end of this month, and then the next one won't be till June 17th, and it's a big question mark as to who's going to be leading the Fed in that mid-June meeting, because the Senate Banking Committee has announced the date of Kevin Warsh's confirmation hearing, but the Department of Justice, as far as we know, is still moving ahead with its probe into Jay Powell over the renovation of the Fed headquarters. So, Veronica, are we going to get a confirmation hearing but no vote?
We might. We really have no idea how this is going to play out. Yeah, is this April meeting going to be Powell's last or not? As far as we know right now, Senator Tillis is planning on not, supporting the Warsh nomination until there's clarity on the DOJ investigation. And we really don't know how that's going to proceed. It's only about a month before Powell's term as chair does expire.
So, yeah, big question marks on that front. We've got a retail sales report coming out in about 3 hours' time. And for the U.S. market, this is a really important data point because it'll be the first one since the start of the war really sent oil prices surging.
Yeah, March retail sales are, they're reported in nominal terms, right? So they will look strong. There will be this surge in gas prices, so you'll see gas spending that increases. What we want to know is, how much does that subtract from spending on other types of goods, right? You have to spend more on gas. March might be a little bit too soon to know those effects, right? I mean, not everyone necessarily filled up their tank right away, with higher gas prices. So it might take time for that to feed into softer consumption. It is also coming at a time where people did get somewhat larger tax refunds, around these months. So maybe that helps buffer the increase in prices.
Yeah, but it's getting absorbed by higher prices elsewhere, even with those tax refunds. And if people don't end up spending as much as I think a lot of people in the market had anticipated, doesn't that remove one of the big drivers of GDP growth this year?
Yeah, absolutely. Consumption has been slowing. We've seen that for the last couple months already. Whatever you were expecting, the boost to consumption from those larger tax refunds to be should probably be less now in real terms, that a lot will be going to paying higher gas prices. So yeah, we would expect that consumption is slowing this year. The fundamental driver of consumption first and foremost is going to be, like, do people have a job or not? Is aggregate labor income slowing? And it will be, but unless you see those larger layoffs, I imagine consumption would hold up well enough.
So we spoke with Hank Paulson, the former U.S. Treasury Secretary, and he was saying that policymakers in the U.S. should not ignore the budget deficit, in addition to kind of looking through everything else and trying to come up with backup plans. He believes the U.S. needs an emergency make or break moment, a break the glass backup plan in case there's a doom loop where demand for treasuries really falters and the Fed becomes a buyer of last resort. How worried are you about something like that over the next year?
Not so much over the next year. I mean, it's obviously a topic that comes up a lot, and who knows what will happen, 10 years or so down the line. But I do think, in an environment where the Fed is cutting, at least biased to be cutting, We don't quite see the demand backdrop that we had 4 years ago. We're not as worried about that inflation picture. I think there are buyers of U.S. Treasuries out there, and then you're not as worried about that doom loop, maybe.
All right, Veronica Clark, thank you so much.
Thank you.
She is U.S. economist over at Citi. Really appreciate her getting up early for us this morning. Now, former U.S. Treasury Secretary Hank Paulson also spoke on the central bank's independence. Let's take a listen to what he said.
What the war has shown is the dollar is there's no other safe haven, right? So the dollar was declining for a lot of reasons that should have been declining. Frankly, I didn't like to see it declining, but boy, in a crisis, the dollar strengthened. But I believe to the extent it adds to our deficit, it poses a risk, a longer term risk. And that's why I really believe the independence of the Fed is so important right now, because at the same time, because the independence of the Fed really increases the confidence that investors have in our economy, in our financial markets, and so on. And at a time when we're piling on so much debt, I think it's really important that we have that.
Has confidence in the Fed as independence already been undermined?
There's issues that are raised, right? But I look at it, I look at, when you have a chairman of the Fed, you want someone who understands markets, who is a good communicator, has a good understanding of sound economic principles. And I think Kevin Walsh meets those tests, right? And he's been before, he's done it. Now, I think his job becomes more difficult because there's independence or the perception of independence. So I think how this transition between Jay Powell, who's just been a star performer and got great credibility and integrity, I think how that transition is handled and how the administration deals with it is either going to make Kevin's job more difficult or, somewhat easier. But Kevin won't have an easy job anyway. And, I compliment the Trump administration on selecting him.
That was former U.S. Treasury Secretary Hank Paulson speaking to Bloomberg's David Weston. Now to other top stories trending on the terminal this morning. Sequoia Capital raising about $7 billion for a new fund, the first under new leadership. The fund will allow Sequoia to expand its bets on large companies, including AI startups like OpenAI and Anthropic. The FAA ordering airlines to cut flights at Chicago O'Hare this summer to prevent overscheduling and flight disruptions. The agency is limiting daily takeoffs and landings by about 400 fewer than what airlines have scheduled. The move complicates a turf war between United and American Airlines at O'Hare as they duke it out over gate access and market share. The cap will be in place from May 17th to October 24th. OnlyFans is in advanced talks to sell a minority stake to San Francisco-based fund Architect Capital. The deal values the platform, best known for adult content, at more than $3 billion. OnlyFans declined to comment. Architect did not immediately respond to a request for comment. Coming up on the Bloomberg Brief, President Trump's attempt to turn voters' focus from Iran to the economy. We've got more on that effort next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now. And despite our little diversion to the lovely country of Iran, we just hit a brand new all-time high.
That was President Trump downplaying concerns surrounding the war with Iran and touting his economic record ahead of November's midterm elections. Joining us now is Jonathan Tamari of Bloomberg Government. And this is something that his team, the White House team, is really pushing for, to focus everyone's minds on the economy rather than the war in Iran. What specifically is the president's pitch beyond stocks have had a record run? Because oil prices are elevated.
Yeah, so what he's talking about and what Republicans in Congress especially want to talk about ahead of the midterm elections are the tax cuts that Republicans passed and the president signed into law last year. In particular, you saw on the sign that was up there behind him, the cuts for taxes on tips and the cuts for taxes on overtime. This is really the centerpiece of the pitch from the White House, from congressional Republicans to voters this year about how they say that they have delivered for working families, for the average family, cuts that they will feel. Now, the problem for them is that polls suggest that a lot of people are not feeling that they're not seeing the big benefits. The average tax refund this year is up about $350, which is certainly great if you're getting that. They had promised something like $1,000 or more on average, so it's certainly falling short of that. And most polls suggest people are much more concerned about the rising gas prices than they are happy about whatever tax cuts that they're receiving right now.
Yeah, so it might be a little bit of a tougher sell than it would have been otherwise. Meantime, the president can, of course, get away from Iran, and he is saying that Iran is making some key concessions here that would pave the way for a deal to end the war. What is he saying now? What is he promising now?
So there's a lot of still vague a lot of what he says is not necessarily very specific. He said something about Iran giving up the nuclear dust in his term, which does seem to refer to some of their enriched uranium that is buried after the strike that he led last year. But it's not all. It has not really been confirmed by Iran. And so he's been talking, obviously, about having a deal being close for some time now. It sounds like they are on track to at least extend negotiations or to have new negotiations and potentially extend the ceasefire if necessary. But I think the details still remain pretty vague, and you don't always know if the president is speaking in specifics or speaking about what he's hoping for. So you kind of have to watch and see also what the Iranian side says as this goes on.
Absolutely. Very well put. Jonathan, really appreciate your joining us. Bloomberg Government's Jonathan Tamari joining us from Washington. Thank you so much. And of course, we're keeping an eye on one stock in particular here in the pre-market, and that is Netflix. You can see it's extending post-earnings declines after a disappointing forecast for this quarter. The streaming giant also announced that its chairman and co-founder Reed Hastings is resigning from the board. Mandeep Singh of Bloomberg Intelligence joins us now. He is in London for the week. Mandeep, just walk us through how significant Netflix's earnings are in terms of setting the tone for the rest of the tech sector's earnings.
Yeah, look, I mean, Netflix really doesn't have an AI story. So when you think about their growth rate, they're guiding for low teens growth. EPS growth will be even lower, around high single-digit percentage. And so, the fact that they don't really have any big content slate coming up, that subscriber growth is going to look muted, and they are pointing to some margin compression. So from that perspective, the bellwethers on the AI infrastructure side will have very strong growth, whether it's Alphabet or Microsoft. Even Meta is expected to grow high 20%. So from that perspective, where there is an AI story, you will see much higher growth, and that's why you see that stock reaction for Netflix.
All right, let's focus in on AI then and stop dancing around it. Anthropic CEO will be meeting Susie Wiles, the chief of staff, at the White House today. This is according to Axios. Anthropic is really kind of center of a lot of people's concerns in Washington. Walk us through why this is. The U.S. government is preparing to make a version of Anthropic's powerful new AI model, Mythos, available to major federal agencies. How much of a threat is this for the financial sector?
I mean, look, it clearly is a very powerful model in terms of, the size of the model, 10 times more parameters. And, these models are measured in terms of their level of intelligence and the tasks that they can do, on an automated basis. So from that perspective, it has already pointed to, vulnerabilities for existing operating systems and browsers. And what they are saying is, everyone should be looking at this model and saying, what are the vulnerabilities that they're exposed to? And that's why it's limited to, certain entities. I mean, the government has labeled Anthropic as a supply chain risk. So it's interesting that, the CEO is meeting Susie Wiles. And it'll be interesting to see how they go about releasing this model to all the enterprises and making it available to the subscribers, because we know Anthropic has been involved with some of the cyber attacks where Anthropic was used as a tool. So clearly there is that exposure that's out there.
Yeah, Anthropic has limited the release of Mythos amid concerns that hackers could weaponize its capabilities to steal data or sabotage victim networks. One more story I wanted to get your take on, Mandeep, is Apple's marketing chief for Watch, AirPods, Home, and Health is leaving. We've learned that Stan Ng is retiring after 31 years at the company, but I'm wondering if there's a concern about talent, a brain drain taking place at Apple.
I mean, right now you are seeing talent go to all these frontier LLM companies, notably Anthropic. So from that perspective, Apple also has been sitting out when it comes to, building its AI capabilities or investing in AI data centers. And at some point, I think they will have to come up with a strategy that is appealing for investors as well as, their own employees, because people right now are focused on that AI exposure or, what is the next leg of growth for a company like Apple.
Right. And so far, Apple looks like it's fallen a bit behind the other big tech names, even though it has signed this agreement with Google for Gemini. Mandeep, always appreciate your joining us. Mandeep Singh, Bloomberg Intelligence's chief tech analyst there, joining us from London. Now, coming up on Bloomberg Brief, more earnings and a Supreme Court opinion day. We're going to get you set up for your trading day this Friday morning. Next, this is Bloomberg Brief. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good Friday morning. This is Bloomberg Brief. I'm Scarlett Fu in New York, in for Vonnie Quinn. Now a look at what's ahead today. First up, earnings coming in from Fifth Third Bancorp, State Street, and Ally Financial. So the big banks and the financial sector continue to report. Then we've got Fed speak from Daly, Barkin, and Waller throughout the day. We'll bring you those headlines as they cross. And in Washington, it is opinion day at the Supreme Court. Rulings may come, though, through on Louisiana versus Calais and Trump versus Lisa Cook. And again, we will bring you headlines on those as they come through. Here's a quick look at what's going on in the commodity space. You have declines in oil prices. Brent crude and NYMEX crude each off by at least 3.3% right now. President Trump saying Iran and the U.S. may meet for a second round of direct talks this weekend. We'll keep you posted on those developments. He also says it may not be necessary to renew to the two-week ceasefire that's set to expire on Tuesday evening. And gold prices, little change at the moment. You look at S&P 500 futures, they're currently pointing to a higher open. The U.S. dollar, however, declining, resuming its losses over the last couple of days. It's been kind of a slide for the U.S. dollar in the last 10 sessions. And the 10-year yield, little change right now before an 8:30 a.m. report on retail sales for the month of March, which is expected to show an increase because of the rise in gas prices. That does it for Bloomberg Brief. Surveillance is up ahead next. From New York, this is Bloomberg. When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. when you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're probably in the sort of global relief rally.
Markets are pricing in a resolution.
Equity markets have started living in the future.
This type of environment, you just stay in large caps.
There is a short-term look-through in the market. That's what keeps the stock market going.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now, coming into Friday following a week full of verbal intervention.
Iran is in very bad shape. I think they're very desperate. They want to work a deal. They would like to work a deal. They're willing to do things today that they weren't willing to do 2 months ago. No nuclear weapons. Free oil, free Hormuz Strait, everything would be nice.
The president claiming Iran is making key concessions, happy to send equity markets to back-to-back record highs, even as some foreign leaders are indicating a peace deal could take 6 months to be fully agreed.
Yeah, here's the issue. We've seen a complete reversal, a violent reversal in equity markets with one of the fastest rebounds ever from some of the lows. And yet, yes, there are some caveats, like it is going to be difficult to discuss the nuclear dust as well as reopening the Strait of Hormuz in any kind of feasible long-term way. It doesn't seem to matter because ultimately people see that there is a desire to prolong this ceasefire. At this point, talks between the U.S. and Iran are focused on simply extending the ceasefire out to those 6 months to get some sort of longer-lasting agreement.
Back-to-back record highs in the equity market, heading towards 3 weeks of gains on the S&P 500 for the first time so far this year, encouraged by the words of the president. The claim, a key claim, claiming that Iran is making key concessions. We've yet to see that come from Iran, and that is a key sticking point.
We've yet to see that come from Iran. Reuters has some reporting that actually Iranian officials told them that maybe it won't be a full-on deal that you can expect before the ceasefire ends or within the next few weeks if a ceasefire is extended, but something more of a memorandum of an understanding to then get to longer-term peace. The president, though, is saying they're making key concessions. I mean, he told me weeks ago on the phone that they're ready to settle. At the moment, there is no deal, but the bombs have stopped. The key issue for this administration, as well as France and the UK, which are hosting this conference, is reopening the Strait of Hormuz.
Let's work through the stock moves that we've seen over the last 1-2 weeks. The move on the Nasdaq, 12 days of gains on the Nasdaq 100. Looking at energy stocks, down 8% through April. Consumer discretionary up around 10% through April. That's the big turnaround there. But within tech, we've seen semis absolutely rip. This week, Microsoft is on course for its biggest weekly gain in more than a decade. And the must follow ETF software index that a lot of people were shaken up by several months back. I tell you what, the week that's had, that week for this particular index, that index has been on fire.
Yeah, and some of the last time that we've seen moves like this is going back to the dot-com bubble, which is one reason why people are getting a little concerned, because what you're seeing is winners and losers, and on the whole, you're getting huge dispersion within the tech trade. At the same time, yes, you are getting a number that are completely ripping. Nonetheless, there are winners and losers, and you can see this shaking out with software. The likes of software really kind of struggling in certain pockets, even as others get that rebound. So when you take a look at this, is this a healthy rebound, or does this indicate some sort of blow-off top where there's a lot of concentration risk in a couple of key names.
Equity futures on the S&P so far this morning, positive by 0.25%. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research, with stocks on course for a third straight week of gains. We'll speak to Gregory Allen of CSIS on why Anthropic's new AI model is a watershed moment. And we'll speak to the Egyptian Trade Minister, Mohammed Farid Saleh, on the economic impact of the war on the Middle East. We begin this hour with stocks holding steady after reaching fresh record highs. Ed Yardeni of Yardeni Research writing, equity investors certainly have reason for optimism. Ed joins us now for more. Ed, welcome to the programme. Let's get to those reasons. What are they?
Well, first and foremost, as the Middle East situation has calmed down, the war isn't over. There's a ceasefire. It may or may not take 6 months to get a full peace agreement, but the main point, as you said, is the bombs aren't dropping and things are calming down. Then, of course, secondly, earnings have been on fire. We've had earnings-led melt-up in the stock market for a while, actually, and as the war occurred, the earnings expectations continued to increase at a faster pace. So the analysts didn't get the war memo, and they didn't get any feedback from the companies they follow that this is a concern for earnings anytime soon.
Ed, we're getting some feedback from the equity markets, some clear feedback. The enthusiasm for tech again is overwhelming. The 12-day run on the NASDAQ 100. Within tech, it's not just chips. We're seeing the likes of Microsoft, which at one point was really, really struggling, have a fantastic week as well. Ed, what's behind that renewed enthusiasm for that tech trade?
Well, in 2 words, or 3 words, the roaring 2020s. There's a lot of similarities between the current decade and the 1920s. The big one is technologically led productivity gains, which increases the purchasing power of consumers. We're seeing that. It increases the growth rate of the economy. I think we saw that most of last year. I think we had some weakness in the fourth and first quarters, and I blame that on the weather. So I expect to see, remember Chauncey Gardner from being there? I expect in the spring there will be growth. I think we're going to see tremendous growth. And really, the economy's resilience has been phenomenal, and therefore earnings have been phenomenal.
Does this type of performance in markets give you comfort or give you pause, given the incredible volatility, the whipsaw, the biggest shift from oversold to overbought, 18-day kind of round trip going back to 2016? I mean, doesn't it scream of something unstable rather than a sense of calm strength?
I'm pretty calm about it all. I'm comfortable with the way the market's behaving, because what it does is it kind of tests out the idea that there's trouble ahead. And so we saw that with artificial intelligence. We had a few corrections in that area, but yet, for all the talk about an AI bubble bursting, that's just not occurring. More money is being spent not just by the hyperscalers, but by people like me who are signing up for Claude and ChatGPT. I mean, I'm using all the models. Some of them do some things better than others. But I find myself using artificial intelligence all day as a research assistant. Now we're creating some AI tools to help us do our job. So it's increased our productivity. So from my perspective, it's all good.
You're going to make me sound like a Debbie Downer, but the more you say it's all good, the more I'm going to try to poke holes in it. And at this point, the other hole that people are trying to poke is, can you have 2 things at the same time? The idea that earnings are coming in better than expected, an economy that's more robust than expected, and commodity prices that are higher than expected without some sort of commensurate inflation that could potentially curtail some of this enthusiasm?
Well, I think everybody's expecting that inflation will be picking up here in the next few months. But when we had that inflation burst surge, I should say, in 2021, 2022, a lot of that was first led by supply chain disruptions, which put a lot of upward pressure, particularly on durable goods prices. Then Russia invaded Ukraine, and so we got, on top of that, we've got a spike in oil prices. This time around, we're seeing that the impact of last year's tariffs is probably wearing off. We're seeing that home ownership inflation is the shelter inflation component of consumer price inflation is coming down sharply. The price of oil looks like it's doing another one of these short-term spikes reminiscent of 2022 without the pass-through that we saw in 2022.
Ed, when it comes to the stock market, how much are you feeling calm and how much are the recent gains because of verbal intervention from the White House?
Well, obviously that had a big impact. A lot of the concerns that people had that caused the market to go down by 9% from from January 27th down to March 30th. Those concerns have been around for a few weeks. People kind of kick the tires and realize that there's no flat there. The tires are still inflated and cars still moving forward. And I think that's a reasonable analogy for what we're seeing here in the market is the AI concerns created buying opportunities. And by the way, everybody knows now that geopolitical crises create buying opportunities. So we've got this annoying situation where you don't get a chance to buy for very long. You really have to jump in and just buy on the dip. Otherwise, everybody's buying once they figure, let's look through this geopolitical crisis, and we're getting some really good bargains here. And one of the reasons we're having good bargains is PEs came down not just because valuations crashed, but because earnings really took off. So usually you buy high PEs expecting down the road you'll get better earnings, but we've had almost instant gratification with earnings continuing to significantly surprise to the upside. And it's not just technology and it's not just energy.
Ed, we appreciate your enthusiasm, sir, as always. Ed Yardeni there of Yardeni Research, constructive on this equity market. How many times have we heard this, that the adverse scenario is so adverse that we won't see it because ultimately they'll look to avoid it? When you listen to the president claiming the Iranians have made key concessions, we don't know if they have. We've yet to see evidence of it. When you listen to the IMF and the World Bank through this week in Washington, D.C., they've been pretty clear. Every day that goes by that a Strait of Hormuz remains closed, you get closer and closer to that so-called adverse scenario.
Yeah, and part of the reason why the IMF is particularly concerned is because every day another country comes to them with their hand out asking for money to try to stave the gap that they have in their budget as a result of trying to buy energy and the fact that their economy is slowing otherwise. So they're feeling it on the ground in the most vulnerable countries. On a whole, this is where the averages mask individual pockets of pain, and the reason why you can get a very different sentiment than the overall averages that speak to a much more resilient kind of economy.
And when it comes to individual pockets of pain, Bank of America Institute has a note out this morning talking about small firms, especially transportation, agricultural. Their spending on energy, gas, diesel, up 25%. And this is now April. This is ahead of key driving season when prices naturally, most normally, go a lot higher.
Heading towards another week of gains on the S&P 500. Despite all of that, futures up by 0.25% with an update on stories worldwide. With your Bloomberg Brief, I'm pleased to say that joining us now is Scarlett Fu. Hey, Scarlett.
Hey, good morning, John. President Donald Trump says the war in the Middle East could end soon. Trump says it may not be necessary to renew a 2-week ceasefire with Iran before it ends early next week because the war could be over before then. He also said the U.S. and Iran could meet for a second round of negotiations this weekend. Meantime, President Trump also says Israel and Lebanon agreed to a 10-day ceasefire. Trump says he held, quote, excellent conversations with leaders of both countries. There was no immediate confirmation from Israel or Hezbollah. And the U.S. government wants to make a version of Anthropic's AI model Mythos available to major federal agencies. A memo seen by Bloomberg did not specify when various agencies would get access or how they might use it. That is your Bloomberg Brief. John?
Hey, Scarlett, thank you. Great work, as always. Looking forward to catching up with Scarlett again later this hour. Some reporting from Axios coming about 10 minutes ago, 15 minutes ago, that the boss of Anthropic will be meeting with the chief of staff of the White House, Susie Wiles, a little bit later on today. There's a bit of a contradiction, some tension here that's worth exploring. That on the one hand, this company is the so-called supply chain risk. On the other hand, they want to use this company within the government across various departments.
And the extra tension is that they already are using this company across a variety of different departments. And you could argue they've been instrumental in the entire effort in Iran, as well as in other conflicts that the U.S. has been involved in. It's a difficult moment. Which side is going to give? And how do you understand this uncomfortable situation where executives have a good degree of power over domestic security and international security of different nations?
We'll catch up with Gregory Allen of CSIS a little bit later this hour on that topic. Up next on the programme, closing in on a deal with Iran.
I think we have a very successful negotiation going on right now, And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice.
Up next, we'll catch up with Stephen Kirk of the Council on Foreign Relations. Live from Washington, D.C. this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Live from Washington, D.C. this morning. Good morning to you all. Equity futures right now in the S&P 500 firmer by 0.25% following a four-day winning streak on the S&P and a second consecutive day of closing above 7K on the S&P. So far this morning, up 0.25% on the NASDAQ, up by 0.2. Under Savannah's this morning, closing in on a deal with Iran.
I think we have a very successful negotiation going on right now. And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice. And I think your oil price will go down to lower than what it was before. And I think a lot of good things will happen. If there's no deal, fight to resume.
So here's the latest this morning. President Donald Trump saying Iran has made key concessions ahead of potential negotiations later this weekend. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John. Good morning. Well, President Trump says that he may not even need to extend the ceasefire set to expire on Tuesday, telling reporters that progress has been made related to Iran's nuclear program. He says that the country is prepared to turn over its already highly enriched material in what would be considered a major breakthrough for the negotiations. But at this point, Iran has not weighed in on these latest remarks, and at least publicly, recent comments do indicate that the sides still appear very far apart, which is part of why Bloomberg News had been reporting that they were mulling a potential 2-week extension to give time for technical teams to make a little bit more progress. And now some Gulf, Arab, and European leaders are telling Bloomberg News they don't see a U.S.-Iran deal materializing for another 6 months. Importantly, this reporting also goes on to indicate that Gulf allies share U.S. concerns that any deal needs to include a permanent ban on Iran's nuclear program. Of course, though, it's not just the nuclear program program. We are also learning some more details about how the Strait of Hormuz has been operating, as the Pentagon confirmed yesterday that it has expanded its blockade from just Iranian ports to also include any vessels in the so-called shadow fleet. John, as we await more details, as you well know, the UK and France are holding this summit today with more than 40 nations about deploying a potential naval force known as the Maritime Freedom of Navigation Initiative. The overall sense is that these assets are not going to be deployed until there is that longer-term agreement.
We'll be tracking those negotiations if they happen through the weekend. Tyler Kendall there with the latest right here in Washington, D.C. To build on that conversation, Stephen Cook of the Council on Foreign Relations writing the Iranians will demand a role in whatever is planned and will not give up whatever leverage they have. Stephen joins us now for more. Stephen, good morning. Good to see you.
Good morning. Good to see you.
Let's talk about some of the claims coming from the president, claiming they've made some concessions. Can you just outline your understanding of what the demands are and what the concessions might be?
Well, the demands have been pretty consistent, that the Iranians have to give up their nuclear program, they have to give up their missile program, and stop arming and supporting their proxies. I don't see any real movement on the part of the Iranians. There may be a negotiation. The Iranians may demonstrate some tactical flexibility in order to get themselves out from under the problem that they've now found themselves with an economy that's teetering on the edge. But they want to live to fight another day. And the people in charge in Iran right now are the hardest of the hard line. I mean, the president keeps talking about this new pragmatic regime. These are people with a history of waging war against the United States and its partners for the last 47 years.
Is the president just basically insinuating they're pragmatic because they showed up to talks? Is that it? Is that the only step we've seen from Iran to be willing to negotiate with the United States, is that they actually showed up in Islamabad?
Yeah, that's precisely it. I mean, they're willing to talk. So essentially the president is Roy Cohen-ing this. He's saying something that he wants everybody to believe, and he's trying to create his own reality on this. But there's no indication that this group of people are willing to meet the United States. They're not willing to capitulate on the battlefield. What makes anybody believe they're going to capitulate at a negotiating table?
You're right to say this administration has been very consistent with what they wanted to see from Iran. But now there's this extra additional need, which is the opening of the Strait of Hormuz. Would the United States or Gulf partners accept the Strait of Hormuz be open, but Iran would get some sort of monetary fund for that, a toll?
It strikes me that the United States will accept that at some point. The Gulf states will be very, very unhappy about this. I mean, think about the strategic setback this is for both the United States and our Gulf partners. Before this war was launched, there was freedom of navigation through the Strait of Hormuz. Now the Iranians have some notional leverage over the strait, although we're blockading it right now. Some resolution of this that gives the Iranians a role is something that no one ever imagined. And can you imagine a situation in which the Emiratis or the Saudis have to pay their primary regional adversary for transit through the Strait of Hormuz to keep their economies going? This is a tremendous strategic setback for the United States, as well as the Emiratis, the Saudis, the Iraqis, the Bahrainis, everybody in the region.
And it's not just about Iran, it's also about China. And the Atlantic Council put out a graph showing that the number of cross-border payments transacted in renminbi has gone up tremendously in the past 6 weeks. I mean, how much do you see China stepping in and trying to create the petro yuan to try to reassert themselves in terms of the voice of influence over the region?
Yeah, I think the Chinese stand to gain here at the expense of the United States. But I think that the Chinese also have a compelling interest in freedom of navigation throughout the world, but particularly in the Strait of Hormuz. They also have a ton of oil in storage. So I think the Chinese are well placed to play a role. They have pushed the Iranians into talks and made their preferences known. But I don't think the Chinese are really wanting to step in and replace the United States here. After all, to the extent that the United States gets wrapped around the Strait of Hormuz, Iran, and the region, there's less time for the United States and less resources for the United States to focus on East Asia.
It is not completely clear what all of the goals are. There is a general goal, though, in the United States and in the Western world: freedom of navigation through the seas, a desire not to see a nuclear Iran. What's Iran's ultimate goal, given the new leadership?
The ultimate goal of this regime is survival.
Okay, but beyond that,
is to continue its nuclear program. I mean, the ultimate guarantee of regime survival, to hold on to the leverage that it now has in the Strait of Hormuz, which is something new, which is almost as good as, if not better, than a nuclear program, because you might be able to make money off of it, and to continue to play a role and put pressure on the rest of the region. The Iranians have not given up, despite the battering that they've taken, any of the basics of their approach to the region and their approach to the United States.
There has been a change of strategy from the United States. There is now a blockade of the blockade. Does that mean Iran has lost leverage, or are they just going to wait this out?
The Iranians look at the world in a very different way than the way we look at the world. We look at the world in 2, 4, 6, 8-year periods, because that's our electoral cycle. Those in charge of the Islamic Republic have a much longer time frame. So they'll wait us out. They'll wait out. A new administration will come in. They'll have some new approach. And even if there is some change, there's a blockade of a blockade, but there's some negotiation that's going to go on about the status of the Strait of Hormuz. They're going to insist that they play some role in it.
But right now, they can't move their product either. And at some point in the next few weeks, analysts say there's going to be shut-ins. They could do some serious damage of their wells, which is oil is basically the main driver of their economy. Do you think that could force them to be a little bit more pragmatic?
Well, certainly the economy is on the verge of collapse. The Israelis and the United States have done tremendous damage from the air, and now this blockade is making things even worse. But keep in mind, as I said before, this is the hardest of the hard line. They'd rather eat dust than capitulate to the United States. So I think this is going to go on much longer. And again, at the negotiating table, there might be some tactical flexibility. They're interested in sanctions relief, but are they interested in solving all the issues between the United States and Iran? I don't think so.
Really tough question to answer, but I've got to ask it, and forgive me. You've got a base case of how long the Strait's going to be closed for?
I think the Straits are going to be closed for at least the next few months.
The next few months?
I think it's entirely possible that, you know, it's going to take time to negotiate the end of this blockade, that the Europeans are talking about this mechanism. It'll take time for them to get it together, to get naval escorts through the Strait of Hormuz. That's even assuming that the Europeans have the kind of organizational capacity to actually do this kind of thing without the help of the United States. And as I said, I think we're talking about the hardest of the hardliners. There's going to be tactical maneuvering around negotiations, but it could be a while before the Strait is actually opened in a way that the economy can get going again.
Stephen, appreciate your perspective. Thank you, sir. Stephen Cook there of the Council on Foreign Relations. If there are any Europeans in Washington waking up this morning in the IMF World Bank spring meetings, hearing the next few months, I'm sure they'll be immensely concerned. We've seen the rationing take place in Asia, and if the Strait is closed for another few months, you'd imagine you're going to see similar things take place in European nations in the weeks to come.
What did we hear from the IEA yesterday? Fatih Birol talking about that Europe is 6 months away from running out of jet fuel, and we're seeing flight cancellations from European airlines because they don't have access to the product.
Unreal. Yeah, equities are at all-time highs on the S&P 500 and on the NASDAQ at the close on Thursday coming into Friday. Futures up another 0.25% so far this morning. Up next, we've got to talk about this. Gregory Allen of CSIS, as Anthropic's latest AI model has markets and the government very much on edge. That conversation just around the corner. Live from Washington, D.C. this morning. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Live from Washington, D.C. this morning at the IMF World Bank Spring meetings. Through this week, equity futures shaping up as follows. On the equity market, on the S&P 500, positive once again, adding some weight to a record-breaking rally. 4-day winning streak on the S&P, up 0.2%. 12-day winning streak on the Nasdaq 100, the longest since July 2017, up another 0.1% so far this morning. On the S&P, looking for a third consecutive week of gains. Haven't seen that all year. For oil, down for 2 straight weeks now. We haven't seen that since the war started. WTI crude and Brent shaping up as follows. Brent down by a little more than 3% so far in the session. The front month of the futures curve on WTI, we're down by almost 4% at 91. That's the oil setup. Turn to the bond market. You haven't seen as big a move. We've talked a lot about this. Equities have rallied more than 10% of the lows. For crude, we've had a sell-off of about 20% from the highs. But in the bond market, we've settled around 430, another close above that level just yesterday, Bramo. This morning, we're down by 2 basis points, 429.35. There is a takeaway from some in fixed income that just maybe we've settled at a more elevated level because of this war.
Yeah, and ultimately, if you have strength in the economy that can prop up equities to record highs, and frankly, you've got consumers that can absorb the higher costs coming from commodities, well, doesn't that indicate that inflationary pressures are going to remain just a bit higher than they would otherwise be? Right now, if you take a look at Fed funds futures, there are no rate cuts being fully priced into the market by the end of this year.
Which is going to keep this Fed on the sidelines, to the point. That's what the market is priced for now. Even with the new head of the Federal Reserve and a hearing set to take place next week with Kevin Walsh on deck, there is a belief on this market that those rate cuts won't be happening anytime soon.
Even if Kevin Walsh becomes the next Fed chair, I should say when. Everyone believes in Washington. We've had a lot of conversations about this, that he will be the Fed chair. It's just a matter of timing and scheduling, depending on when the DOJ potentially drops this probe. And then Tom Tillis, the senator of North Carolina, can finally give a yay vote to that. Of course, the issue is, and Lisa brought this up the other day, actually, this White House kind of gave cover to the incoming Fed chair, saying maybe now, right now, is not the time to move around when it comes to rates.
Gave cover to the Federal Reserve. I'm not sure about the incoming Fed chair because at the moment, there's no open door for him to walk through.
True.
I've asked that question repeatedly through this week. Everyone I've met in Washington, I've asked the following question. Why won't the president take the off-ramp? He's chosen his man. He's highly confirmable. The Senate wants to get him through, get him a seat on the FOMC. The DOJ investigation could have gone away, and yet they're sticking with it.
You know, I can't answer that question. In fact, I've tried to read several psychology manuals, and frankly, I think it's above my pay grade.
He's doubling down. He really does not like what has happened. I mean, when the president talks about this, he's emphatic. He does not like what happened at the Federal Reserve. He thinks it's gross misconduct in terms of all the money they spent. I mean, he went there with a hard hat to look at this, and he's doubling down, and he's not willing to take the off-ramp yet. Maybe it changes.
That hearing's set to take place next Tuesday. On our radar this morning, Netflix shares tumbling in pre-market following a weaker than expected outlook. The company's co-founder and chairman, Reed Hastings, separately announcing he will step down from the board in June. Elsewhere, the president claiming Iran has made key concessions in negotiations and a deal to end the war could be announced soon. The president saying the two sides may meet for a second round of negotiations this weekend. And finally, a 10-day ceasefire between Israel and Lebanon is now in effect. The Trump administration ramping up pressure on the two nations after the continuing violence threatened to upend the U.S. truce with Iran.
Look, this is a key part, at least on the part of Iran, to any kind of sustained ceasefire. And the good news is that it is holding for now, that it does appear that the fighting, the bombing has ceased. A question here of Hezbollah, the group within Lebanon, whether they are going to abide by this, whether they have been a part of this. And then Stephen Cook has actually written about this, and I think it's a really interesting point. This idea that if Hezbollah gets sort of downgraded as a party within Lebanon, does that allow Lebanon to normalize relations with Israel, which would be absolutely a setback for Iran? They don't want that to happen. So there are some sort of entrenched sticking points that are going to be very difficult to get over.
There's no way this Iranian regime is going to want to withhold any money and make sure that they want to make sure they continue to support and back all the proxies, including Hezbollah. And in Trump's Truth Social yesterday, he's talking about Israel and Lebanon. No mention of Hezbollah, which is where Israel is fighting. But it could give a little bit more breathing room for both sides of the negotiations to actually have these talks. Because the Iranians, every single time you speak to them and hear from them in their press, they say, well, one of our conditions now is that Israel needs to stop when it comes to the fighting of Hezbollah.
The Strait of Hormuz is still closed.
Yeah.
And every day that
oil's at
goes
91.
by, the IMF has said every day that goes by, we get closer and closer to the so-called adverse scenario. I heard from Steve Orth of Federated just yesterday, who's made the point repeatedly that this is so bad that if it can't happen, it won't. That's their view on things. And I think that's the market's view as well. It's so bad that it can't happen, so we can look through it. Yet you speak to Stephen Cook, Lisa mentioned him, we caught up with him just moments ago. He's making the point that this could go on for 2 months. So you've got the analysts looking at the prospect of this going on for 1 to 2 months from here, maybe longer, who knows? I hope this is wrapped up quickly. But this market is priced for something very, very different.
Well, what's so interesting, though, is that before this conflict began, and there's all these reporting that Trump is potentially going to do this, everyone said, well, Iran would never go for the nuclear option, which is actually closing the Strait of Hormuz. That would never happen. It is too dangerous. It is too much of an economic blowback for everyone, not just the global economy, but also the Iranians themselves. And guess what? They did. They went for that nuclear option, and they decided to close the Strait.
WTI this morning at about 91, Brent crude in the mid-90s. We need to talk about this story, too. It's one of the big stories here in Washington, D.C., and for that matter on Wall Street. Anthropic's latest AI model sending shockwaves across Wall Street. The White House moving to give U.S. agencies access, even as officials warn of major cybersecurity risks. Gregory Allen of CSIS writing, Mythos is a genuine watershed in cyber offense. Wall Street's reaction confirms this isn't hype. Gregory joins us now for more. Gregory, good morning.
Great to be with you.
Let's start with what this is. Can you briefly describe what is Mythos?
So everyone who has used an AI chatbot such as ChatGPT or Claude is familiar with that kind of interface. And over the past year, we've seen dramatic progress in these capabilities, not just in chatting with users, but actually writing software programs and, as they get more agentic, building fully fleshed out systems. So if you're really, really good at writing computer code, it's not that far away to be really, really good at hacking computer code. And what we've seen is an explosion, a qualitative shift in just how much these models can achieve. This is the latest and greatest Anthropic model, and it is capable of executing, not just finding a bug, but exploiting that bug, going through all the links of the cyber kill chain to successfully execute attack, and doing so autonomously. Now, why does that matter? Because even though we're talking about computers, cybersecurity has actually been under a massive labor shortage for the past 20 years. If you think about, why aren't we able to patch all of these bugs? It's because hackers are really expensive. These are talented folks who are difficult to train. But now, if AI can do so much of that job by itself, you start thinking about Anthropic as a company having capabilities comparable to that of the National Security Agency in the United States government. And fortunately, Anthropic was the one to get to this future first. They're approaching the United States government, they're approaching critical infrastructure companies, they're approaching the key cloud providers and banks and saying, this is what we've discovered, you live in a different world now, let's figure out how to secure it.
From your standpoint, are you fearful that this could expose vulnerabilities or hopeful it will improve resilience?
So I think there's a sequencing part of all of this story. This is a capability that is useful for cyber offense, and that means doing bad things, but also doing things that are critical to U.S. national security. But it's also a boon for cyber defense, because you can imagine every new piece of software, before it enters the world, is going to have to go through the Mythos test, which is to say, can you survive this gauntlet? And the reality is, going through that gauntlet before was, number one, pretty expensive and time-consuming, and number two, not perfect. There was a lot of bugs that weren't discovered, and we know that because Mythos just discovered a giant pile of new bugs and all this stuff. So this does offer a world in which we can secure our software more in a bigger way. The problem is that transition point. There is a massive amount of code, whether that's open source code, and it turns out that much of the infrastructure of the internet relies on stuff that is maintained by volunteers, and also big critical infrastructure providers. We're talking banks, energy companies, and the amount of overhauling that they have to do over the next 12 months is massive. And the question is, how long can we keep the Mythos capability exclusively in the hands of the good guys? How much can we patch before problems start arising?
How far behind is the government from the private sector, and how willing is the government to work with said private sector that there's been some tension between?
So if you're talking about, could the United States federal government create something like Mythos? Could they create something like a frontier AI model? They are very, very, very far behind. They're really not even trying. So the only way that they can get access to these capabilities is to work with private industry, the types of folks who can do this. And in this case, Anthropic has what they estimate to be a 6 to 18-month lead, even over OpenAI, even over all the other best AI labs in the world, which are in the private sector. So that period of time is a critical window to start patching all of this computer code before China catches up, before hacker communities get access to comparable capabilities. And tragically, that window of time is one that the U.S. government is at risk of squandering because of a dispute over contracting terms in Anthropic's working with the Pentagon. Just for folks who aren't aware, Anthropic is a critical provider not just of cyber AI capabilities, but also of AI capabilities that are useful in intelligence and warfighting, literally being used in Iran right now every single day. And despite Anthropic providing all those critical capabilities to key national security agencies, over this contracting dispute, the Pentagon decided to label them a supply chain risk. The type of designation that we use when we find out a company is secretly like a front for Chinese spies. It's completely unreasonable. And the government is in this moment of utter confusion, because on the one hand, they're saying, Anthropic, you've got to help us secure the financial arteries of our economy on cyber. On the other hand, we don't trust you at all, and actually we'd prefer if you go out of business.
When we talk to different executives and we ask them about Mythos, they say, well, there's as much good as there is bad, and we're actually really optimistic. When you talk to them, not on a camera, what's the level of concern right now among executives as well as government officials about what this could do in terms of systemic disruption?
So I think the way to think about it is, what if Anthropic wasn't going down this path? Right? Anthropic is suffering in business terms because they're not offering Mythos to all of their customers right now. They've made a strategic decision to withhold these capabilities, to invite in 40 key companies, to invite in banks and government agencies to try and secure the internet from this degree of cyber power. In the alternative scenario, where this fell into the hands of somebody who wanted to use it to make bets on the market, or somebody who wanted to use it to exploit cyber offense in a national security sense, maybe one of our adversaries, we would be having a completely different conversation. So the executives are probably right. Because Anthropic has chosen this strategy of engagement and support, the long-term outlook is pretty good. What they're really going to be dealing with is an incredibly messy middle.
Gregory, you said that Anthropic is being used right now when it comes to the war. How has Project Maven changed how the U.S. fights war?
So Project Maven started out as a relatively humble project to incorporate AI into analyzing drone surveillance feeds. So if you're familiar with those predator eyes in the sky type of drones, it turns out that here too there's a major labor shortage. It turns out that the U.S. military has a really hard time getting people to watch all of those screens simultaneously. So Project Maven thought we can bring in AI computer vision. They can help these analysts by doing sort of the first processing pass of this type of footage. And That was back in 2018, 2019. What it could do is it could say, hey, in all of these satellite photos or drone photos, this part is all empty water, but right here there's a warship. Fast forward to today, and the capabilities are much more sophisticated, in part because we're incorporating things like anthropic models, large language models. And what that means is that the AI can no longer just say, here is a warship. It can say, hey, there was no warships in this area yesterday. Now there's 10. They appear to be headed in this direction, and it can write the first draft of the intelligence report about what those things might be up to. And it can speed up all of these workflows. When you hear about the fact that, for example, the United States military struck 1,000 targets in 24 hours in the first part of the Iranian war, you know, the benchmark in the U.S. government used to be like 50 per day. And the key thing is not just how many things you can strike, but the fact that many of those targets are mobile, many of those targets are disguised. So when you hear about 1,000 struck targets in Iran, what that actually means is 10,000, 20,000 high-quality intelligence processing and targeting decisions that had to be made. There's no way the U.S. government could have done that without the help of AI.
Gregory, appreciate your time. Thanks for making time for us today. Thank you. Gregory Allen there of CSIS on the latest from Anthropic. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get over to Scarlett Fu. Hey, Scarlett.
Hi, John. At least 2 more empty tankers linked to Iran have sailed into the Persian Gulf. This comes hours after U.S. Naval Forces Central Command warned it would consider boarding and seizing any sanctioned vessels regardless of location. SpaceX is moving up its vesting schedule for employees. Sources telling us here at Bloomberg it could come as early as next week as the company prepares for its IPO, which is targeting a valuation of more than $2 trillion. President Donald Trump warns that New York City Mayor Zohran Mamdani is destroying the city. Trump says Mamdani's plans to raise taxes on the wealthy will cause harm and chase people out of the nation's largest city. That's your Bloomberg Brief. John?
Hey, Scarlett, thank you. More from Scarlett in the next hour. Up next on the programme, bracing for energy volatility.
The situation will gradually improve, but we should be prepared to rather volatile energy markets for some time to come.
Up next, we'll catch up with the Egyptian Minister of Investment. Right.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
Big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from Washington, D.C. this morning. Good morning to you all. Wrapping up our coverage of the IMF World Bank spring meetings with equity futures adding to gains on the S&P 500, up another 0.2%. This headline just crossing from the EU, planning to prepare a joint action on jet fuel if the blockade of the Strait of Hormuz persists. And it looks like for now, at least as far as we know, it's persisting.
I would love to know what the Europeans think persisting, what that timeline is, because the IEA yesterday is saying 6 weeks. That's all they have left when it comes to jet fuel. And basically, they're going to be closing down some flights very soon.
Under surveillance this morning, bracing for energy volatility.
The situation will gradually improve, but it can take up to 2 years to see the big chunk of the production coming back to the before war levels, and some of them may be even longer than 2 years. We should be prepared to rather volatile energy markets for some time to come.
So here's the latest this morning. Optimism rising over an end to the war as major economic risks still remain high for countries across the Middle East. Joining us now, I'm very pleased to say, His Excellency Mohammed Fareed Saleh, the Egyptian Minister of Investment and Trade. Minister, good morning, sir, and welcome to the studio.
Good morning. Thank you.
It's good to see you. Can you walk us through the current state of the economy in Egypt, how resilient things are, the degree of fuel rationing you've had to implement to get through this very difficult period?
As you mentioned, what's happening in the region is indeed affecting, I would say, economies and markets. However, it's all about the response of governments to the current turbulence and how we deal with it from a policy perspective. That's from the one hand, and the consistency of messages and policy as well being undertaken. So in the case of Egypt, we were very, how can I say, foreseeing that this conflict might be taking some time as opposed to initial expectations that it is going to end very soon. Accordingly, we took a very, I would say, quick actions when it comes to rationing, increasing the energy prices across the different products that are being sold in the Egyptian market. And this is coming from a consistent fiscal consolidation policy. So we foresaw that these type of measures and these prices and what's happening in the natural gas prices, in the oil prices, would be having a detrimental impact on our fiscal deficit. And accordingly, we had to ration very quickly and to adjust prices to reflect what is happening in the oil prices from the one hand. On the other hand, our response to the monetary policy regarding how we're dealing with these type of shocks and the absorption capacity of the economy, the flexibility that we have shown through the Central Bank of Egypt, of course, in terms of the effects to be absorbing some of these shocks, as well had a positive, I would say, impact in terms of conveying to the market the consistency of our reforms. We had embarked and clearly communicated to the public and to investors a couple of years ago or 2.5 years ago that we are inflation targeting. So inflation targeting implies that you need to be capable of using your other tools, such as interest rates, such as FX rates, to curb inflation in the medium term and to act as an absorption to the shocks that are happening. So energy for us, we're in a much better initial condition. We have regasification, I would say, ports in Egypt, one on the northern side and one on the Red Sea side, and hence we don't have a problem when it comes to availability. However, the costing, of course, had increased.
When it comes to the Red Sea, though, do you have contingency plans if, say, Bab el-Mandeb Strait gets closed by the Houthis?
It had happened before, so basically we deal with it as it happens. Of course, we work on eliminating or reducing the probability of this happening through political dialogue, diplomatic dialogues, and so on and so forth as much as we can. However, we have dealt with this before, and we get to see what is happening currently in terms of the shipments that are passing through the Suez Canal actually had been increasing and recovering gradually from previous halts in the Strait of Bab el-Mandeb. So, yeah.
Lots of reports that it's not just Pakistan, it's Turkey and Egypt behind the scenes helping mediate between the United States and Iran. What has been your role exactly?
Well, as a Minister of Investment, I don't think I have a role here, but well, maybe the Minister of Foreign Affairs would be having, I believe we have quite a good role when it comes to mediating between the different parties, trying to reach to a common ground regarding the ceasefire, regarding what are the next steps as well. So it's not only about the ceasefire, but the next steps after reaching to a point of conclusion so that we ensure it doesn't happen again. So I'm quite sure that the country itself and as well through the Ministry of Foreign Affairs are doing quite a good communication, I would say, efforts and mediation efforts between the different parties associated. And probably it's not only Egypt as well, you will find Turkey as well part of the equation of these mediation efforts.
While you're here in Washington, D.C., how much are you looking to raise money in case the Strait of Hormuz is closed for, say, months, like an analyst who was just on seemed to suggest?
Our aim today is basically, one, of course, to be attending the relevant meetings and functions at the IMF World Bank. And the second target would be meeting investors, because this period is a convening period for all investors around the world to be participating in some of those meetings. So our target would be explaining to investors what have we done in terms of policy reforms, our consistency in the reform plan, irrespective of what's happening. We cannot be, how can I say, affected by interim problems that are going to happen when we get to see what's happening in the world, starting from emerging market crisis in 2019, COVID afterwards, Russia-Ukraine war, and so on and so forth. So basically, we know that it is a current turbulent period whereby we need to be consistent in our reforms and not affected. We might have to fine-tune some of our reform plans, but it is consistent reform plans empowering the private sector. And that's why the recent figures, for example, of the private sector investments that grew from a 40% of total investments in to around 58% during the latest quarterly figures. When we get to look at the industrial growth rate of the industry sector in Egypt, it grew by an average of 9% during the last 24 months. All of this resulted in a growth rate of 5.2%, which in itself is a driving force and attracting investors to participating in a young population. 70% of the population is under 40 or 35 years old, a vibrant economy, and so on and so forth.
Minister, I've only got 10 seconds left. I've had so many people ask me the same question. Do you know where Mohammed Salah goes next? That seems to be like the most important.
That is the most important question, and I would have loved to know, but unfortunately I don't know.
Minister, you're a gentleman. Thanks for giving us some time this morning. We appreciate it.
Thank you.
Enjoy your time in Washington, D.C. The Egyptian Minister of Investment and Trade, Mohammed Fareed Saleh. Up next on the programme, we'll catch up with Rick Reeder of BlackRock, the Republican Congressman French Hill, Joyce Chang of J.P. Morgan, and the former White House senior advisor Amos Hochstein. The second hour of Bloomberg Surveillance. Up next.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We haven't lost U.S. exceptionalism.
The consumer has remained intact.
There has been a pullback in labor demand.
Inflation expectations in the near term obviously are rising.
The economy is still showing signs of weakness despite the comments about resilience.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
What a record-breaking run in this equity market stateside. Live from the nation's capital this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. A 12-day winning streak on the NASDAQ 100, and we add some weight to that run. On the NASDAQ 100 this morning, up by 0.1%. On the S&P, up by 0.2%. On the Russell, up by 0.4%. Energy has really struggled. Tech and everything else has done anything but struggle. This rally has been explosive.
Yeah, it really has been one of the fastest peak to trough, or trough to peak, I should say, markets that we've seen in recent memory. When you talk about moving from oversold to overbought territory in 18 days, that is the fastest that we have seen going back, I believe, to 2016. A question here about how durable this is and how much this indicates that the U.S. economy in particular is more independent from some of the geopolitical concerns, in particular, the price of commodities.
Well, let's start with the earnings. So the outlook for earnings has improved. It's not worsened based on the estimates. Now, whether that changes in the coming weeks remains to be seen, but let's go with it. We've had some decent guidance this week from ASML. We've had some decent guidance from Taiwan Semi, encouraging that move into the tech trade. And this week, not just about hardware, not just about the semis, also about software, which has had an incredible recovery over the last few days. So let's park tech. Then you've got the situation in the Middle East. Encouraged by the words of the President of the United States, some verbal intervention once again in the last 24 hours, claiming the Iranians are ready to make concessions. That's the claim. We've yet to see any real evidence backed up by the Iranians themselves. The US is talking about talks through the weekend. Let's see if we get those talks, and let's see if it leads to a genuine breakthrough that leads to an improvement in the flow of energy through the Strait of Hormuz.
There's been no verbal evidence from the Iranians, and there's been no physical evidence from the Iranians that they are willing to give up or capitulate, really, on what the president wants to see. He says they're ready to give up the nuclear dust. We haven't seen any of that. At the moment, the success of these talks is the fact that both sides are showing up and that they want to talk. At the moment, strikes, bombs are not dropping, but the facts on the ground have not changed for the Strait of Hormuz. And I'm really struck by what Europe's doing. Not only is Europe, the IEA, saying that they're going to run out of jet fuel, the Europeans are now preparing a coordinated action, a task force basically, to work together if they do get to that point where they're going to have to start working together to get jet fuel. KLM yesterday canceled some flights. You were actually seeing on the margins some companies have to rearrange because they don't have access to the fuel.
Yeah, markets just want to know what they have to discount, right? I mean, I think that it's interesting to note that European equity funds suffered the largest weekly outflow going back to November of 2024. So people clearly are worried about Europe. Over in the U.S., people are saying as long as things don't get worse, we know how to game out some sort of future, and we know how to understand how to discount some of the incoming data.
I think it's beyond that. There is a belief that if things get worse, it'll be so bad it's got to be avoidable, so it will be avoided. That seems to be the take, that the president is actively looking for the off-ramp, that we've seen this before. We saw it last year, and we've seen it repeatedly in between, back in the first term as well, over things like trade. But ultimately, because the president wants it, we'll get it. I'm not sure how simple it is this time around.
Every strategist we speak to says it's not simple at all, and frankly, it looks really terrible. And guess what? We're really pessimistic, and we have no idea what the markets are looking at. And the market says, well, if you take a look, bombs are not being dropped. So guess what? It's getting better. At least it's not getting worse, and that's enough for us.
Equity futures on the S&P getting better once again. Adding some weight to a record-breaking rally up by 0.25% on the S&P 500. Coming up this hour, we'll catch up with Rick Reeder of BlackRock with the Nasdaq on a 12-day tear. The Republican Congressman French Hill as the Fed chair confirmation hearing looms. And former White House senior advisor Amos Hochstein as President Trump bets on a weekend breakthrough in the Iran war. We begin this hour with stocks sitting at record highs as investors eye a potential US-Iran truce. Rick Reeder of BlackRock writing the immense disruption of trade and global supply conditions will be what truly influences market pricing. Rick joins us now for more. Rick, welcome to the program, buddy. Always a privilege, a pleasure to catch up with you, sir. This move that we've seen in this equity market, we've thrown so much at the stock market over the last several months. AI disruption, private market jitters, and now the Strait of Hormuz remaining closed for almost 2 months now, Rick. And here we are at all-time highs. Does that bring you comfort or make you nervous?
Good question. I'd say a couple things. First of all, I think what it tells you is the technicals in the equity market are extraordinary, and the earnings numbers that are coming through are pretty powerful. And so, you look at the U.S. economy and you look at what's, I heard at the beginning of the show talking about the economy's weak, economy's strong. Actually, the parts of the economy and the primary drivers are doing quite well. You look at tech. I mean, you look at some of the numbers yesterday that you cited, and you look at these earnings growth. I mean, I was looking at some of the semis. You're talking about 97% earnings growth year on year. I mean, like unbelievably powerful numbers. And then you look at, the high-end consumer, that consumption. You look at retail sales when you break it down. Pretty darn good. So you've got an economy, and by the way, you've got, housing's not in good shape, lower income's not in good shape. So that is what it is. But what drives the equity market is in pretty good shape. And the technicals, so you had this period of time that nobody wanted to buy stocks, and then you realize, I've said it before, you're going to have an IPO calendar this year that maybe is a couple $100 billion, maybe. We're going to buy back $1 trillion of stock this year. So we're actually, there's not enough stock to buy. So it's just a pretty, you talk about how explosive this is. You realize people sit on their hands, I don't want to do anything, particularly in tech. And then all of a sudden, maybe a little bit of better news, the earnings come in, and then you create this. The technicals and equities, by the way, it's completely different when you think about the treasury market, et cetera, because we're getting, we get $520 billion a week of supply. It's, it's amazing in the equity market how good the technicals are.
Rick, is there a contradiction in the fact that we're seeing such explosive confidence in equities? You're seeing so much cash out there that are looking for places to go. And at the same time, people are expecting inflation to come back down to 2% over the next 5 to 10 years. Does that seem contradictory?
No, I think, and I've been doing this for many, few decades. I've never seen a productivity revolution like this before. So you go through, almost every company I look at, you see a similar dynamic. I can grow my top line revenue, let's say it's 4 to 10%. Obviously, tech is significantly more significant than that. But then if I keep my labor static to down, and then if I can get my cost of goods sold, and you see this in M&A, if I can create synergies, I can run a higher operating margin. If you can run a higher operating margin, then my ROE is significantly higher. And so then it just keeps driving this dynamic. So you think about what, and by the way, we haven't really seen automation, AI really kick in yet. So I think, there's this transmission. Part of why I think big cap stocks are so powerful is you're building a moat because you utilize data so effectively. We're seeing productivity take place, It buoys earnings. Companies do great. By the way, the counter of that, it's not great from an employee point of view. You're seeing that play out, which is part of what affects the interest rate transmission. So it's a really good story from a productivity and a corporate earnings point of view, not so much for the broad population.
So, Rick, how bullish are you right now? It sounds like you're incredibly bullish on big caps. I mean, are you essentially going all in? Do you think it is a time to go into equities over bonds, to go into equities over cash, to go into equities over commodities?
I'm not that bullish, but listen, I think, we are long the equity market. One of the things that happens when, you had what happened a few weeks ago when volatility spikes, it's hard to have a very long equity position because you can't manage your risk using the volatility markets. Now vol has come down. It allows you to run a bit longer equity disposition. And so, I like equities. If you said to me, let's look at the credit markets, you say, gosh, where is high yield? Where's investment grade credit? And I say, okay, I've got some beta that I could put in a portfolio. Look at where spreads are, investment grade credit, not interesting. High yield, it carries well. Spreads are not that interesting. So I said, gosh, I'm going to take my beta and orient it a bit more towards the equity market or more towards the equity market where the earnings growth is explosive. I got convexity to the upside and I can manage the risk. That's in a portfolio construct, that's a better disposition than I think parts of the credit market are today.
Rick, how do you think the Federal Reserve is thinking about all of this, especially given the fact that we are seeing higher energy costs in the United States? Not as high as Asia and Europe, but they are still ticking higher.
I'll tell you, there's a pretty extraordinary point in time. And, part of what I was talking about, productivity and the employment dynamic. Listen, I think the Fed will be on hold and watch the data. And by the way, you're going to see, and we are seeing what will be some, particularly at headline inflation, some heavier numbers on inflation. I think what the Fed has to do and the ECB has to do is think about you having a supply shock. This is not a demand-driven inflation. By the way, you think about what's happening to lower income, middle income people. You're getting hurt on food costs, fuel costs. Why would we raise interest rates to raise your mortgage? It doesn't make any sense. So I think what your synopsis is around that is, gosh, I'll stay on hold for a bit. I'll watch the data. I think the ECB should do the same. Maybe they get ahead of it and hike a couple of times. But I think, when we talked about before, look at the housing numbers this week. You look at existing home sales. When the mortgage rate shifts up, home sales come down. And then you look at the breakdown of retail sales, what's happening. The dispersion keeps growing. Lower income, middle income having a hard time. That's where the interest sensitivity is. So, listen, I think the Fed has to get the rate down. I still think you'll get a couple of cuts. Do you push it back a little bit? Yeah, maybe. But you're talking about a very two-speed economy where interest rates really affects things. Housing, small business, lower income, and it's part of why I think the rate can come down.
So, Rick, let's look across the curve right now. If the Fed's going to stay on hold, that's going to anchor the front end. We've seen a lot of that in the performance of fixed income and Treasury yields over the past few weeks. If you go further out along the curve, it just feels like the 10-year is anchored around 430, which was the upper end of the pre-war range. How does your thinking sort of adjust when you talk about what's going to happen with Fed funds and the relationship between that and how it informs your view of how we'll get some performance further out along the curve?
I got to tell you, Jonathan, when, I hear people come on and say, I think rates are going higher, I think rates are going lower. I actually find the 10-year part of the curve from an asset allocation point of view not interesting. As you said, but by the way, my colleague Russ Brownback talks about on your show all the time. If you go back over the last year or so and you look at the end of every quarter, you look at the end of the year, we pretty much hover around 425, maybe 430. But it's pretty unbelievably stable. There's a lot of discussion about what do you do with the 10-year point. I do think there'll be initiatives, and I do think when Kevin Warsh is confirmed, I do think you'll see a dynamic where can you contain the 10-year point of the curve? Can you keep mortgage rates down? Are there initiatives to actually pull that mortgage rate down that you can have through fiscal stimulus? That's really powerful. My sense is that 10-year note will drift lower through this year. As you get the funds rate down a bit, can you keep the 10-year alongside of it? But I will tell you, Jonathan, in our portfolios, I say, particularly for the back end, not interesting. I just want to, what I try and do is keep my front to the belly yield curve exposure, and I just clip coupon. Like this is a year, if we can just keep giving clients 6.25 type of coupon, type of yield, which you could do without compromising rating, I'm just going to keep staying there and then let people, get excited about where we're going in the back end of the curve.
Rick, I've got to ask you, what kind of initiatives would bring down rates, yields at the long end of the curve?
So by the way, a bunch of things. From the Fed point of view, you can use your balance sheet effectively. We have 89% of the debt of the Treasury markets in the 0 to 2 year part of the yield curve. It's actually not that much out in the back end. The Fed can actually be very, very effective in how you manage the back end of the yield curve. Second thing you do, you see that the administration through the GSE program is actually buying a huge amount of mortgages, a couple hundred billion mortgages. You can actually do a bit more with regard to that. There are things you can do in terms of creating initiatives to stimulate housing, home builder incentives, et cetera, that pull that mortgage rate down. There's a whole series of things. Listen, I mean, you look at existing home sales, which you talk about, you look at how there's not enough inventory of houses today. It influences labor mobility to the negative because we don't have enough inventory. People can't move. It influences, we don't build enough houses. We don't put enough people to work in shelter. And by the way, you can't bring down shelter inflation because we don't have enough houses. There's tremendous motivation and, quite frankly, the initiative to actually bring down housing costs and to build more inventory to bring down that mortgage rate. You know, I think it has much more benefit than people give credit to.
Rick, appreciate your time. It's always good to hear from you. Don't be a stranger. Rick Reeder there of BlackRock. Thank you, sir. Thank you very much. He's been hot on that point for quite a while, that we need to do something about the pricing at the long end of the curve because of the influence that has, the outsized influence that has on things like housing.
Yeah, and the reason that the Fed should be cutting rates, in his view, is because it disproportionately affects the real world. As he was talking, I was thinking, he's running. Do you think so? I think he's running. No, I mean, honestly,
Aren't we done with that?
For Fed chair, but there are other things, you know. I mean, but ultimately,
other things.
Wow. Well, I honestly, Rick, I'm sorry. I'm just, spreading rumors. But to me, the real issue is what you hear from so many different people on Wall Street is there is this huge dichotomy, and something needs to get done, and it isn't necessarily from their world.
Let's give an update on news elsewhere this morning. We've got Bloomberg Brief. Here's Scarlett Fu. Hey, Scarlett.
Good morning, John. President Donald Trump says the war in the Middle East could end soon. Trump says it may not be necessary to renew a 2-week ceasefire with Iran before it ends early next week because the war could be over before that. He also said Iran and the U.S. might meet for a second round of negotiations this weekend. The gridlock in the Strait of Hormuz is sparking a surge in traffic at the Panama Canal. Tankers and cargo ships in the waterway are facing a wait time of 3.5 days. Sources telling us here at Bloomberg that one tanker paid $4 million to jump the line. And Netflix shares are lower in the pre-market after the streaming company's second quarter forecast missed analyst estimates. Netflix also announced its co-founder and chairman, Reed Hastings, will step down from the board after 29 years. That is your Bloomberg Brief. John.
Hey, Scarlett, thank you. More from Scarlett later this hour. Up next on the program, making the case for Kevin Walsh.
He certainly wants to cut rates. I've been watching him for a long time. But he's very smart, very good. He was the central casting guy that people wanted. Looks don't mean anything, but he's got the look, right? He's got the whole package, and I think he's going to do a great job.
Up next, we'll catch up with the Republican Congressman French Hill from Washington, D.C. this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a Big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Stocks up again by 0.25% on the S&P 500. Record highs at the close yesterday and added some weight to the rally on the NASDAQ, up by 0.2. Under surveillance this morning, making the case for Kevin Walsh.
He certainly wants to cut rates. I've been watching him for a long time.
Did you have any concerns about his hawkish history of pushing for rate hikes?
He's going to want to do the same thing. I think that, yeah, I've had times when I think you've had to really have rate hikes too. But he's very smart, very good. He was the central casting guy that people wanted. Looks don't mean anything, but he's got the look, right? He's got the whole package, and I think he's going to do a great job.
So here's the latest this morning. Kevin Walsh's confirmation hearing set for Tuesday. The DOJ investigation into the Fed's renovation project threatening to stand in his way. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, Kevin Walsh will be in front of the Senate Banking Committee as Senator Tom Tillis holds firm he will not vote to advance the nomination until the legal matter against Fed Chair Jerome Powell is resolved, and he really could make good on his threats. Republicans only hold a 13-11 majority. Now, I've heard it floated before that maybe Republicans would look to use a discharge petition to bypass procedure, but I have to say I called up a few sources on Capitol Hill, and they are saying that that would be a lot easier said than done for a list of reasons, including that would likely require what's known as cloture being invoked, and that requires a 2/3 majority, which means Democrats would have to get on board, and at this point they're not. In fact, we're seeing a last-minute push by Senate Democrats today to try to delay next week's testimony. Now, John, as you know, the Trump administration was offered a potential off-ramp here after a judge last month moved to block the subpoenas in this case, but even as we know that the legal bar is very high to remove a Federal Reserve official, the Department of Justice is still vowing to appeal that decision.
Tyler, thanks for breaking down the details. We've got the perfect guest to have this conversation. The Republican Congressman French Hill joins us around the table, also the chair of the House Financial Services Committee. Mr. Chairman, it's good to see you.
Great to be with you, and great to have you all three in Washington.
Thank you for hosting us. Thank you for hosting us, sir. Let's talk about this. I've asked so many people this question. I'll ask it you. Why isn't the president taking the off-ramp and getting his man confirmed at the Federal Reserve?
Well, it's what I recommend. I mean, I said back in January that I didn't think Jay Powell had done anything criminal, and that it was a distraction to have the DOJ do that investigation, which is, as I've said many times, doesn't exempt the Fed from criticism. I've had plenty of things that I think that Jay Powell or the Fed board should have done differently over the years. But it's time to move on from this. The petitions to the court have been rejected, and I think it's time to move on from the case and put our attention around getting Kevin Walsh confirmed by the United States Senate.
Do you think there's enough pressure right now on the White House for the president to take the off-ramp?
Well, I would hope so. You see this letter that you just had the reporting on from the Democrats, and Senator Tillis is still very committed to holding his support of the nomination until this is behind us. The House committee or the Senate committee can continue to look at the investigation of the building if they want to and that kind of thing, but when it comes to our oversight of monetary policy, our oversight of the Treasury market structure, the face of just doing our routine work and overseeing the Fed, I'd like to see the new chair confirmed and let President Trump have a new partner at the Fed. Let Treasury Secretary Bessent have a new partner in bank supervision and monetary policy. It's time, and I think it's important to move.
It feels like the president is doubling down. Maybe he doesn't want to lose face. So what could potentially be an off-ramp? I mean, he likes deals. Is potentially, I'm going to drop the DOJ case, but Jay Powell, you're not staying on till 2028?
Well, I think Chairman Powell is interested in seeing his replacement confirmed, and I think Chairman Powell is probably interested in going on to the next phase of his career and his life, quite frankly. So,
but you don't think he's staying on as governor?
Well, I think that depends on, according to Jay Powell, that's how he's inclined to stay on, according to Jay Powell, if Kevin's not confirmed and if this case is not dropped. So this is why I think it's, if you're for the Trump administration and the Treasury moving on, having an economic policy that's in alignment, then I think it's in the president's interest to see the case move on, and let's go forward with the Trump administration's appointees at the Fed.
In the meantime, Rick Reeder of BlackRock was just on, and he was talking about how he would like to see whoever comes into the Fed next work with the federal government on initiatives to try to get mortgage rates lower, try to get benchmark rates lower on the long end as well, in order to keep affordability under check. What currently is in discussion on the House Financial Committee, given the fact that this has got a fiscal overtone as well as potentially a broad-based different agency initiative?
Well, I think the best way to make sure that takes place is to make sure inflation is well anchored, and I think we do that by taking steps on the supply side to see that the big beautiful bill from last year on the tax side is fully implemented. Let the Americans, both in business and at home in their households, reap the benefits of those important supply side tax changes, and let's continue our work to right-size regulation. Those things would free up more capital to the housing sector, particularly. 6 out of 10 home construction loans are not made by the biggest banks in the country. They're made by banks under $10 billion, and that's what I've had as a focus of the committee. Let's have a deregulatory supply-side housing bill, which the House has passed, and we're negotiating with the Senate on. Let's continue our effort to put in law these tailored regulatory issues that allow our regional banks and community banks to thrive, because they're under the burden in a lot more significant way when it comes to capital levels, return on investment, than the biggest banks in the country are. Putting that into law, I think, does exactly that. It helps anchor inflation, moves capital into the economy, and I think that allows short-term rates to fall, and that in turn has a modest impact on pulling down that 10-year rate, which is so important as a benchmark.
Let's finish on financial services. What are you hearing about Mythos?
Yeah.
And how dangerous this might be? What's your understanding of things right now?
Well, the committee has, both Ranking Member Waters and I are concerned about that. We've actually asked the Treasury, for a brief there. We have noted the Treasury Secretary's engagement and the Fed with the largest financial institutions in the country. When I meet with the private sector, I hear from them that Claude is a very effective AI partner and that they've been most impressed with it. And that they want to get into a mode where they can see and determine any risks associated with the Mythos product. And that speaks to my philosophy about AI to begin with. We ought to let the compliance sector, meaning the supervisors, the regulators, and the private sector work in a sandbox-type environment, sheltered from someone's network, to see what the impact of these large language models are, because they bring tremendous benefits to consumers, to business, ahead of us, but they also have these risks, and we should make sure that all of our network operators have full understanding of it.
They're making some bold claims ahead of IPOs. They've got an interest to really hype this up over the next 12 months. It's hard to understand what's real and what isn't. In the 30 seconds we have left, do you foresee any hearings to get some of these CEOs in front of you guys and for the public to hear what's real and what isn't?
Well, we've started our hearings on AI, both from a regulatory compliance point of view, and we have done roundtables, meaning not public hearings yet, with the business sector, both the tech sector and the users, and I think you'll see us continue that work this year.
Mr. Congressman, thank you very much, sir. Good to see you, sir. As always, thank you. We'll be back soon. Congressman French Hill there on the latest in the financial services sector and with the Federal Reserve. Up next, Joyce Chang of JP Morgan with risk appetite remaining strong.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Four-day winning run on the S&P 500, 12-day winning stretch on the Nasdaq 100, the longest going back to, I believe, July 2017. Equity futures up so far this morning by 0.25% on the S&P, on the Nasdaq up by 0.2%. The Nasdaq over that period higher by more than 13%. It has been a very, very sharp and quick, fast recovery in this equity market. As we count you down to the open, about 2 hours away, let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. A painful morning for Netflix, down 10.6%. Despite a solid first quarter, the issue was their outlook for second quarter. That guide missed expectations, missed the lofty expectations, given that they've been raising prices. Investors wanted more. We also learned that Reed Hastings would be stepping down from the board. So that's down more than 10.5%. Elsewhere this morning, we are looking at Microsoft and Stellantis. Both of them are up. Microsoft has been on a huge run along with all software, really. But specifically this morning's news, the two of them teaming up to get more AI into Stellantis' cars. It is a company that has long been trying to effort a turnaround. Those shares up 2.7% in the pre-market. And finally, some other earnings from Alcoa. Here we had a miss, despite the fact that the price of aluminum is up 15% since the war started in Iran. Instead, what you got from this company was higher expenses and costs. JP Morgan pointing out that they had some shipping issues, some of the problems around that stemming from bad weather. So shares down more than 2% in the pre-market, John.
Danny Berger. Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, President Donald Trump claiming Iran has made key concessions in negotiations and a deal to end the war could be announced soon. The president saying the two sides may meet for a second round of negotiations later on this weekend. Elsewhere, the former Treasury Secretary Hank Paulson calling on the U.S. to prepare a backup plan to avoid a future collapse in Treasury demand.
People say, when are you going to hit the wall? I obviously don't know. It's impossible to know. When we hit it, it will be vicious. So we have to prepare for that. I think we need an emergency break the glass plan so it's ready to go when we hit the wall.
Paulson adding the U.S. is better positioned to weather the Iran war disruption than anyone else. And finally, the Anthropic CEO, Dario Amodei, meeting with the White House Chief of Staff, Susie Wiles, today. Axios reporting the two will discuss the company's AI fight with the Pentagon. The administration looking to make a version of the company's AI model, Mythos, Anne-Marie, available to federal agencies.
So this is really a confusing story if you're looking at it, like how the U.S. government writ large is using Anthropic. It's 1 foot forward when it comes to trying to use it in certain agencies, but it really is a step back when it comes to this massive fight that Anthropic is having with the DOD. The DOD coming out and saying it's a supply chain risk, as we heard from Gregory earlier today from CSIS. That's what you give shell companies that are basically a Chinese company that is trying to maybe get into the supply chain of the United States. So this is a difficult moment. Susie Wiles potentially could try to basically patch this up between Emil Michael and Secretary Pete Hegseth. and Dario Monday, because clearly the government sees use cases for Anthropic in other areas.
How awkward is this? That so many people in government right now are using Claude, are using all of the Anthropic tools as an integral part of not only national security, but also the ongoing hot war in Iran. Yes, we have a ceasefire right now. So there is this sort of awkward feeling of like, okay, well, you know, we kind of have designated you an evil child, but we also are using you and need you. So can we just patch this up? And there is this sort of undertone right now in Washington, D.C. here.
One thing I hear a lot about this fight, I mean, Emil Michael joined us the morning after he put out that tweet saying Dario has a God complex. One thing I hear from a lot of people is that there's a ton of egos involved in this on all sides. And maybe Susie Wiles can cut through those egos and actually be the one that brokers this truce.
There's also a massive potential conflict of interest, and I've been going on about this now for weeks and weeks and weeks. They have every interest right now to hype up the potential of this company going into the IPO potentially later this year, which is why governments need to aggressively figure out what is real and what is hype. Now, from what we understand from financial services representatives and the conversations we've all had over the past few days, a lot of this technological progress is real. Much of it could be dangerous. It could expose vulnerabilities in the financial system. People are concerned about that and looking to get ahead of it. Let's hope they do. But on the other hand, we can all see why they want Anthropic to be the front page of every single financial publication over the next several months, because there is funding rounds potentially that are going to take place over the next 12, and an IPO that could take place as well. And it could well be that this company has a valuation approaching $1 trillion.
There's a very awkward conversation that needs to be had, which is how do you deal with a private sector that is so far ahead technologically of a government that needs to depend on it while at the same time keeping it in check, and a sense of financial interest tied to said company at the same time that it could potentially transform the way we do business. And ultimately, those tensions are coming to the fore in some of these disagreements, but I think that the underlying one is correct. How do we understand what's truth and what's marketing? And that, I think, has been a big challenge.
What's real and what's hype? Right now, this equity market, those real record highs are on the screen right again, adding some weight to them on the S&P 500, on track for a third straight week of gains. Markets optimistic about an end to the war in Iran. Joyce Chang of JP Morgan writing, the speed and magnitude of the relief rally since the ceasefire suggests that risk appetite remains strong and easy financial conditions are still a dominant force. Joyce joins us now for more. Joyce, welcome to the studio. Good morning.
Great to be here.
It's good to see you. You've been here the last few days, I believe, at the IMF World Bank spring meetings. What's the number one takeaway for you so far?
Cognitive dissonance, so heightened geopolitical risk, but also bullish markets. Positioning for fat tail risk are gone. We're going to get some type of ceasefire agreement soon, even if it's light on details. So I think that is the prevailing mood right now. And then there's the AI story. That's still taking a meaningful step up. CapEx is still strong. Now, I worry that is the narrative now, but I worry about the risk around that. So the trade we're in now is fat tails are gone. We're going to get some kind of deal. A lot of people looking at this like last April, is this going to be V-shaped, like Liberation Day, like a trade war? But, we have to really see how these negotiations are going. We have to understand the Iranian position and whether this can be done that quickly, because the clock is ticking. We're going through inventories. We have 13 million barrels per day offline. So if this goes longer than what market is expecting, that's going to lead to, I think, a considerable amount of disappointment here.
So people have reflected on the 2025 comparison, Liberation Day, April 25. I wonder if there's similarities in the price action to, say, 2020. I've been trying to work out if this is February 2020 or April 2020. In February, we were at all-time highs, oblivious to what was about to happen. In April, we had this vicious rally, hopeful about the future, and if you were late to get on board, you missed out on some big gains. Do you think it's one or the other right now?
Well, I think that's been the pattern, and this is why this drawdown wasn't comparable to COVID. It wasn't comparable to Russia, Ukraine. It wasn't even comparable to Liberation Day. It's come back so quickly every time. So the drawdown this time was much less. But it's very different, I think, than Liberation Day, because that was unilateral. You could sort of begin to bring down the tariffs on one side and take that pressure off. You need both sides at the table. It is like COVID in that we think the way that the pain spreads is, not one shock, it's more sequential. So it started in Asia. Well, it moved to Africa and then to Europe. And that's why the clock matters here, because you're running through a lot of these inventories and reserves right now. Probably taken about 6 million barrels per day offline just since this started. So that is something where the market is thinking, well, something will happen relatively quickly, 3 weeks, 5 weeks at the maximum. But when we look at negotiations with Iran, that they have not been that quick. And these issues are very complicated, and we don't really hear the Iranian side of it. So I worry that the market, could be pricing in a lot out of the headlines we're hearing, but it's more complicated than that.
I like your framing of cognitive dissonance, and I wonder how much is dissonance between the physical world and the financial world. The idea that in the physical world there are real constraints, as we've learned since COVID and beyond, while in the financial world it seems like there's a lot of liquidity, and actually financial conditions are really easy. How do you square those two ideas and just how easy financial conditions really are?
Well, financial conditions are easy. I mean, there is demand not just for the S&P 500, but because there's demand for diversification, I think that emerging markets will benefit here. Real assets are benefit here. I mean, there are easy financial conditions that are, being put to work. But that doesn't change the physical constraints or the fact that it's very uneven as far as how different regions are being impacted, with the Southeast Asian, South Asian countries being impacted the most. But part of this is, we've had this pattern where everybody said, oh, well, worst case, it could be a war, or we could challenge Fed independence. And those things all happened and the market still rallied. But, underpinning of all of this really is the AI CapEx cycle. I mean, you really can't talk about this and, divorce it from that picture. I mean, we have CapEx up from 14 to, more than 18%. And that we have not seen that the AI CapEx investment seems relatively war resistant here and still very much intact.
When we ask different executives of banks, of other companies, whether they have some sort of provable return on investment from AI, no one says yes.
Well,
so at what point do you start needing to see that in order to justify the ongoing investment to this degree?
So right now, you're not at that monetization phase where people are even discussing it. They are still at the demand, the compute demand, and just meeting that need. And I think with all of the events that have happened over the last few days, it's even a more meaningful step up on those questions. So you get there, but I still think when you ask a lot of people in the marketplace where we are in a scale of 1 to 10 on where we need to worry about the questions that you're asking, and they're saying, well, we're still at this halfway mark where just meeting the demand for compute is sort of the number one investment that's going in right now. So I think markets are, looking at ceasefire, looking at the AI cap cycle, have actually quite a lot of cash on the sidelines. And one thing I would say is just from meeting with all of the policymakers around the world, we would do 10-year bonds over 10-year treasuries. We think core Europe came in with inflation at target, relatively low unemployment, this is one where, Europe looks stable, not saying that there's going to be a single market or, something that is a massive change. But I think investors are saying, look, EMFX, emerging markets also has lower fiscal deficits, sort of don't have current account imbalances. So I see much more demand for diversification. It's not just the AI story as well.
How different are your conversations with whether or not you're speaking to a participant from Asia or the United States right now?
So I think that there's a lot of questions that we are getting from Asia and also from Europe on whether treasuries are a flight to quality. When we've said dollar is a safe haven, they said, no, it's terms of trade. There is no alternative. But that diversification story is very real. So there is a big difference between talking to U.S. investors who are really looking mostly at the S&P 500 and Asia, where they are actually feeling more of the physical pain of this and asking about diversification and also asking about, are U.S. treasuries a safe haven? Am I better off buying high-grade credit rather than buying, sovereign debt? Or if I'm going to buy sovereign debt, should I do 10-year bonds instead of 10-year treasuries?
My response to that, Joyce, would often be it depends on what the risk is. If I'm facing a demand-side shock, typically I'd expect the bond to perform to provide that risk mitigation. But what we're seeing more frequently over the last several years are supply-side shocks. And I'm not sure whether the risk mitigation characteristics of treasuries or for developed market sovereign fixed income perform in quite the same way in the face of supply-side
totally.
shock.
We have seen the breakdown of that correlation since 2020. And this is why we're really seeing more of a demand for real assets. But that's also been uneven if you look at what has happened with gold. So I think part of the reason you haven't seen a lot of de-risking is that there isn't a very good hedge that you can put on in this environment. But there is still the appetite to look at AI and look at that CapEx cycle and a belief that that is a driver at least through the end of this year and into next year. And that CapEx is already sort of in place and in motion right now.
A lot of portfolios anchored to that story, that's for sure. Joyce, it's good to see you.
Great to see you.
Thanks for being here. Thank you.
Take
Joyce
care.
Chang there of JP Morgan. Equity futures right now on the S&P 500 higher by 0.25% with an update on stories worldwide with your Bloomberg brief. Scarlett Fu's back with more. Hey, Scarlett.
Good morning, John. President Donald Trump says Israel and Lebanon agreed to a 10-day ceasefire. Trump says he held, quote, excellent conversations with leaders of both countries. There was no immediate confirmation from Israel or Hezbollah. UK Prime Minister Keir Starmer is again facing calls to resign over his appointment of Peter Mandelson as ambassador to the U.S., despite links to China, Russia, and Jeffrey Epstein. Starmer was forced to acknowledge on Thursday that the Foreign Office gave Mandelson security clearance even after objections from vetting officials. President Trump's 250-foot triumphal arch clears a key hurdle. A federal arts panel approving early designs for the project. The arch will be built in honor of the country's 250th anniversary and will feature eagles, Lady Liberty, and a line from the Pledge of Allegiance. That's your Bloomberg brief. John?
Hey, Scarlett, thank you. More from Scarlett in about 30 minutes' time. Up next on the program, striking a deal with Iran.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Up next, we'll catch up with the former White House senior advisor, Amos Hochstein, live from Washington. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Equities are positive. The S&P 500 higher, adding to a record-breaking rally once again. 12-day winning streak on the Nasdaq, 4 days on the S&P, 3-week winning streak potentially on the S&P 500. Haven't seen that all year. 2-week losing streak on WTI, edging lower for 2 consecutive weeks for the first time since the war started. Bramo, crude, 96, WTI, 91.
Yeah, even though you've got people like Stephen Cook coming out and saying that you could see the Strait of Hormuz continue to be closed for the next couple of months. But right now, the market has moved on. The extreme bad case hasn't transpired yet. And so right now, financial markets are saying, happy Friday. We're going to just take it somewhere else.
Under surveillance this morning, striking a deal with Iran.
The blockade has been incredible. It's held. The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons. They're not very high. If you look at what they were supposed to be in order to get rid of a nuclear weapon with the danger that entails. So the gas prices have come down very much over the last 3-4 days.
So here's the latest this morning. The U.S. blockade of the Strait of Hormuz entering its 5th day. The White House signaling a second round of talks may take place later this weekend. Joining us to discuss is Amos Hochstein, the managing partner at TWG Global and the former White House senior advisor under President Biden. Amos, it's good to see you, sir.
Great to see you all here.
Good morning. It's good to be with you in Washington, D.C. for once. That's new for us, I think, right? Think so.
For you two, not me, but yeah.
OK, good. Got that out of the way. Don't know why we went there. Alice, let's get to it. So we've got the president saying we can secure a deal pretty soon, and there might be talks over the weekend. We've got foreign leaders of Arab states and, for that matter, Europeans as well, according to our sources here at Bloomberg, suggesting it could take 6 months. What's a realistic time frame to secure a peace deal with the Iranians?
Well, first, it's always a question when the president says very soon. Is very soon closer than almost done, almost complete, which was his statement 4 weeks ago? Or we're almost done, or we've won the war. So I think the president's done a very, very good job on the PR and marketing side. He understands markets very well. He understands the psychology of it. Markets operate based on optimism and hope. As long as you give the market hope and optimism, it will give you back the love. And so he does that every sort of usually on Sunday, Mondays, and Fridays. And no, it's true. I mean, look, the last 4 weeks. And by the way, I don't say this with cynicism. I actually think as the President of the United States, he's managing a crisis. And if the markets are down, his window is narrower and his capability and his capacities and capability is narrower. So, and the Iranians get leverage. So he's doing everything he can to keep the markets up. And that's why for 4 weeks straight, he has said, we're probably done in the next few days.
Well, given the fact that oil prices are depressed at the moment and you have records on stock markets, does this mean maybe he will be more emboldened? We could see a more aggressive Trump?
So let me just adjust what you said a little bit. Oil prices are not down.
On the screen, they are.
On the screen, they are.
You're right, not physical. But
the physical price of oil is not down because despite all of this, between the two blockades, there's nothing going through the Strait of Hormuz now for several weeks. I just came back from Hong Kong this week at an Asia conference, and they're talking about which day are we going to be shutting down airports. Singapore's said this week that they growth turned negative because of the energy crisis. So this is a regional crisis, not a global one at the moment. So oil prices are actually very, very high in the real economy. You have companies, manufacturers in Japan, Toto announced that some of the line of production is coming off because they don't have inputs. So, but I do think that because the market down, the oil prices on the screen down, for President Trump, I don't know, more emboldened, but I think he feels tougher, that he has a better hand in the negotiations. So he doesn't want to go back to fighting. The Iranians don't want to go back to fighting. But both sides don't want a deal that makes it look like, we lost. I mean, if you take the Vice President Vance's comments from last week, that this was about 5-year versus 20-year moratorium on enrichment, well, that's basically the Obama era
JCPOA.
JCPOA. That was 15 years. Maybe that's the compromise.
Is this basically JCPOA with a toll?
Well, I hope not, because the toll would be terrible. The nuclear deal we could have gotten before the war. If we get a victory that's the that the Straits open, that was a crisis we didn't have. So that's where I hope we get to a good solution here on nuclear, on missiles, on regime, on support for proxies, because at least we would get something out of this war.
When it comes to, I mean, you had a moment of reflection there. You like what the Trump is doing. Do you almost wish you were President Biden when gasoline was $5 a gallon, went out and jawboned the market?
Look, we were very different presidents, very different administrations, and jawboning the market is part of the job. I think this is a different place where the market wants to be positive because the AI story is such a strong story. And what you don't want is a disruption here on the physical old school market to disrupt the future type of market.
Which is something that we experienced just about 6 years ago. I'm just wondering, based on what you're seeing over in Asia, how long of a time frame do we have before that starts to migrate first to Europe and then to the United States, in not necessarily the form of energy in the United States, but maybe in the form of chips, maybe in the form of other products that are coming from Asia?
I think you're going to see it in sort of the manufacturing of physical goods, right? Aluminum prices are really, really high. Steel prices are going to go up. But it's going to take time to come here, a few more weeks. Energy crises are the slowest moving crisis because when they happen, when a disruption happens, I still have ships on the water coming to me for several weeks. Then I have inventories that have to go through. So it takes a really long time to go through the physical market where I get rid of the inventories that are already there before the shortage. But once it hits, it's really vicious, right? Because then there's no ship right now on the water that's going to Asia. So if you're a country that's gotten last shipment, you're like, damn it, I still have now, even if the war ends and the Straits open, I still have 3, 4, 5 weeks after that before I get anything. So, and think about it, a plane leaving the United States going anywhere can't take its fuel with it. So even if we have jet fuel in the United States, it's not like I carry my supplies with me. If the airport where I'm going doesn't have it, then I'm not doing it. Lufthansa in Europe just announced, yesterday, they're cutting a whole bunch of flights. Not because they've already run out, because you don't want to get to the point of running out. So that's how it's going to move across from Asia to here. You have multiple countries at 4-day work weeks to conserve energy.
Across Asia.
Right? So at some point, the question is going to be to the market, if the purchasing power in Asia for American services and goods will matter at any point. Or maybe we're just becoming more really America first and alone, where we're building an island. And how doable is that?
Amos, it's good to see you.
Good to see you too.
Sobering thoughts, but good to see you. Amos Hochstein there, the managing partner at TWG Global and former White House senior advisor under President Biden. Reminds me so much, just echoes of COVID. Obviously, there are massive differences between now and then. Certainly the nature of the crisis is vastly different. But just the price action. I just remember February of 2020 at all-time highs on the S&P 500, if my memory serves me well, February 20th. Going into that weekend, and then things started to shut down in northern Italy, and that's when the US side of things started to wake up to the potential of what was going to happen. I don't know if we see that kind of wake-up call, how close we are to that kind of wake-up call, but certainly reminds me of that period.
It reminds me of the disconnect between the financial world, where everyone says buy the dip, and the physical world, where people are saying we don't have what we need, and that's a problem.
Equity futures right now in the S&P up by 0.25%. Up next, Alex Altman of Barclays, the former US Deputy National Security Advisor Dileep Singh, Nathan Sheets of Citi, Jason Thomas of Carlyle. The third hour of Bloomberg Surveillance, just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start over. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is the 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg.
Guys, 5:30 almost हो गया. New York session is going to open at 5:30. बाकी नेचुरल गैस को भी देखोगे कंटिन्यूसली गोइंग अप। कल परसों एक शायद सपोर्ट बनाया था, कल थोड़ा बहुत मोमेंटम आया था, आज भी थोड़ा बहुत बुलिश ही बना हुआ है स्टिल। लेट्स सी, थोड़ा सा और एक ऊपर रेजिस्टेंस अगर जाता है तो 256 58 के आसपास। ठीक, उस स्पीड से नहीं जा रहा जितना एक्सपेक्ट कर रहे थे। नीचे जो बॉटम बना है अप्रोक्सीमेटली कह सकते हो 242 के आसपास, वहां से अप्रोक्सीमेटली सिर्फ 9 पॉइंट मूव किया लास्ट 3 कंटिन्यूस डेज में।
Already in the waters off Iran, more are on the way. With what In terms of what the US has already got in the region, I mean, they've got considerable military resources and assets already in the waters off Iran. More are on the way. With what you're seeing in terms of resources in the region, what options do you see the United States as having? I mean, is, for example, the prospect of a land invasion, a ground operation, still on the table?
Yeah, I think it is on the table. There have been people that have given great caution about any type of land invasion because of the high risk of large amount of potential casualties and the escalation in this war, as the secretary said this morning, with targets locked and loaded on the Iranian infrastructure, that would be a major escalation of the war, as I see it. So, and at the same time, they've used a number of 50,000 troops in the area of operation. With 50,000 troops inside the area of operation, that brings all those troops inside the targeting capacity of the residual forces that Iran does have to try and target the troops that are in quarter in the Gulf, as well as those on ships. Now, we've got very good air defense and defense systems, but we know at any given time, all it takes is one drone or one ballistic missile to get through. It could have a catastrophic impact on the 50,000 troops we have, plus the infrastructure of our Gulf allies. They're in Riyadh and on to UAE and Bahrain and the whole partners there that live there. We're playing the away game. The Iranians are playing a home game. And it's always harder to be on the offense or in somebody else's area of operation. But we've got an expeditionary force. That's what they were built for. But the more that force stay out there, the more stress is going to be on them. And the more chances it are that if we go back to a shooting war, we're going to have more troops inside the range of Iranian residual missiles and drones. And that is a point of most concern to most of us who are war watching.
फाइव थर्टी इज देयर 5:30 हो चुका है लंदन सेशन के बाद न्यूयॉर्क सेशन इज आल्सो ओपन कोई डेटा तो नहीं है यूएस मार्केट ही ओपन होगा सीधा 7 पीएम लास्ट ट्रेडिंग सेशन है इंडियन मार्केट कंप्लीटली बुलिश क्लोज हुआ मॉर्निंग पे मैंने बताया था आप लोगों को फर्स्ट जो कैंडल बनी है फ्यूचर में निफ्टी 50 कंप्लीट बाइंग फ्रॉम द लोअर एंड पुल नहीं कंटिन्यूसली पूरा एक वन साइडेड मूव था इवन दो नॉट दैट मच बिग 200 पॉइंट ही था ओवरऑल फ्यूचर में बट या फिर भी हम कह सकते हैं इट इज़ ऑलमोस्ट वन साइडेड फर्स्ट कैंडल भी लग गया था पता लग गया था कि मार्केट आज अपसाइड ही जाएगा कोई रेजिस्टेंस भी नहीं था ना 15 मिनट में ना 5 मिनट में ना 1 मिनट में फॉर इंट्राडे लेट्स सी क्या परसों कोई गैप अप होता है या फिर मार्केट क्या करता है बट या ओवरऑल देखोगे तो 200 पॉइंट से भी ज़्यादा है मोमेंटम बट ओवरऑल बॉटम जहाँ पर बना है 24,170 के अप्रॉक्सीमेटली वहाँ से ठीक ठाक ही मोमेंटम आया लेट्स सी मार्केट और कितना मूव करता है अपसाइड को आज देखना पड़ेगा गिफ्ट निफ्टी के अलावा नैस्डैक और S&P 500 कहाँ क्लोज हो रहे हैं अगर पॉजिटिव क्लोज होते हैं आज भी ऑल टाइम हाई के आसपास वापस से जैसे कल हुए थे क्लोज तो चांसेस हैं परसों फिर से एक बुलिश मोमेंटम या गैप अप देखने के लिए मिल सकता है अनटिल अनलेस कोई मेजर न्यूज़ नेक्स्ट 2 डेज में ना आ जाए चांसेस भी कम ही है फिलहाल के लिए ओवरऑल सी क्या होता है मंडे को पता चलेगा अब गिफ्ट निफ्टी जरूर नजर रखेंगे आज इवनिंग पे जब क्लोजिंग आती है को भी देखोगे कुछ खास किया नहीं है। बाय द वे मैंने कल बता दिया था, एक्सपायरी थी कल ऑप्शन की, तो फ्यूचर का नेक्स्ट मंथ का चार्ट भी यूज़ कर सकते हो। मैं फिलहाल करंट मंथ का ही फ्यूचर यूज़ कर रहा हूँ, 2 दिन एक्सपायरी में अभी भी है। एक ये रेंज बनी हुई है मार्केट में, कल ऐसा लग रहा था एक ब्रेकआउट किया है रेंज के बाहर, बट वापस गैप डाउन हुआ है तो रेंज के अंदर ही आ गया मार्केट वापस। सो इट इज़ स्टिल इन अ रेंज, मुझे लग रहा है डाउन साइड ब्रेक करेगा और फिर बाइंग में ही जाएगा मोस्ट प्रॉब्ली। अगर ये होल्ड नहीं करता है 8200 तब पॉसिबिलिटी है वापस हम 7500 की ओर जाएंगे, अदरवाइज इट विल होल्ड। कोई ऊपर रेजिस्टेंस भी नहीं है नियर बाई में, एक मेजर रेजिस्टेंस है दैट इज़ अराउंड 10200। एक एरिया ऑफ इंटरेस्ट मिल जाएगा 9200 के अराउंड। कोई और एटलीस्ट 15 मिनट में तो रेजिस्टेंस नहीं है, एंड उससे स्मॉलर टाइम फ्रेम, हायर टाइम फ्रेम पे भी कोई रेजिस्टेंस नहीं है। स्मॉलर टाइम फ्रेम में हो सकता है वो 5 मिनट में या फिर 1 मिनट में बनाओ, बट 15 मिनट एंड अबव there is no such major resistance there. अब आज का जो डे हाई बना है that will become a crucial point. छोटा सा और नीचे अगर ये आता है ऑलरेडी 5% तो डाउन हो ही गया है क्रूड ऑयल लोअर सर्किट भी लग सकता है 6% पे पहला लोअर सर्किट ठीक है 5:30 की कैंडल भी क्लोज हो गई कुछ खास मूव क्रूड ऑयल में नहीं हुआ नेचुरल गैस में एक अच्छा मूव आया 5:30 की कैंडल एंड कंसेक्यूटिवली 5:45 दोनों ही कैंडल पे करंट कैंडल ओपन इक्वल टू हाई है 15 मिनट की 30 मिनट का चार्ट है वैसे तो 15 मिनट की कैंडल इज ओपन इक्वल टू हाई लेट्स सी अभी 5 मिनट है ये कैंडल जहाँ क्लोज होगी अगर एक कैंडल देखते हैं कहाँ क्लोज होती है कैप अप के बाद ओपन इक्वल टू हाई बनी है नेचुरल गैस में 251.2 ओपन 251.2 हाई ओपन इक्वल टू हाई इन नेचुरल गैस पिछले 3 दिनों के बाद पहली ऐसी कैंडल दिख रही है इसमें बड़ा वॉल्यूम है विद बिग मूव वेरी स्मॉल 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 कैंडल आर देयर जितना मूव किया उतना वापस नीचे आ गया, ऑलमोस्ट ओपनिंग प्राइस पे पहुंचने वाला है नेचुरल गैस। If natural gas finally come to the bottom again, 240 के आसपास, 242 के आसपास वापस आता है तो ठीक है। लोअर सर्किट है पर है ऑलमोस्ट क्रूड ऑयल 5.94%, 98% लग गया लोअर सर्किट। आई थिंक 6% पे पहला लोअर सर्किट लगता है, लग चुका है 5.98। यहाँ पर एक बाइंग एक्सपेक्टेड है, कोई न्यूज़ नहीं आती है तो। बड़ी कैंडल बनी है दोनों जगह, क्रूड एंड एज वेल एज इन नेचुरल गैस। दूसरी बार आ रहा है प्राइस ओपन हो गया। यहाँ पर होल्ड नहीं करता, ऐसा निकाला तो फिर हम जा सकते हैं उस केस में 7500 की ओर। वहाँ पर भी एक बार आ चुका है, सेकंड टाइम आएगा। यहाँ पर भी एक बार आ चुका है, सेकंड टाइम आएगा प्राइस इन क्रूड ऑयल। एक लोअर सर्किट लगा था, ओपन हो गया वापस 5.99 पे, 5.99% डाउन क्रूड ऑयल इंट्राडे एमसीएक्स। फॉरेक्स देखोगे यूएस क्रूड ऑयल ऑलरेडी 7% डाउन, $86 पे है वापस, 86.62। ब्रेंट देखना पड़ेगा, ब्रेंट अभी भी है ब्रेंट क्रूड ऑयल। Crude oil is still 94, 3.31% डाउन, 94 95 के आसपास चल रहा है ब्रेंट क्रूड ऑयल। यूएस क्रूड ऑयल $10 लेस, 85 $86 currently is there। सीधे सीधा यूएस मार्केट का ही ओपनिंग है और कोई डेटा तो नहीं है। लेट्स होप कुछ न्यूज़ वगैरह कुछ अगर आती है। देखना पड़ेगा फिर से लोअर सर्किट लगता है या फिर इस बार निकाल देता है लोअर सर्किट, बिकॉज एक बार लग चुका है लोअर सर्किट, ध्यान रखना। आ गए थे फर्स्ट लोअर सर्किट में। जा रहा है लोअर सर्किट के नीचे। तो के नीचे टूटा तो फिर लोअर सर्किट दोबारा लगेगा नहीं, फिर सीधा सेकंड लोअर सर्किट पर ही रुकता है नॉर्मली अगर कंटिन्यूएशन फॉल है तो। फर्स्ट लोअर सर्किट क्रूड ऑयल करंटली 6% डाउन इंट्राडे अगेन। नेचुरल गैस भी मैं एक्सपेक्ट कर रहा हूँ शायद दोबारा बॉटम पे आ सकता है इजीली। ऊपर रेजिस्टेंस भी पास है बट ऐसा लग रहा है पहले सपोर्ट पर ही जाएगा। 56 57 लास्ट कैंडल अच्छी क्लोज हुई है। अगर पुल बैक आता है तो एक सेलिंग का प्लान इसमें भी रखेंगे यहीं से। कोई रेजिस्टेंस तो नहीं है बट एक आप कह सकते हो पॉइंट ऑफ इंटरेस्ट क्रिएट जरूर हुआ है। कैन एक्ट लाइक एज रेजिस्टेंस। सो ज़्यादा क्वांटिटी नहीं लेंगे, बड़ी कम क्वांटिटी में एक शॉर्ट पोजीशन। ठीक है, देखो थोड़ा सा मुझे लग रहा था एग्जैक्टली रेजिस्टेंस पे आएगा वहाँ से सेल करेंगे, नहीं जा रहा है वहाँ पर। और जिस तरह का लास्ट कैंडल 15 मिनट का क्लोज हुआ है, चांसेस भी कम ही लग रहे हैं कि वापस रेजिस्टेंस पे जाएगा कंपेयर टू सपोर्ट पे आने के चांसेस कम है ऊपर जाने के। लेट्स सी, थोड़ा कम क्वांटिटी से ही सेल करेंगे, करना है यहाँ पर, ज़्यादा क्वांटिटी लेना मत। टारगेट वही है कल का बॉटम, कल परसों का वहीं पर सपोर्ट है बिकॉज बैक हल्का सा देन ट्राइंग टू सेल बट इन अ स्मॉल क्वांटिटी इन नेचुरल गैस। एसएल भी छोटा ही है, 2 पॉइंट अप्रॉक्सीमेटली। क्रूड के लिए भी इंपॉर्टेंट लेवल है ये. बाकी डे हाई इज आल्सो इंपॉर्टेंट नाउ. मोस्टली मुझे लग रहा है इसी रेंज पे रुक सकता है आज के दिन इंट्राडे में, क्रूड ऑयल स्पेशली. क्रूड ऑयल, वाओ सडनली कैंडल बनी है, कुछ न्यूज़ तो नहीं आ गई। इंपॉर्टेंट लेवल है, ब्रेक नहीं होना चाहिए प्रॉपरली। 15 मिनट टाइम फ्रेम पर फर्स्ट लोअर सर्किट के नीचे जा चुका है क्रूड ऑयल ऑलरेडी। 7.16% डाउन नाउ। सेकेंड टाइम आ रहा है यहाँ पर, इस सपोर्ट पे ऑलरेडी एक बार आ चुका है पास्ट में। सस्टेन नहीं करता है तो फिर हम जाएंगे 7,500। आधा घंटा और है यूएस मार्केट की ओपनिंग, दैट विल बी क्रूशल फॉर क्रूड ऑयल प्राइस। 1 मिनट टाइम फ्रेम पे देखोगे ओपन इक्वल टू हाई कैंडल बना रहा है, गैप डाउन ओपन हुआ है 15 मिनट का कैंडल। 8:15 की कैंडल का जो नेक्स्ट कैंडल था, दैट जस्ट अ गैप डाउन ओपन कंप्लीटली, सडनली वॉल्यूम विद गैप डाउन। ब्रेकडाउन में जाने वाला है। 1 मिनट कंटिन्यूसली ओपन इक्वल टू हाई, ओपन इक्वल टू हाई बना रहा है। लास्ट 3 कैंडल ऑलमोस्ट ओपन इक्वल टू हाई है, 4 कैंडल। ये दूसरे लोअर सर्किट पे चला गया प्राइस, क्रूड ऑयल ऑन सेकंड लोअर सर्किट। एस भी आ गया नीचे, देखते हैं ये भी नीचे ही आएगा। क्रूड ऑयल नीचे आया तो डेफिनेटली कोई न्यूज़ होगी। गैप डाउन जिस तरह से हुआ है कैंडल में, ठीक है, अब थर्ड लोअर सर्किट पर ही ओपन होगा मोस्टली। सेकंड अपर सर्किट से सेकंड लोअर सर्किट, सॉरी। अभी कोई न्यूज़ तो दिखा नहीं रहा है, पता नहीं कौन सी न्यूज़ आई है, बट या दोनों साइड मोमेंटम अच्छा हुआ है सेलिंग में। क्रूड का एसएल जा चुका है, देखना पड़ेगा कहीं फॉल फेक ब्रेकडाउन ना हो, बट मुझे लग रहा है अगर एक गैप डाउन ही ओपन होता है तो कैंडल तो नीचे ही क्लोज होगी। एसएल जा चुका है, ध्यान रखना। दो पॉसिबिलिटी, कंटिन्यू गिर सकता है या फिर एक कैंडल यहाँ फेक ब्रेकआउट करके वापस रिटर्न कर सकता है। अगर वापस रिटर्न करेगा तो कैंडल ऊपर क्लोज करेगी लेवल के ऊपर, तब फिर से री एंट्री करेंगे, नहीं तो लेट इट कंटिन्यू बी फॉल। कैंडल क्लोज होने वाली है, मोस्टली मुझे लग रहा है वही 8080 के नीचे ही क्लोजिंग है। इसके नीचे क्लोजिंग है तो ये मोस्ट प्रॉब्ली ब्रेक डाउन ही होगा। लेट्स सी लोअर सर्किट ओपन होता भी है या नहीं। थर्ड लोअर सर्किट अगेन विल impose at 12%. लोअर सर्किट पर ही है। ठीक है, कैंडल तो क्लोज ही हो गई है, देखते हैं कब कैंडल ओपन होती है। गैप डाउन फिर से कंटिन्यू है सेलिंग ओपन इक्वल टू हाई ये कैंडल भी है गैप डाउन ओपन होते ही ब्रेकडाउन हो चुका है ध्यान रखना से भी रुकता है या फिर कंटिन्यू फॉल करता रहता है 2 दिन बिल्कुल साइडवेज था नाउ मोमेंटम इज देयर एक्सपेक्टिंग है कंटिन्यू करे मोमेंटम जो ब्रेक हुआ है दिस इज नाउ ये कैंडल अगर क्लोज हो जाती है जो कि नीचे क्लोज ही होगी मोस्टली रिवर्ट तो नहीं करने वाली इट विल बिकम अ रीटेस्ट ठीक है ये एसएल जा चुका है ये सपोर्ट ब्रेक हो चुका है नाउ इट बिकम अ रेजिस्टेंस is open equal to high this current candle in crude oil again पूरी पीस डील आज ही कर देंगे क्रूड ऑयल में वापस 7200 थर्ड लोअर सर्किट की ओर प्राइस लग गया थर्ड लोअर सर्किट भी लग गया प्राइस में पहले फर्स्ट सेकंड एंड नाउ दिस अ थर्ड लोअर सर्किट 11.99% डाउन ऑलमोस्ट ऑन थर्ड लोअर सर्किट क्रूड भी और नेचुरल गैस का भी टारगेट आने वाला है डायरेक्टली मत एंट्री करना क्रूड में हो सकता है गिरता ही रहे प्राइस टिल टुवर्ड 7200 सी एक और लोअर सर्किट में जाता है या फिर रिवर्स करता है। अब याद रखना वापस ऊपर गया तो 8222 भी रेजिस्टेंस बन गया, डे हाई भी रेजिस्टेंस है अब, एंड ये सपोर्ट ब्रेक हो गया तो ये भी रेजिस्टेंस ही है। नेचुरल गैस में भी थोड़ा सा वेट करेंगे, डायरेक्टली मत लेना। ओके, कैंडल क्लोज अभी भी लोअर सर्किट पर ही है, स्टिल ऑन थर्ड लोअर सर्किट। भी दूर है थोड़ा सा नेचुरल गेस 240 41 के आसपास ही बनता है कहीं सपोर्ट एक ये लोअर सर्किट ओपन हुआ ओपन होते ही वापस सेलिंग लग रहा है ठीक है थोड़ी बहुत प्रॉफिट बुकिंग मुझे लग रहा है अब आ रही है ब्रेक डाउन तो कर दिया ठीक है, देखो नेचुरल गैस ऑलमोस्ट टारगेट पे पहुंचने वाला है। यहाँ पर एक बाइंग का प्लान करेंगे फिर से, थोड़ा सा नीचे आने देना प्राइस को पहले। इंपॉर्टेंट लेवल है, देखते हैं कहीं ब्रेकडाउन ये भी ना हो जाए। बाकी क्रूड ऑयल देखोगे, दो पॉसिबिलिटी सबसे बेस्ट हैं अब, या तो थोड़ा पुल बैक दे यहाँ से सेल कर दें, या फिर गिरता ही रहे। अब 3 सर्किट लग ही चुके हैं, दो और लगा दे और 7200 ही आ जाए अगर नहीं रुकता है तो। बाकी रीटेस्ट सही लग रहा है, अदरवाइज डे हाई ऑल्सो अ गुड रेजिस्टेंस। सपोर्ट है, अभी ज़्यादा बड़ा टारगेट नहीं रखेंगे इसमें, क्वांटिटी कम रखना। एक एसएल जा चुका है ऑलरेडी, कुछ ज़्यादा ही बेरिश है प्राइस। इट इज़ फॉर पुल बैक, क्वांटिटी कम रखना, ज़्यादा मत रखना, फिर रिपीट कर रहा हूँ। नेक्स्ट सपोर्ट पर है, लास्ट सपोर्ट तो बहुत स्ट्रांगली ब्रेक डाउन हुआ है। 3 कैंडल, एक के नीचे एक के नीचे एक क्लोज, कंप्लीट डेमोलेशन। ठीक है, नेचुरल गैस भी सपोर्ट पे आ गया, निकल जाना इसमें सेलिंग में से। तो बाइंग में थोड़ा सा वेट करेंगे, इसमें डायरेक्टली नहीं ले सकते, थोड़ा सा और। यूएस मार्केट ओपन होने वाला है, ध्यान रखना कैंडल का ओपन इक्वल टू हाई ना बन जाए, दोनों जगह पे, क्रूड में भी और नेचुरल गैस में भी, दोनों ही सपोर्ट के पास में है। वी डोंट नीड ओपन इक्वल टू हाई टाइप ऑफ कैंडल। Okay, US market open 20 seconds. Let's move on to the market. US market क्या कर रहा है?
On a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just moments away from the start of cash equity trading. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off this morning, and we have gains. They are starting to temper themselves. The president just out with a Truth Social post moments ago saying that, yes, Iran has reopened the strait, but the U.S. naval blockade does remain in force, that he still will be preventing Iranian ships from coming through as those negotiations unfold. So we were up some 1% for the NASDAQ. Now we've just taken it off the boil just slightly, but we're still up. Over the opening bells, capital markets are wide open. We have some IPOs. AVEX, their defense company, I think they're raising around $320 million for their IPO. So not the biggest thing, but not nothing. I mean, these small companies are able to list. That's great news. Along the same lines, Calera, they're an obesity biotech company, also looking at a listing too. So, you know, volatility, who cares? List your company on the S&P 5 or on the NASDAQ or the NYSE. Let's look at some of the stocks that are moving. Again, the price of oil has been falling pretty tremendously. We're now at an 80 handle for WTI and crude. Occidental, Chevron, Exxon, all down at least 3.6%. Again, just to remind you, Iran's foreign minister said that the Strait of Hormuz is completely open for all commercial vehicles for the remainder of the ceasefire period. One of the corporate stories we're watching, Netflix, those earnings topped estimates, but its outlook disappointed despite recent price hikes. Those shares down 9.25%. Co-founder Reed Hastings also announced plans to step down from the board. Analysts now looking for more signs that the company has a plan for its future after its deal to buy Warner Brothers fell through. So a lot of volatility. Let's head on back over to the desk, because patiently awaiting is still Sarah Hunt from Alpine Saxon Woods. Sarah, I was just talking about that post from President Trump saying that, yes, the strait is open, but the U.S. blockade remains in force. What are you doing right now with this kind of level of headline volatility? What becomes your North Star when there are so many tail risks right now?
I think, once again, we have to actually see what happens. I want to see physical ships moving through. I want to see that oil trade resumed. And I want to see stuff coming through and getting back into those supply chains. Because you had stories this morning that KLM was looking at curtailing flights because the jet fuel is an issue. You have a lot of places in the world where the lack of product is a problem.
Okay, so डोनाल्ड ट्रम्प का ट्वीट आया था. लग रहा है किसी इंसाइडर को न्यूज़ पहले से पता थी. एग्जैक्टली क्रूड ट्वीट के बाद ट्वीट नहीं किया एक्चुअली, अपने ट्रूथ सोशल पे ट्वीट किया. एंड ही मेंशन द स्ट्रेट ऑफ हॉर्मोज इज कंप्लीटली ओपन एंड रेडी फॉर बिजनेसेस एंड फुल passes, but the naval blockade will remain in full force and effect as it pertains to Iran only until such time as our transaction with Iran is 100% complete. This process should go very quickly and the most of the points are already negotiated. लग ही रहा था कोई ना कोई न्यूज़ है. Iran has just announced that the Strait of Iran is fully open and ready for full passage, as per the Donald J. Trump tweet. ईरान के फॉरेन मिनिस्टर का भी स्टेटमेंट आ गया है. Foreign Minister of Iran, in line with ceasefire in Lebanon, the passes for all commercial vessels through the Strait of Hormuz is declared completely open for the remaining period of ceasefire on the coordinated route as already announced by Ports and Maritime Organization of Islamic Republic of Iran. Bad news for crude oil, good news for equity market. तो न्यूज़ तो बेरी सी है क्रूड के लिए, ठीक है। तो मैं भी कोई ज़्यादा बुलिश नहीं हुआ अब इस न्यूज़ के बाद। आई एम जस्ट एक्सपेक्टिंग कि थोड़ा पुल बैक आ जाए तो बाय सेलिंग ही करें। ऊपर डे हाई रेजिस्टेंस है, ये सपोर्ट था, ये भी ब्रेक हो गया है। दैट इज ऑल्सो बिकम अ रेजिस्टेंस नाउ अनटिल अनलेस फिर से कोई न्यूज़ नहीं आती। पहली बात तो इस तरह की ट्वीट और न्यूज़ ना ब्लॉक होनी चाहिए मार्केट के बीच में। इंट्राडे ट्रेडिंग में इस तरह की न्यूज़ आ जाए सडनली तो ठीक है। यूएस मार्केट ही कैंडल है, थोड़ा सा वेट करेंगे। अभी नेचुरल गैस में बाइंग का ट्रेड एक्टिवेट हुआ नहीं है, ध्यान रखना। सेलिंग से निकल गए होंगे अलग बात है। बाइंग इज नॉट एक्टिवेटेड येट इन नेचुरल गैस। ट्रेंड भी $90 के नीचे पहुंचने वाला है। यूएस क्रूड ऑयल तो ऑलरेडी $80 के नीचे था, नाउ ऑलमोस्ट $81 पे चल रहा है। लेट्स सी आज क्लोजिंग 80 के डॉलर के नीचे आती है या फिर ऊपर आती है, वापस $70 में चले जाते हैं हम। ब्रेंट करंटली एट 91। गोल्ड सिल्वर पॉजिटिव, सिल्वर स्पेसिफिकली वापस $82। ठीक है। ये तो न्यू ट्रम्प का ट्वीट आया था, उसके बाद से मार्केट गिरा है। न्यूज़ इज कम्प्लीटली बेरिश फॉर द कमोडिटी। जिस तरह से यूएस ने भी और ट्रम्प ने दोनों ने कहा है कि स्ट्रेट ऑफ हॉर्मुज कम्प्लीटली ओपन है फॉर ऑल कॉमर्शियल शिप्स until the ceasefire in remain intact। देखते हैं अभी ये यूएस मार्केट कितना मूव करता है। गिफ्ट निफ्टी देखोगे, गिफ्ट निफ्टी भी अच्छा सपोर्ट ले लिया है। मंडे लग रहा है गैप अप ही होगा वापस, क्लोजिंग भी पॉजिटिव ही आई थी आज। लुक एट द गिफ्ट निफ्टी, वाओ काफ़ी बड़ा गैप अप लग रहा है। अगर सेल ऑफ कंटिन्यू नहीं आता है या फिर मार्केट इसी लेवल के आसपास ओपन होता है, ये अपना इंडियन मार्केट का क्लोजिंग कैंडल है लास्ट। वहाँ से देखोगे अभी करंटली लगभग 365 पॉइंट 350 पॉइंट पॉजिटिव है, 1.5% पॉजिटिव लग रहा है अभी भी। एक बड़ा गैप अप मंडे को देखने के लिए मिल सकता है, कोई न्यूज़ ना आए तो, और नेगेटिव। फिलहाल पॉजिटिव ओपनिंग लग रही है मंडे को होती हुई। सडनली मूव आया शायद थोड़ा साइडवेज हो जाए नेचुरल गैस स्पेसिफिकली क्रूड में मुझे लग रहा है मोमेंटम होना चाहिए भी आया तो ऐसे फास्ट मोमेंटम ही है न्यूज़ का 3 लोअर सर्किट कंटिन्यूसली लगाए हैं मार्केट ने नहीं नहीं वो तो ठीक है वो लेवल पे ही आ जाएगा कोई न्यूज़ तो नहीं है ना क्रूड ऑयल ट्राइंग टू होल्ड बट लुक्स लाइक यहाँ पर भी होल्ड नहीं कर रहा है. natural gas looks like sideways now. Crude oil भी support पर sideways चला गया most probably. कैंडल का ध्यान रखना क्रूड ऑयल फिर से ओपन इक्वल टू हाई कैंडल बनी है 15 मिनट टाइम फ्रेम पर करंट कैंडल इज ओपन इक्वल टू हाई ऑलमोस्ट 1.5 घंटे से यहीं पर रुका हुआ है प्राइस ऑलरेडी 13% डाउन 7,700 कुछ दिनों पहले 10,500 के आसपास चल रहा था 10,700 ठीक है 4 मिनट रह गए हैं क्रूड ऑयल में. लेट्स सी कैंडल कहाँ क्लोज होती है. रिमेंबर कैंडल ओपन इक्वल टू हाई है 15 मिनट की. 7760 ओपन 7760 हाई. ओपन इक्वल टू हाई पे डायरेक्टली एंट्री नहीं होती, ध्यान रखियो. कैंडल मस्ट क्लोज अबव द लेवल. कि क्रूड ऑयल ऑलमोस्ट रुक ही नहीं रहा है, बिल्कुल कंटिन्यूसली फॉल। ऑलमोस्ट 15% डाउन है इंट्राडे में, फोर्थ लोअर सर्किट। देखते हैं क्रूड ऑयल अब क्या करता है, साइडवेज जाता है या फिर मूव करता भी है या नहीं।
We're back in here.
Human judgment, expertise, experience that matters, and you want to make sure that you're not completely automating stuff at the risk of losing that.
All right, well said, Ranjitha. Thank you so much for joining us today. Ranjitha Kumar is chief scientist over at User Testing. Their ticker is USER. Thank you. All right, we're looking at markets heading into the weekend on a big tailwind. In fact, the S&P 500 has now gained every single day this week and is on course to close out its third straight week of gains with gains of at least 3%. So
while at an all-time high. So that's,
yes.
Yeah, it's amazing that while setting all-time highs, still moving higher by 3% each week.
And the NASDAQ 100, for those keeping score, now higher for a 13th straight day as well. Also a record high. Get the latest news whenever you want it with Bloomberg News Now. Top stories from a global team of reporters available at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. We're ending the week with gains in equities and losses in oil. The S&P 500 at a record high, the NASDAQ 100 at a record high, WTI and Brent, both global benchmarks, and the U.S. benchmark losing about 11 to 13% in their prices.